Everyone, good evening to all of you. आज है 10th of January 2025. वेलकम once again to this live analysis. एक बार एनालिसिस कर लेते हैं मार्केट का फटाफट से. क्रूड ऑयल को देखोगे सुपर बुलिश मूड में है. कल अपने रेजिस्टेंस जोन पे था, थोड़ी बहुत सेलिंग आने की कोशिश करी थी, काफ़ी देर रुका. मार्केट आज उसी लेवल पे ओपन हुआ था, ब्रेकआउट किया, रीटेस्ट करके चला गया था. बाकी एक कल वाला परसों वाला रेजिस्टेंस एरिया था, वहां पर भी कैंडल ओपन इक्वल टू लो बना दी इसने, ये देख पा रहे होगे. एंड उसके बाद तो रुक ही नहीं रहा है. ऊपर अभी कोई और लेवल है नहीं, क्योंकि ऊपर कोई लेवल देख नहीं रहे हैं 15 मिनट में, तो फिर अभी अवॉइड किया हुआ है. पिवट का यूज़ करेंगे या फिर फॉरेक्स का चार्ट यूज़ करेंगे. बुलिश ही है, नीचे आता है तो रीटेस्ट और सपोर्ट जोन है, वहाँ वापस बाइंग का प्लान रखेंगे, नहीं तो. एंड नेचुरल गैस भी सेम ही था. मॉर्निंग पे अपने कल के रेजिस्टेंस एरिया पे ओपन हुआ था, ब्रेकआउट कल हो गया था, वहीं पर सपोर्ट लिया. ऊपर कल का जो फाइनल रेजिस्टेंस एरिया था 340 वाला, वहां से एक सेलिंग एक्सपेक्टेड है. अगर आता है तो वहां से एक सेलिंग प्लान करेंगे. नीचे आता है तो फिर 317 के अराउंड एक सपोर्ट है, वहां से वापस बाइंग कर सकते हैं. करंट एरिया पे भी एक सपोर्ट बना था, थोड़ी बहुत बाइंग आई, लग रहा था कि डायरेक्टली चला जाएगा, बट वापस रिटर्न कर गया है. कोई फिर से बाई कर रहा है तो थोड़ा संभल के क्वांटिटी कम रखना. हो सकता है वापस एक बार 317 तक आने की कोशिश करे, तो 317 के अराउंड एक अच्छा सपोर्ट है. और ऊपर आपका 341 के आसपास एक रेजिस्टेंस अच्छा है. यहाँ पर अगर ब्रेकडाउन रीटेस्ट हुआ तो एक सेलिंग का ट्रेड ही बनेगा, बाकी बाइंग अभी चल ही रही है. लेट्स सी यहीं से डायरेक्टली ऊपर जाता है या फिर नीचे आता है. डेटा न्यूयॉर्क सेशन 6:30 पे ओपन, यूएस मार्केट 8 PM पे ओपन. एंड 7 PM पे और 8:30 पे डेटा है. गोल्ड और सिल्वर को इम्पैक्ट करेगा. जिन लोगों ने लाइक नहीं किया है, लाइक कर दो फटाफट से एक बार. डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल. देखना पड़ेगा क्या न्यूज आई है क्रूड ऑयल में. कंटिन्यूअसली बुलिश हो चुका है कंप्लीटली.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with new developments on the deadly wildfires still burning in the Los Angeles area. Bloomberg's John Tucker joins us with the very latest. John.
And good morning, Nathan. The Los Angeles County Medical Examiner overnight confirmed 10 people have now died in the fires. This resident of Pacific Palisades echoed the harsh reality.
Pacific Palisades right now could just be taken off the map. There is no Pacific Palisades.
And finally, a measure of good news. The Pacific Palisades fire showing early signs of control. The Eaton fire, which is bearing down on Pasadena, has slowed its spread, and a smaller blaze in the Hollywood Hills was quickly encircled. But with that came news of a new blaze in the far west section of the city. LA Mayor Karen Bass.
We are expecting this fire to rapidly spread due to high winds.
Well, President-elect Trump couldn't resist the urge to weigh in, taking aim at the governor and the mayor.
I think that Gavin is largely incompetent, and I think the mayor is largely incompetent, and probably both of them are just stone cold incompetent. What they've done is terrible.
The fires have scorched more than 30,000 acres. They've razed homes and businesses and forced about 180,000 residents to flee. The economic losses have been estimated at up to $150 billion, which would rank among the costliest natural disasters in modern U.S. history. I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Another story we're following this morning. In just hours from now, President-elect Donald Trump will be sentenced for his conviction in the New York hush money criminal case. This comes after the Supreme Court refused to interfere. Bloomberg law anchor June Grasso says Trump will not be sentenced to any time behind bars.
Judge Merchan, and a lot of people, when he first came out and said, I'm not going to give him any sentence, said, well, what's the point of the sentencing then? Well, the point is that now Trump couldn't say that, oh, the judge may sentence me to time, or the judge may sentence me to probation, or who knows what, because the judge had said, I'm not going to sentence you to anything. I'm going to give you what's called an unconditional discharge. And basically what this is a symbolic sentencing so that Trump is now, yes, a convicted felon, and that felony is on the books in New York.
Bloomberg law host June Grasso says Trump can still appeal the verdict in New York state courts, and the case could ultimately return to the U.S. Supreme Court for final resolution.
Well, Karen, Attorney General Merrick Garland is racing to release Special Counsel Jack Smith's report on Trump's effort to overturn the 2020 election, but a federal appeals court has put that in limbo. The court rejected requests from Trump and his former co-defendants to stop the report from becoming public, but the court also ruled if the Justice Department wants it released sooner, it has to challenge a lower court ruling that delayed the release by another 3 days. DOJ lawyers filed that challenge hours after the appeals court ruling. Trump's associates could also appeal this or ask the Supreme Court to step in.
Well, Nathan, it's now just 10 days until Donald Trump takes the oath of office for a second time, and he's promised a flurry of actions on day one. And now we're getting the details on what he's got planned. We get the story with Bloomberg's Jeff Bellinger.
Trump is planning executive orders on immigration, energy, federal workers, and regulatory reform in his first few hours in office. Bloomberg News has learned the immigration orders include tighter restrictions on border crossings, a mandate to finish unbuilt portions of the border wall, a framework for carrying out mass deportations, and an order to withhold federal resources from sanctuary cities. The president-elect is also planning a federal hiring freeze and a return-to-office mandate for federal workers, and on energy, Trump is expected to authorize drilling on federal lands. Jeff Bellinger, Bloomberg Radio.
Thank you, Jeff. President-elect Trump also says he's planning to meet with Russian President Vladimir Putin after he takes office. At a meeting with the Republican governors at Mar-a-Lago, Trump told a reporter the Russian leader wants to meet, and they're setting it up. We get more from Bloomberg's John Herskowitz.
Trump said that if a meeting were to come, it would come after the inauguration. There's no set date, no set time, just this announcement that he's looking to have the meeting.
And Bloomberg's John Herskowitz reports the Kremlin also says there are no specifics on a meeting, but Putin has repeatedly stated he is open to talking with Trump.
Well, we turn to the markets now, Nathan, and Wall Street gets back to work with a huge economic report on the agenda. We get the December jobs report later this morning, and we get a preview with Bloomberg's Michael McKee.
The number of jobs created in December will be a surprise for someone. The range of forecasts is unusually wide, from 120,000 to 268,000, reflecting differing views of the state of the labor market. Something near the low end would be the only thing to bother Fed officials, however. Minutes of their last meeting, released this week, made it clear they feel labor markets remain in good shape. The unemployment rate matters more to the central bankers. Any big rise could be seen as a reason to reconsider the suggestion they will pause rate cuts this month. Michael McKee, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. A thrilling Orange Bowl game in Miami to decide who would play for the national championship. Penn State had the early 10-0 lead. Back came Notre Dame with touchdown drives in the second half of 75 and 71 yards. But Nicholas Singleton with 2 Penn State touchdowns in a 2.5-minute span of the fourth quarter. The Nittany Lions had the lead. The Irish scored on a 54-yard touchdown, then kicked a field goal with 7 seconds left. They won 27-24. That NFL playoff game between the Rams and Vikings will not be played in L.A. It'll be in Phoenix. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager.
And the U.S. Supreme Court hears arguments on Congress's TikTok ban.
Elon Musk shifts his political interest to Germany's far-right AfD party.
And the future of corporate diversity, equity, and inclusion initiatives.
It's Friday, January 10th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday.
I'm Christopher Waljasper in Chicago.
And I'm David Spencer in London.
When you hear LSEG data and analytics, what do you think of? Comprehensive data you can trust, exclusive access to Reuters News, industry-leading analytics and unique insights. Discover new possibilities with LSEG data and analytics.
Donald Trump is scheduled to be sentenced today for his conviction on criminal charges in his hush money case. The US Supreme Court rejected his last-minute request to halt it just days ahead of his inauguration.
The state funeral of U.S. President Jimmy Carter, who died last month at the age of 100. President Joe Biden gave the eulogy for the 39th president.
Jimmy Carter's friendship taught me, and through his life taught me, the strength of character is more than title or the power we hold.
Biden was among 5 living presidents who attended the funeral. President George W. Bush, Bill Clinton, Barack Obama, and Donald Trump were all in attendance, seated next to one another. Carter's remains have been flown to his hometown of Plains, Georgia, where he'll be buried next to his wife.
The brief detention of Venezuelan opposition leader Maria Corina Machado has been condemned by world leaders. She was held for an hour after appearing in public for the first time in months, a day before President Nicolas Maduro's inauguration for a third term. The government says the opposition fabricated her arrest. At least 10 people are now known to have died in the Los Angeles wildfires, with nearly 10,000 structures destroyed. 5 fires were burning into a third night on Thursday as dry desert winds again gathered strength. Nearly 180,000 people have been ordered to evacuate their homes. For the latest on the wildfires, follow updates on the Reuters app or website, and listen out for our weekend episode looking at the key issues that have been highlighted by these wildfires and what California might need to do to prevent future devastation on this scale. That pod drops on Saturday. Global shares have been under pressure as investors count down to the US jobs report today, on the lookout for numbers which could exacerbate or ease the sell-off in the global bond market. Both Nasdaq futures and S&P 500 futures were down 0.3% as Wall Street was shuttered overnight to mark the funeral of Jimmy Carter.
The U.S. Supreme Court hears arguments today in a case that pits free speech against national security. The U.S. ban on TikTok is set to go into effect on January 19th, threatening the accounts of 170 million American users, pending a ruling from the highest court. David Shepardson is covering the case in D.C. David, what should we expect from the court today?
So it's not like a typical case where you can easily sort of predict along ideological lines where the court might end up. But it's clear that ByteDance and TikTok are putting the entire focus, and is what the court wants them to look at, is the First Amendment issue. And they're going to really press this argument that Congress was motivated not by data, because they argue there's other Chinese apps that collect lots of data. They're going to argue that this really is about the content of videos that have been on TikTok and their response by Congress, not about the national security grounds. But there are 2 fundamental views in opposition to one another here. The conservatives in the Supreme Court have been generally pretty strong on defending the First Amendment rights of Americans in terms of free speech across a wide variety of cases, versus national security. And the court and the conservatives have shown a lot of deference to the government when they invoke national security grounds.
So political support isn't really falling along neat political party lines here.
No, absolutely not. In fact, you have a lot of conservative attorney generals and others who really say this is just a risk that the United States can't tolerate. On the other hand, President-elect Trump talked during the campaign about saving TikTok and trying to appeal to younger voters. And so I think he very much wants to find a way to keep TikTok afloat. And just given sort of the weird sort of timing by happenstance that this goes into effect one day before this change of administration sort of makes the whole legal case much more dramatic.
In the last few months, Germany's far-right Alternative for Germany Party, or AfD, has caught the attention of Elon Musk, thanks in part to a 24-year-old German social media influencer named Naomi Zeibt. Musk's interest in the AfD has grown to full endorsement as he took to X yesterday to interview Alice Weidel.
Okay, so ये जो क्रूड ऑयल का रेजिस्टेंस बनाया है ये 15 मिनट में नहीं है, 30 मिनट में है. ध्यान रखना है 15 मिनट में इसमें लेवल ही शो नहीं हो रहे हैं. 30 मिनट में लेवल बने हुए हैं तो मैं वो ड्रॉ कर दे रहा हूँ. नहीं तो फॉरेक्स का चार्ट यूज़ कर सकते हो. 15 मिनट में कोई लेवल शो नहीं कर रहा है. 30 मिनट में एक रेजिस्टेंस जोन है, एक्सपेक्ट करेंगे वहाँ से सेलिंग आ जाए. बाकी नेचुरल गैस में लोगों ने बाई कर रखा है, थोड़ा संभल के दो बार सपोर्ट ले चुका है. अब ब्रेक डाउन हुआ तो वापस नीचे आ जाएगा 317 के आसपास, वहाँ बाई करेंगे. नहीं तो फिर ऊपर जाता है तो ऊपर रेजिस्टेंस है ही जो कल वाला, वहाँ से एक्सपेक्ट है फिर सेलिंग के लिए. लास्ट ट्रेडिंग सेशन है वीक का, थोड़ा क्वांटिटी का ध्यान रखना. भी करते रहो गाइस. डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. फॉरेक्स का चार्ट भी यूज कर सकते हो अगर 15 मिनट में चाहिए. नहीं तो ये 30 मिनट का रेजिस्टेंस बना रखा है मैंने. दिस इज 30 मिनट रेजिस्टेंस. रेजिस्टेंस पे पहुंचने वाला है. यहाँ से थोड़ा सा सेलिंग का प्लान है क्रूड में. बाकी देखो ये वैसे तो बुलिश ही चल रहा है कम्प्लीटली, बट और कोई है नहीं लेवल, तो दैट इज़ द ओनली लेवल. 30 मिनट टाइम फ्रेम पे थोड़ा देखते हैं सेलिंग आती है तो. क्वांटिटी थोड़ी कम रख लेना. आई डोंट नो किस न्यूज़ की वजह से इतना बुलिश हो रखा है प्राइस. ऑयल सर्ज ऑन सप्लाई रिस्क अमाइड प्रोस्पेक्ट ऑफ टाइटर सैंक्शंस. मार्केट टॉक. कोई ना कोई तो बहाना चाहिए मार्केट को. ओके ग्रेट. ठीक है, 15 मिनट का लेवल नहीं है, 30 मिनट का है, सेलिंग प्लान है यहाँ से एक। बाकी नीचे कहाँ तक आ सकता है एक बार देख लेते हैं। एक रीटेस्ट तो कल वाला ही है, रेजिस्टेंस था जो उसका रीटेस्ट, बट बीच में भी कोई ना कोई लेवल 15 मिनट में होंगे, हमारे पास है नहीं, तो वी कैन यूज़ ओनली 30 मिनट टाइम फ्रेम। उसके अकॉर्डिंग अगर कोई प्रीवियस रेजिस्टेंस रहा होगा, इट एक्ट लाइक एज अ सपोर्ट। लोग लाइक करते रहें गाइस, लाइक करते रहो, 100 लाइक्स का टारगेट है, 20 लाइक्स का नहीं। रीटेस्ट और गो अप, रीटेस्ट और गो अप करना चाहिए। रीटेस्ट देखो, अभी तो न्यूज़ की वजह से मार्केट जा रहा है ऊपर, आज नहीं तो कल आएगा जरूर रीटेस्ट करना है। ये ऊपर रेजिस्टेंस 30 मिनट का है, ये 15 मिनट का नहीं है, ध्यान रखना। 15 मिनट में चार्ट नहीं शो कर रहा है उतने पीछे प्रीवियसली, तो 30 मिनट में दिख रहा है लेटेस्ट टाइम पीरियड 15 मिनट के बाद, तो वही ड्रॉ किया हुआ है। बाकी देखते हैं नीचे कितना, डायरेक्टली तो नहीं गिरना चाहिए खैर, बीच में और भी कोई सपोर्ट रेजिस्टेंस रहे होंगे दैट एक्ट लाइक एज अ सपोर्ट। ठीक है, मुझे भी एक्सपेक्ट नहीं था इतना चला जाएगा डायरेक्टली। मॉर्निंग पे कल वो जो रेजिस्टेंस था वहां पर काफ़ी देर रुका था, आज मार्केट वहीं पर ओपन हुआ, ब्रेकआउट रीटेस्ट किया, तो वहां से एक बाइंग एक्सपेक्टेड थी, यहीं तक टारगेट था। बट यहाँ पर जो इसने कैंडल ना रेजिस्टेंस पे देखोगे एग्जैक्टली ओपन इक्वल टू लो कैंडल बना दी, मुझे तब लग गया था कोई ना कोई गड़बड़ है इसमें, पक्का कुछ ना कुछ होने वाला है, क्योंकि ये रेजिस्टेंस भी ठीक ही था। फिर जो ब्रेकआउट हुआ, रीटेस्ट भी नहीं किया प्राइस ने। बाकी देखते हैं, इस पे भी रुकता ही नहीं रुकता है, 30 मिनट टाइम फ्रेम का चार्ट है। और अ सिंगल रेड कैंडल लोअर एंड से। ठीक है, देखो नीचे आता है प्राइस तो 15 मिनट टाइम फ्रेम के अकॉर्डिंग 6514 के आसपास एक टारगेट एक्सपेक्ट करेंगे, और कोई लेवल तो दिख नहीं रहा है। सिक्स 626 अपर सर्किट है, 6626 अपर सर्किट है। अपर सर्किट नहीं तो 6626 अपर सर्किट कैसे हो सकता है? अपर सर्किट, पहला अपर सर्किट लगता है 6% अप होने पर। अभी मार्केट 3.48% ही अप है। अपर सर्किट लगने के लिए इसको 6% तक जाना पड़ेगा, मतलब ऑलमोस्ट अभी 2.5% और ऊपर जाएगा तब लगेगा अपर सर्किट। 2.5% तो बहुत ऊपर हो जाएगा, लगभग 6700 के भी ऊपर। पहला अपर सर्किट 6% पे ही लगता है हमेशा, क्रूड ऑयल और नेचुरल गैस में। वो आपके ब्रोकर में दिखा रहा होगा, वो सही नहीं है। फर्स्ट अपर सर्किट नेचुरल गैस और क्रूड ऑयल में 6% पे लगता है, उसके बाद 4% के बाद अपर या लोअर सर्किट। ब्रोकर में लिखा होता है बट अपर सर्किट नहीं है। रेजिस्टेंस से सेलिंग प्लान कर सकते हो 30 मिनट टाइम फ्रेम के अकॉर्डिंग क्रूड ऑयल में, ठीक है। नीचे टारगेट 6514 के अराउंड एक्सपेक्टेड है। 15 मिनट में कोई लेवल नहीं दिख रहा है, इसलिए 30 मिनट में बनाया है लेवल, ध्यान रखना। ये 15 मिनट का कोई सपोर्ट रेजिस्टेंस नहीं है, 30 मिनट का है। अरे एक ही चीज ड्रॉ करो ना। एक ही चीज ड्रॉ करते हैं। गैस भी अटक गया ना, नीचे जा रहा है ना ऊपर। देखो नेचुरल गैस भी मैंने बता दिया, दो पॉसिबिलिटी है। ऊपर ये परसों वाला रेजिस्टेंस कल भी था 340 338। यहाँ पर एक रेजिस्टेंस अच्छा है, यहाँ से एक सेलिंग प्लान कर सकते हैं। मार्केट बुलिश ही लग रहा है अभी फिलहाल के लिए। यहाँ पर दो ऑप्शन है, या तो मार्केट सीधा चला जाए या फिर एक बार और आ जाए नीचे वापस सपोर्ट लेने। तो उस केस में अगर ये अब नहीं गया, क्योंकि यहाँ पर एक बार मोमेंटम कर चुका है, दूसरी बार कर चुका है, चला जाना चाहिए। नहीं करता है तो फिर ब्रेकडाउन रिटेस्ट पे एक सेलिंग एक्सपेक्ट कर सकते हैं। यहाँ पर 317 वहाँ से वापस बाइंग आनी चाहिए। फिर सीधा गया तो बेटर रहेगा, फिर सेलिंग थोड़ी बड़ी एक्सपेक्ट एक साथ ही आ जाएगी। बाकी अगर ये नहीं गया आपकी बार ऊपर, तो फिर ब्रेकडाउन समझो इसका नेचुरल गैस का बिलो 329 327। कोई लेवल रिस्पेक्ट नहीं किया क्रूड ऑयल ने। एक ही लेवल तो रिस्पेक्ट नहीं किया, वहां पर भी इसने साइन दे दिया था ऑलरेडी। मॉर्निंग पे कल का रेजिस्टेंस एरिया था जहां पर एक सेलिंग का ट्रेड बनाया था, वहीं पर रुका था मार्केट, वहीं पर ओपन हुआ आज भी। उसके बाद कैंडल ओपन इक्वल टू लो बनी, ब्रेकआउट कर दिया, रीटेस्ट करके निकल गया। ये परसों वाला रेजिस्टेंस था, यहाँ पर फिर से ओपन इक्वल टू लो कैंडल बनाई, सीधा ही चला गया। फिर ऊपर कोई रेजिस्टेंस थे भी नहीं 15 मिनट टाइम फ्रेम पे। किसी और टाइम फ्रेम पे होंगे तो मैं कह नहीं सकता। देखते हैं आता है 6516 तक। भी आई थिंक वो अपने कल के एफईजी के ऊपर निकलने की कोशिश कर रहा है शायद। ऊपर रेजिस्टेंस है, ध्यान रखना, कल जो बताया था। निकला नहीं है ना अभी भी, हाँ अभी भी नहीं निकला है। ये कल वाला ही एफईजी पर ही रुका हुआ है। अगर ये निकलता है ना ऊपर, रेजिस्टेंस अच्छा है 30.70 के अराउंड, वहाँ से एक सेलिंग प्लान करेंगे। बाकी ये एफईजी पर ही रुका हुआ है कल से। गोल्ड को देखोगे, गोल्ड भी अपने रेजिस्टेंस एरिया पर ही है एग्जैक्टली कल वाला। कल थोड़ा सा लोअर एंड से सेलिंग आ गई थी, फिर नीचे से बाइंग आई, वापस रेजिस्टेंस एरिया पे ही रुका है। सिल्वर भी एग्जैक्टली ऊपर आ जाता तो बढ़िया रहता। डेटा है, डेटा का ध्यान रखना। कल की लेवल है, बाकी गोल्ड और सिल्वर में कुछ चेंज नहीं हुआ है खास। तो ले लिया ऑलरेडी सपोर्ट। बोला वॉचिंग लाइक करो गाइस, सब्सक्राइब भी कर लेना, लाइक के साथ साथ सब्सक्राइब भी करना होता है। ठीक है, यूएस मार्केट ओपन है। बाकी 1 फरवरी को जो एनएससी का सर्कुलर आया था, एमसीएक्स ने भी निकाल दिया सर्कुलर। सैटरडे है उस दिन, 1 फरवरी को, बट बजट आ रहा है तो उस दिन मार्केट ओपन है पूरा। सैटरडे को भी नॉर्मली सैटरडे को बंद होता है ना मार्केट, बट ओपन है। एंड इक्विटी तो मार्केट पूरा ही ओपन रहेगा सुबह 9 से 3:30 बजे तक, 9:15 टू 3:30। जो कॉमोडिटी मार्केट है, कॉमोडिटी मार्केट भी ओपन रहेगा। मॉर्निंग सेशन 8:45 से 8:59, एंड उसके बाद ट्रेडिंग सेशन जो स्टार्ट होगा वो 9 बजे से शाम के 5 बजे तक रहेगा। ठीक है, इवनिंग सेशन क्लोज रहेगा लेकिन मॉर्निंग सेशन ओपन है सैटरडे को भी, 1 फरवरी। उस दिन बजट आएगा इंडिया का। सर्कुलर आ चुका है।
Is TikTok ban?
Elon Musk shifts his political interest to Germany's far-right AfD party.
And the future of corporate diversity, equity, and inclusion initiatives.
It's Friday, January 10th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday.
I'm Christopher Walljasper in Chicago.
And I'm David Spencer in London.
When you hear LSEG data and analytics, what do you think of? Comprehensive data you can trust, exclusive access to Reuters News, industry-leading analytics and unique insights. Discover new possibilities with LSEG data and analytics.
Donald Trump is scheduled to be sentenced today for his conviction on criminal charges in his hush money case. The US Supreme Court rejected his last-minute request to halt it just days ahead of his inauguration.
The state funeral of U.S. President Jimmy Carter, who died last month at the age of 100. President Joe Biden gave the eulogy for the 39th president.
Jimmy Carter's friendship taught me, and through his life taught me, the strength of character is more than title or the power we hold.
Biden was among 5 living presidents who attended the funeral. President George W. Bush, Bill Clinton, Barack Obama, and Donald Trump were all in attendance, seated next to one another. Carter's remains have been flown to his hometown of Plains, Georgia, where he'll be buried next to his wife.
The brief detention of Venezuelan opposition leader Maria Corina Machado has been condemned by world leaders. She was held for an hour after appearing in public for the first time in months, a day before President Nicolas Maduro's inauguration for a 3rd term. The government says the opposition fabricated her arrest. At least 10 people are now known to have died in the Los Angeles wildfires, with nearly 10,000 structures destroyed. 5 fires were burning into a 3rd night on Thursday as dry desert winds again gathered strength. Nearly 180,000 people have been ordered to evacuate their homes. For the latest on the wildfires, follow updates on the Reuters app or website, and listen out for our weekend episode looking at the key issues that have been highlighted by these wildfires and what California might need to do to prevent future devastation on this scale. That pod drops on Saturday. Global shares have been under pressure as investors count down to the US jobs report today, on the lookout for numbers which could exacerbate or ease the sell-off in the global bond market. Both Nasdaq futures and S&P 500 futures were down 0.3% as Wall Street was shuttered overnight to mark the funeral of Jimmy Carter.
The U.S. Supreme Court hears arguments today in a case that pits free speech against national security. The U.S. ban on TikTok is set to go into effect on January 19th, threatening the accounts of 170 million American users, pending a ruling from the highest court. David Shepardson is covering the case in D.C. David, what should we expect from the court today?
So it's not like a typical case where you can easily sort of predict along ideological lines where the court might end up, but it's clear that ByteDance and TikTok are putting the entire focus, and is what the court wants them to look at, is the First Amendment issue. And they're going to really press this argument that Congress was motivated not by data, because they argue there's other Chinese apps that collect lots of data. They're going to argue that this really is about the content of videos that have been on TikTok and their response by Congress, not about the national security grounds. But there are 2 fundamental views in opposition to one another here. The conservatives in the Supreme Court have been generally pretty strong on defending the First Amendment rights of Americans in terms of free speech across a wide variety of cases versus national security. And the court and the conservatives have shown a lot of deference to the government when they invoke national security grounds.
So political support isn't really falling along neat political party lines here.
No, absolutely not. In fact, you have a lot of conservative attorney generals and others who really say this is just a risk that the United States can't tolerate. On the other hand, President-elect Trump talked during the campaign about saving TikTok and trying to appeal to younger voters. And so I think he very much wants to find a way to keep TikTok afloat. And just given sort of the weird sort of timing by happenstance that this goes into effect one day before this change of administration, sort of makes the whole legal case much more dramatic.
In the last few months, Germany's far-right Alternative for Germany Party, or AfD, has caught the attention of Elon Musk, thanks in part to a 24-year-old German social media influencer named Naomi Zeipt. Musk's interest in the AfD has grown to full endorsement as he took to X yesterday to interview Alice Weidel, the co-leader of AfD and its pick for Chancellor in February's elections. Our senior correspondent in Berlin, Thomas Eskrit, was watching. So there have been a lot of concerns that Musk's support for the AfD and other far-right parties across Europe could amount to election interference. So this conversation was being monitored for the possibility of misinformation and even hate speech. What's behind those concerns?
The fundamental concern, I think, is that he has the ability to bring enormous sums of money to European politics. European politics is very different from US politics. Spending is much more tightly regulated. I think one concern is simply that as a very rich, powerful man who controls a social media platform, he is very well placed to put his thumb on the scales in the elections which are coming up in Germany on February the 23rd. So officials in Brussels are carefully monitoring how the conversation went. Musk introduced Weidel by saying that she was the leading candidate to Germany's next leader, which of course is very unlikely to be true. For one thing, her party is second in the polls, and all the other parties in the German parliament have said that they won't work with the AfD, which means she won't be able to build a coalition. But it was enormous exposure for someone who is actually not particularly well known outside Germany.
Has Musk responded to claims that he's trying to somehow influence these elections?
He has said that he is a free speech absolutist and that he is entitled to make his views known. And he says that there is nothing underhand or dishonest about his expression of opinions, including on European politics. He also says that he has a legitimate interest in European politics. He, of course, does have investments here. He has a very large Tesla factory outside Berlin. The AfD has declined to comment on what contacts they have with Musk. When asked, they have admitted that Weidel's office was in contact with Musk's office to set up this discussion, but nothing beyond that so far.
Over the past year, a conservative backlash against wokeness has sapped corporate enthusiasm for diversity, equity, and inclusion, also known as DEI. Reuters interviews with corporate directors and advisors, as well as a recent study, paint a stark picture of how pronounced its fallout has been. Isla Binney covers corporate governance and chatted with Chris about these issues.
So what we're seeing in corporate boardrooms is that diverse people broadly have more seats at the table than they did in 2020. But in the past year, among those new directors getting seats at those tables, the proportion of black people in particular is significantly lower than it was in the previous 2 years.
And from those you spoke to, what might be behind this drop? Is there a cultural shift around DEI initiatives?
There is a sense that this is not an issue that has gone away, and there is still interest among corporations in ensuring diversity at the highest levels. However, whereas in recent years, especially following 2020 and a real spurring of the Black Lives Matter movement around national outrage around the killing of George Floyd, that the priorities have somewhat shifted. So whereas diversity may have been in the top 2 criteria for a company seeking a new board member around that time, that now there is less emphasis.
What is the case for diversity in boardrooms?
One argument that comes up quite frequently is that if you are expecting any executive to be challenged by their board, that perhaps if they are similar to each other and they think similarly, or indeed if they even knew each other and they were within each other's networks perhaps before, that there is less chance that there would be the necessary challenge to ensure that correct and good practices are being followed.
To stay ahead in fast-moving markets, you need to transform quality data into tailored, practical, and valuable intelligence. Access your choice of pre-built and market-validated models fast, and choose AI-powered analytics tools to suit your specific business needs. Experience distinct advantages with innovation, differentiated analytics, actionable insights. Discover new possibilities with LSEG Data and Analytics.
And for today's recommended read, a look at the life and work of Jimmy Carter, a link to the story, and a set of images from Thursday's state funeral is in the pod description.
Some policy on that front too.
So basically on January 20th,
Reuters.com.
expect a rally in currencies around the world and a decline in the dollar. And then on January 22nd, when they actually do come out, you can reverse all of that.
AMH, appreciate your time. Anne-Marie down in Washington. I'm not sure if it's going to be that simple, but we'll see. Mira Pandit at JP Morgan Asset Management can try and make sense of it all. Mira, good morning and Happy New Year.
Happy New Year.
It's good to see you. Let's talk about your underlying assumptions for policy changes in the months to come from this administration, the way you're thinking about emphasis and sequencing through the next year.
There's three key areas here when we think about taxes, tariffs, and immigration. So you hear a couple of the headlines of what's coming first. I think we'll see a lot of that coming through in the first 100 days. But the sequencing still is important in terms of what gets enacted when. So you could see tariffs come to the fore right away. The implication of that from an economic perspective is really on inflation. And you could potentially just see a one-time pass-through that lifts inflation in 2025, but remains to be seen exactly how that might play out. If you think about immigration, similar impact there if we see immigration reform, tighter labor supply, potentially tighter on the labor markets there, and potentially inflationary there as well. Tax is the key question here because even if you do see big tax reform, there's two big questions. One, if it is mostly an extension of the Tax Cuts and Jobs Act, that's not necessarily going to have a huge impact to growth coming forward. And two, if you don't see that come through until 2026, then you have a little bit of a timing issue where you see some of the more inflationary policies come first and some of the more pro-growth policies come second, which wasn't the case during the first administration when you saw that nice impact to earnings from tax cuts at the same time as you also saw that drip feed of tariffs. Does that mean that you think that there's going to be the same or a similar amount of policy-driven volatility this year as we saw, say, in 2018? It's very likely. We're likely to see many pockets of volatility brought on by this drip feed of tariff news as we're likely to get. And if we use 2018 as a guide, throughout the year you did see that drip feed in terms of policy in the tariff realm, but you did have an underpinning of those tax cuts that did help boost earnings about 20% that year. But we expect that politics will be unpredictable. We don't expect that the Fed is going to be unpredictable. Their job is to be predictable. So the challenge we saw in 2018 was that despite all of the hiccups you saw throughout the year in terms of tariffs and what will and won't happen and what did happen, ultimately the biggest pullbacks from 2018 were really Fed-driven when people were worried about an aggressive Fed. So are you saying that essentially this is a market that continued to climb higher, that can continue to broaden out, and I'm talking about equities in particular, unless, as you write, monetary policy becomes the unwelcome dark horse? As long as monetary policy is on some sort of steady path, you think that the risk assets, risk markets can really look through some of the fiscal policy volatility? Even in the absence of a tax cut this year, any tax cuts in addition to the extension of the Tax Cuts and Jobs Act, even if that takes place in 2026, we're still expecting very strong earnings growth. So there's a very strong fundamental backdrop in terms of growth, already an above trend level. We have a nice buffer there for things to moderate a bit. Profit growth expected to be 15%. Even if we get 2/3 of that, we're still looking at double digits from the earnings side of the house. So ultimately, I do think that policy is going to continue to cause some volatility, but we don't want a big surprise from the Fed. I think policy can potentially be, on the government side, a source of volatility, whereas the Fed could potentially be a source of correction. And there is a lot of uncertainty exactly about what the Fed might have to do next year. I mean, the Fed has an unenviable challenge of fighting last year's inflation with today's data and the specter of tomorrow's inflationary pressures from policies that they don't exactly know are going to pan out.
Mira, we spend a lot of time on the what of the policy side. Can you tell us a little bit about the how? In particular, do you think that someone in Washington is bringing together all these various elements and solving a general equilibrium model of some sort to see what the effects of all these measures would be?
Ultimately, the challenge is, even if you do have a centralized strategic initiative towards all of this, when it comes down to legislating, and when you think about Congress, there are so many competing interests because of everyone's different constituencies and what different people want. So that's how you end up with things that seem like a bit of a Frankenstein, and this is true in any administration, any legislation, because you're trying to please a number of parties. And the other challenge that we're dealing with, of course, is very slim margins and very slim majorities in Congress that are going to make some of that negotiation quite fraught.
And yet, I completely agree, okay, we hear quite strong prediction as opposed to embrace volatility. That's going to be the theme. On the price pass-through, we all say It's a one-time price pass-through. But that assumed companies don't learn. And companies were shocked in 2022, the whole cost, inflation surge, etc. And there have been changes in how they think about adjusting prices. So are you really confident this is a one pass price through and that's it?
There's no confidence when it comes to thinking exactly about how these policies are going to even be enacted, let alone play out. So all of this is taken with a grain of salt because, of course, it is highly speculative as to exactly what's going to happen here. But I will say when we think about companies versus consumers, consumers have very little appetite to take on higher costs. And we saw that in the exit polls of the election, that prices were a big sticking point there. We're really going to have to look to companies to have to absorb some of this because, look, if you're in a backdrop of 15% potential earnings growth, of record margins or near there, great margin expansion last year, margins holding up last year as well, then the little bit there, you're looking for companies to shoulder some of that burden.
You look across the world, what happens to go right in the rest of the world for international markets to start working?
There is an upside for different international markets. I think about Europe, where growth is incredibly weak. But there is the possibility that you could see some fiscal stimulus in Europe. There is the possibility that when you think about financial conditions, very tight in Europe, not so much in the U.S., some loosening of that could help markets overseas. The ECB is, of course, going to lower rates and probably a lot more than the Fed and a lot faster. So the actual interest rate sensitivity, when you think about the European economy from the perspective of more bank lending than we see in the U.S., mortgages that are variable or fixed for a shorter period of time, you actually could see a nice tailwind to the economy in a way that it's harder to see sometimes in the U.S., given interest rate sensitivity. You could have a scenario where the administration does want to be very tough from a tariff perspective on China, but is actually willing to make deals with areas like Europe, Canada, Mexico. So if you have any area of trade policy that's tough on Chinese autos, for example, that would be a huge tailwind for Europe. Yeah. And then add in one more perspective. We have spent down an enormous amount of consumer savings in the U.S., and that's been great for our economy. Europe still hasn't. So there is some room for that, too, if you can drum up enough confidence.
Confidence there. Rock bottom at the moment.
Which is sort of the hope that maybe we are at rock bottom. And that's what we keep hearing, that maybe there'll be a washout. And this is the moment where suddenly the expectations are so low that any positive surprise, any consumer spending, what a great thing.
Mira, it's good to see you. Appreciate your time. Mira Pandit there of JP Morgan Asset Management. Over in Europe, I've been surprised how reluctant the ECB is to get very dovish. Like extremely dovish and come out and talk about how bad things actually are and how they need to respond.
How much space do they have to do that? They just saw upside surprises in inflation readings that we saw in Germany. We also see natural gas prices. This is one of the sticky inflation aspects that's really been a conundrum to a lot of different central banks.
And their single mandate central bank. Never forget their single mandate central bank.
If they weren't, I imagine they'd be doing something very different.
You know, in this point, I actually wonder if they're kind of glad that they're not. At a time where there isn't political leadership and they'd have to be charged with all sorts of political interference, maybe they can just say, we'll stick to the inflation.
Keep going back to the Federal Reserve, don't we, on that front?
I'm just saying, I think that they have a real quagmire right now in trying to figure out policy that could change the trajectory dramatically.
Don't you think a lot of it is of their own creation at the Federal Reserve? Don't you think the communication of Powell from one meeting to the next, to say to Mohammed's point, we don't assume, speculate or guess, and then turn around a month later and say some do?
It is the Fed's own creation that they took such power, I think, going back to 2008, even though they're not politically elected, and so it raises this extra question.
That conversation will continue on this program. Up next on the program, Matthew Palazzolo of Bloomberg Intelligence on the cost of rebuilding Los Angeles. That conversation is up next.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
January 20th. Live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage starting January 20th, only on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably
Bitcoin.
wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd be my feet in the sand and a beer in my hand.
Don't miss the next Open Interest.
The opening about 2 hours away. The jobs report 60 minutes away. And going into all of that, equity futures negative by 1/3 on the S&P. On the Nasdaq, we're down by 0.4, so just pulling back just a touch. We're 2 hours until that cash open. Let's get you some morning movers. Let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. The world is trying to grapple with what's happening in LA politically, and from a human point of view, the horrors are all there to see. But this is about the financial repercussions, and that's what we're beginning to put some numbers around. Travelers Inc. JP Morgan have doubled their estimate in terms of the actual cost of these wildfires to $20 billion. That is overnight. Now, there's a consequence to that because a number of stocks are impacted, Allstate, Chubb, and Travelers. Travelers is perhaps the most exposed. Primary insurers will bear the majority of the burden. This is a more significant and more severe impact than the Butte County Camp Fire in 2018. So this is, in some way, a financial translation of the horrors of the LA situation. To Nike, a vote of confidence in the new CEO. You've got Piper Sandler upgrading the stock to overweight. Elliott Hill's intensified urgency. Possibly early with their call is what they're saying, but healthy, profitable growth might not just be now. It'll be 4 quarters away, but it's a nice upgrade for them. Upgrade yourself. Apparently millennials do. This is for Delta. Overseas business, travel, both of those combined, nice rebound in the Delta numbers. They've also guided higher. This quarter they're going to make up to $1. The market had estimated around 76 cents, so 75 up to $1. Free cash flow, $4 billion in this first quarter, Jonathan. That's up 18%. And as I say, 85% of the seats that this company is going to put into their plane, they are premium seats. Millennials. I never afforded business class travel when I was a millennial.
Of course not, Manus Cranny. Of course not. I used to fly with Manus. I'd take a right, Manus took a left every single time. That's how it went. Manus, appreciate your time.
Wait,
cut the mic now. I can't respond.
Pause.
He can't respond.
No, pause. You, as a young lad.
As a young lad?
As a young lad.
Ryanair.
Yeah, you, wait.
Didn't allocate seating.
So hold on a
across
second.
the tarmac and try and get a seat and block the other seats for your family.
You were the person who actually sprung for the high end when you were like 23.
Absolutely not.
100%.
No way.
Yeah, you were like in the lounge.
Ryanair.
Sipping champagne.
London Stansted into Bari.
When did that change?
No seats when I got a job. No seats. Used to run across the tarmac. Used to try and block the seats for your family.
Yeah.
And how do you block the other seats? Is it a short?
They're taken. And then someone would say, they're not taken. Where are they? And I'd say, they're coming. And then, then the row would start. It was some violent stuff with Ryanair. They'd try and take your bag off you and say it was too big. They'd force you to put it through this metal thing to see if it was too big or not. I'm sure they still do that. Michael O'Leary's made the experience a little bit more pleasant, I have to say, over the last decade.
Those days are long gone. Now you're full-on lounge.
Yes, and I charge it to work, as I should, under surveillance this morning. Delta Airlines beating profit estimates in the fourth quarter, seeing gains in international and corporate travel. The airline expecting elevated demand through the year, as it also continues its push into premium products and services. services. The stock is up by close to 7% this morning. Phenomenal performance from that company over the last few years. Really a market leader in America in many ways.
And how much does this really point to an industry-wide standard that they all can charge more because there just have been fewer plane deliveries, which has lowered capacity. They're all trying to shift into premium because evidently millennials today don't want to do the Ryanair experience where they go to fisticuffs with other people about saving seats for people, which maybe isn't a terrible thing. But it just speaks to this idea also of international travel and how that has continued to be strong. And I wonder how much that has to do with the dollar.
There is an obvious bias around the table we should reveal. Delta, American, United. You know, we all have our own airlines here. Mohammed, can we make the shift to Delta? Does that work for you, or are you just staying with United?
I'm happy for Lisa to stay with United.
Ooh. Shots fired.
Yeah, no.
What's so special about United? What's Kirby done over there that makes you just so loyal to that airline? What's it about?
I think it's more about me than about United. I like predictability, and I know exactly what the seat's going to look like. I know exactly what service I'm going to get. I know exactly what food I'm going to get.
The street waffle.
No more street waffle.
No more street waffle. They killed that. When did they kill that?
About a couple of years ago.
I didn't know that. Why did they kill that?
I don't know, you should ask.
It's your favourite snack, all right. It's a conversation for another day. About a week for UK bond traders coming to a close, 10 and 30-year yields jumping more than 20 basis points. The important stuff, Bramo.
Evidently.
Over the last 5 sessions. The most in a year. The 10-year yield hitting its highest level since 2008, the 30-year since 1998. Investors concerned about Labour policy and an escalating government debt burden. Mohammed, we talked about this a few times already this morning. What do you think is the biggest difference now, between now and, say, 2022, and the so-called Liz Truss moment?
I think it's a functioning of markets. So 2022 was a breakdown in the functioning of markets, and that immediately spread the disorder all over the place. Here, the markets are functioning well, but the economy is going to have to deal with higher yields at the
Investors are bringing out the champagne glasses after the Nasdaq closed above 20,000 points.
If you're interested in breaking news and outstanding investment news coverage, join the audience at Seeking Alpha's flagship Wall Street Breakfast. Its one-page summary gives you a rapid overview of the day's key financial news, a morning and afternoon podcast, and a readership of over 3.4 million. Sign up at seekingalpha.com/thebigtake to receive the daily Wall Street Breakfast in your inbox.
Bloomberg Audio Studios. Podcasts, radio, news.
1,700 miles off the coast of Taiwan, in the middle of the Pacific Ocean, Melvin Kwek is hard at work at the Guam Power Authority, or GPA.
My role is a Chief Information Technology Officer for Guam Power Authority.
A few months ago, he showed Bloomberg reporter Katrina Manson around.
So where are we now?
We're going to the Processing Control Center.
GPA is the only power utility on the small tropical island. In addition to the roughly 600,000 tourists who flock there for its white sand beaches each year, Guam is home to about 170,000 people, and over 21,000 of them are U.S. service members and their families. Nearly a third of the island is taken up by Air Force, Marines, naval, and other military bases. Everyone on the island depends on GPA power, including the military.
They're one of our top customers. We supply constant and reliable power to them.
6 years into the job, Melvin was pretty happy with his work. He'd made progress on connecting GPA's customers to a remote digital grid. But in 2022, U.S. federal agents came knocking. It seemed they wanted to check GPA's network for signs of foul play. The U.S. government is increasingly concerned about hackers getting access to civilian critical systems that the U.S. military relies on, particularly hackers from China. In recent weeks, U.S. officials say Chinese hackers infiltrated Treasury Department computers, and a state-sponsored Chinese hacking campaign breached 9 telecommunications firms. Some officials have been raising the alarm for the past year or so that hackers may have already breached systems in Guam and are preparing for an attack, not just on its data, but on its critical infrastructure. The island, which is a U.S. territory, is 3 times closer to Shanghai than it is to Los Angeles. So for Melvin and his 4-person cybersecurity team, keeping the lights on is a matter of national security.
If China has access to this, then that would be a really bad situation, because then they could disrupt communications.
And do you have the sense that you are a target for China?
Oh, I'm sure we are. We see on our network every day multiple IPs trying to come in, trying to get into our network.
Do you feel like you've got it under control?
I hope so.
This is the Big Take DC from Bloomberg News. I'm David Gura. Today on the show, inside the cybersecurity threats that are impacting Guam and what's at stake for the rest of the country if the U.S. government's worst fears about the island's vulnerabilities come true. To understand Guam's significance to the U.S. right now, it's important to understand how it's related to the ongoing conflict between China and Taiwan. For decades, China has claimed Taiwan as part of its territory and denied the island's self-governing status. China's President Xi Jinping has said he wants his military to be capable of taking Taiwan by 2027, without saying that he intends to do so by then. According to Bloomberg's Katrina Manson, if China tried to invade Taiwan, Guam could be a kind of staging post for the U.S. to push back if it decided to. Katrina says one Washington think tank has gamed out what could happen.
In 24 out of the 24 scenarios, they modeled China sends a missile direct to Guam. And in fact, these missiles are nicknamed the Guam killer. North Korea has them, China has them. The point is they can reach Guam. So Guam is a target. And of course, for the island, that's very fraught.
Guam holds a lot of strategic importance to the U.S. It's the country's westernmost point. The U.S. is building a new Marine base there and planning a network of missile defense systems. The island is often considered by military strategists as a critical piece of U.S. influence in Asia. And the people who live there often feel that geopolitical pressure.
There are people that are concerned about increased militarization here.
That's Guam's governor, Lourdes Aflagui Leon Guerrero.
Guam, geographically, is in a line of commerce and trade in the waters. And superpowers are fighting for that control.
But beyond Guam's geographically vulnerable position, Governor Guerrero told Katrina there's another concern at the top of her mind.
My biggest priority is cybersecurity.
And she isn't alone. A missile strike is a concern, but
Rear Admiral Huffman, who's the top military commander on the island, told me, we think cyber attacks are more likely. This is a more effective way to undermine the US military's ability to move about, to stage any kind of defense or deterrent posture when it comes to Taiwan.
Cyber threats on the island aren't just theoretical. There's one campaign that has experts particularly concerned. Researchers have dubbed it Volt Typhoon. Katrina says cybersecurity experts first noticed it in 2021 when Microsoft researchers were investigating a cyber attack on a port in Texas.
And several months later, in January 2022, they started seeing similarities at a telecommunications company on Guam. And then they kept pulling on the thread, and in summer that year, there was another telco that seemed to have been affected by the same thing. And then some other security researchers saw that this same kind of pattern was occurring on the Guam government's network and also another ISP. So there was a particular concentration on telecommunications companies on Guam, and that started to get people thinking
about why hackers might want to infiltrate Guam systems and what they could do if they decided to exploit that access. Volt Typhoon is not focused on stealing data like a typical hack you might imagine. Instead, its hackers are targeting operational technology systems. Think water systems, satellites, and rail lines. They're gaining access to these systems that control critical infrastructure, and they're just waiting. But for what?
Eventually, the government came to the conclusion that these hackers were there waiting for the moment that it might be useful to disrupt services. So you can disrupt a network and take data from a network. That's usually used for spying. Or you can try and move over to what's called the operational technology system and actually stop something from moving. Stop the sewage from working in the right way, poison the water, interrupt electricity supply, stop phones from working. These are the absolute daily pieces of critical infrastructure that daily life relies on. And also so do military bases, because maybe you can't go up against a military in war, but maybe you can undermine every single thing about how they work.
And in a moment of crisis, like a potential invasion of Taiwan, those systems going down could compromise the U.S. ability to react.
And I think as we've seen with the invasion of Ukraine, whether you are able to achieve your target or not may or may not come down to how quickly you can mobilize your forces. And so the idea that in the American mind, China might be able to impede a U.S. military response simply by undermining its own ability to move a military, because you can't call your forces, you can't get the planes going, you can't refuel them. Any of those things would be potentially very significant.
The U.S. has concluded that China was to blame for the hacking campaign, but it hasn't shared much information publicly about how it came to that conclusion.
They've laid the blame at China. What has China said in reply?
China has for years denied doing any kind of hacking campaigns of this sort. China has said, actually, this is ransomware actors, this is not us, and absolutely denied it. And in fact said the US is making these claims just to try and convince Congress to send funding their way.
With the threat of a large-scale Volt Typhoon attack on Guam looming, what are lawmakers in the U.S. doing to prevent the worst? That is after the break.
Investors are bringing out the champagne glasses after the Nasdaq closed above 20,000 points.
If you're interested in breaking news and outstanding investment news coverage, join the audience at Seeking Alpha's flagship Wall Street Breakfast. Its one-page summary gives you a rapid overview of the day's key financial news, a morning and afternoon podcast, and a readership of over 3.4 million. Sign up at seekingalpha.com/thebigtake to receive the daily Wall Street Breakfast in your inbox.
U.S. officials are worried that Guam could face a crippling cyber attack that would put everything from its infrastructure to military capability in danger. They've been sounding the alarm about an ongoing hacking campaign dubbed Volt Typhoon. Bloomberg reporting found that the U.S. has already discovered more than 100 intrusions across the country connected to the wide-ranging campaign. And some cybersecurity experts say these hackers are slowly making their way into Guam systems, waiting for the right moment to attack.
The US has been very front forward about briefing Congress, about telling the security community, please go look for this, and we need your help to see where it may be, because it won't
This is Humphrey, a 24-year-old tango instructor. And this is Scalping, a 22-year-old social media content creator. They may not know it, but they're both at the center of the next crisis looming over China.
就你连工作都没有找到，那你每个月还要固定去支出养老金的话，那你的钱从哪里来呢？
Gao and Humphrey are among the estimated tens of millions of mostly young workers who have suspended their contributions to China's pension system.
In about 10 years, Chinese pension fund is not going to have enough money to support China's retirees.
It's part of the reason why, on January 1st, China officially raised its retirement age for the first time in more than 40 years. So why are so many young Chinese refusing to pay into the pension system? And what does that mean for the future of the world's second largest economy? A looming retirement crisis isn't something unique to China.
Violent protests broke out in Paris yesterday over changes to the government's pension plan.
We owe $38 trillion, not counting Medicare, Medicaid, Social Security, which is going bankrupt.
But what is unique to China is the scale.
More than 400 million people are expected to be 60 and above by the year 2035. That's out of 1.4 billion people in China.
And if you put that into context, that's more than the population of the US and Canada combined. When they retire, most of them will be eligible to receive some sort of benefit.
Like anything in China, China's pension system is staggering in size and scale. It actually has the world's largest social security network, and the basic state pension covers 1.1 billion people. That's 80% of the population.
And that system covers things from work injury, retirement, pensions, and maternal leave and things like that.
The easiest way to navigate China's pension maze is to think of it as 3 pillars.
First and biggest of those is the basic pension system, which is managed by the state and covers over 1 billion people. People with a formal job are required by law to contribute into this fund, while payments are voluntary for those who aren't in formal employment. Within this pillar, the most important segment covers urban business workers. The second pillar is the voluntary corporate pension, where companies can decide if they want to set up retirement plans for their employees.
You can think of it as your 401k in the US. It covers 31 million people and it has 3.2 trillion yuan in assets.
And the third and newest pillar is the voluntary individual pension, which was introduced in 2022.
It's kind of like an equivalent to the IRA in the US. People can put money into this tax-sheltered account and you can pick what investments you want to put into.
60 million people have signed up to this plan, but only less than a third have made any deposits, and the funds only attracted 28 billion yuan. Now, each one of these pillars is underfunded to some degree. According to a report published back in 2019, the segment in Pillar 1 that covers urban workers is expected to run out of money by 2035. This was the key chart in that report. The line shows the balance in China's urban business workers' pension fund, which is expected to peak in 2027. Look at what happens after that. The key reason behind this?
Demographics. It all comes down to demographics.
Remember this?
For the next 30 years at least, all couples may only have one single child each.
China's one-child policy was introduced in 1979 with the goal of curbing rapid population growth. And by its own measures, it was widely successful. This chart shows how the birth rate decreased by more than half since the policy was introduced. This created a unique family structure that's now almost universal in China.
If you think about the 4-2-1 structure, 4 grandparents, 2 parents doting on 1 child, that dynamic was the model in China for many years until the government ended the one-child policy. Now the cars are being flipped where the one child has to take on the responsibility of taking care of 6 aging people.
The government has been trying to reverse the impacts of the one-child policy, but these efforts haven't really worked. birth rates have kept going down despite new incentives for families to have 2 or more children.
China recently experienced 2 years in consecutive of negative population growth. The younger generation of people who can contribute to the pension system, that size has declined as Chinese population overall declines.
And at the same time,
more than 20 million people are expected to retire in China each year for the next decade.
All of this means that while every year more and more people in China will be collecting their pension, fewer of them will be of working age and thus able to contribute into the retirement fund. At the same time, the young people who are of working age, like Gao and Humphrey, who we met earlier, often cannot afford to contribute or they simply prefer not to.
在深圳养老的话，我要交的养老金一个月差不多在1500左右，其实也是不小的开支，一年的话你都差不多有个2-3万块钱了，2-3万块钱我拿去旅个游买个包不好吗？而且我现在交的钱我是拿来去养别人的，不是用在我身上的。
Underlying Gao's decision is also a lack of confidence about the future of China's economy.
你到了65岁，谁知道中国几年后的经济发展怎么样？你说，甚至你之后要交的更多，它退回来的也就那么一点，你够不够你之后的去承担、去 cover 掉你的生活开支，够不够也是个问题。所以你现在去，与其交这么多，还不如就说别交了。
It's a view shared by Humphrey, who works as a researcher at a university and a part-time dance teacher in Beijing.
我打算一直在工作岗位上干到死，所以我还是有好好锻炼身体的时候，至少活到90岁。然后觉得活到90岁，我也要就是保持一个大脑清醒的状态去。不管是跳舞也好，教学也好，但是说实在，你说经济下行的话，哪个国家不是这样？哪个国家养老金没有被现在交过来被挪用到其他地方的一个风险呢？
Out of all the flexible workers, the majority of them are under 40, and 70% of them only make less than $1,100 a month. That means a lot of these people can't make ends meet. They don't have enough money to put into the state pension system after they meet their monthly demands.
A full-time job does not guarantee greater pension contributions either.
The pension system is also getting squeezed by companies not complying where the companies should be contributing to workers' pension.
According to a recent survey of 6,000 Chinese firms, only 28% were fully compliant on Social Security support. This growing strain on the pension system is what led the Chinese government to announce its historical measure.
Lawmakers have decided to raise the retirement age by up to 5 years.
As China transformed from one of the poorest economies in the world to the second largest economy in the world, its labor retirement age has not changed, and that is a problem.
Major economies like the US, UK, and Japan all have higher retirement ages than China, even with the new policy in place. Yet, the decision triggered discontent across the country.
就其实说难听一点，可能就是中国没钱了。是要靠我们身上去拿走一部分去养其他人，虽然这是为了让整个国家正常运作下去，不让经济有危机嘛，就是对。
क्रूड ऑयल के रिगार्डिंग थोड़ा ध्यान रखना। यूएस आज सैंक्शन अनाउंस करने वाला है रिगार्डिंग द रशियन क्रूड ऑयल, तो उसका इम्पैक्ट पड़ सकता है। नॉर्मली तो पॉजिटिव ही मान के चलो, बट ऑलरेडी इतना मूव कर चुका है, पता नहीं और मूव करेगा या फिर नहीं। फिलहाल इसके बारे में और कोई न्यूज़ नहीं है, क्या सैंक्शंस लग सकते हैं। जो भी सैंक्शन लगेंगे उसका इम्पैक्ट कुछ ना कुछ जरूर देखने के लिए मिलेगा। इसका इम्पैक्ट कहीं ना कहीं इंडिया पे भी होता हुआ दिखाई देगा आपको। नेचुरल गैस पुट ऑप्शन नहीं है अभी, वो सपोर्ट पर ही है, ब्रेक डाउन किया तब लेना। अगर ये ब्रेक डाउन कर देता है तब ले सकते हो, फिर लोअर एंड पे 314 के आसपास कहीं वापस बाइंग का प्लान करना। ठीक है, क्रूड ऑयल में ध्यान रखना इस चीज़ का। बाकी इंपॉर्टेंट सपोर्ट है नेचुरल गैस का, 3 बार सपोर्ट ले चुका है, वापस जा ही नहीं रहा है ऊपर। रेजिस्टेंस बाकी 15 मिनट का नहीं, 30 मिनट टाइम फ्रेम का है, बिकॉज 15 मिनट में कोई लेवल शो नहीं कर रहे हैं। नीचे एक सपोर्ट आपको 6515 के अराउंड दिखेगा, और फिर एक सपोर्ट नीचे है यहाँ पे 6400। ये कल का रेजिस्टेंस उसका रीटेस्ट कर सकता है 6450। तो क्रूड में थोड़ा सा न्यूज़ का ज़्यादा इम्पैक्ट होगा, तो उस चीज़ का ध्यान जरूर रखें बिफोर टेकिंग एनी ट्रेड। भी स्टक हो गया है। हो चुका है न्यूयॉर्क सेशन ओपन, थोड़ा वॉल्यूम एक्सपेक्टेड है करंट कैंडल पे। 6:30 के बाद 7 PM पर डेटा है गोल्ड और सिल्वर के लिए, 8 PM पे यूएस मार्केट ओपनिंग, और 8:30 का डेटा भी गोल्ड और सिल्वर के लिए इंपॉर्टेंट है। मोमेंटम एक्सपेक्टेड है, अब हो जाना चाहिए 6:30 के बाद। लाइक करते रहो गाइस, 30 लाइक्स हो चुके हैं, 100 लाइक्स का टारगेट है। डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल, hit the bell icon as well.
are the things that pressure equities.
A lot of uncertainty with regards to what's happening in terms of bond yields.
Fiscal deficit, inflation issue that's not solved, all of that is in the mix and it's pushing up yields.
I think the bond market here is pricing in the worst case scenario for what the upcoming administration could or might do.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. What a choppy start to 2025 as we come into Thursday after squeezing out a small day of gains on the S&P 500 yesterday. Equity futures shaping up as follows. This morning we look like this. Equities down by 0.1%. On the Nasdaq 100, we're down by 0.16. On a Russell, we're little changed. The fireworks in the bond market, not just stateside, but worldwide. Check out the UK, the 10-year, the highest since 08. The 30-year, the highest since 98. We've said this so many times on this program. Bond yields can rise for a lot of different reasons, but when yields are up and the currency is down, it's usually not good.
It usually represents something more likely seen in an emerging market. And this is the point that Jordan Rochester put out there this morning when he was basically saying, can we say that the United Kingdom is acting like an emerging market right now? Can we say that maybe the Liz Truss moment was not a moment, and maybe this was a reflection of this country losing some of its reputation on the global debt stage?
I'm pleased you brought up the Rochester note over at Mizuho. He offered 3 options to get out of this in the UK. 1, luck from abroad. We talked about that yesterday. 2, maybe the Bank of England can end QT. Or 3, tighten up your spending plans, do something on the fiscal side.
This is the problem. Ultimately, it's all going to come down to, can you effectively have an efficient government where you cut profligate spending without raising taxes in a punitive way that actually discourages job creation, which is what a lot of people are saying is happening in the United Kingdom? The answer is we haven't seen it. And good luck. And let's see what happens. And that's the difficulty right now. And that's the reason why people have one eye on what's going on in Washington, D.C. And can they get that house in order with something close to efficiency?
Well, let's keep it here in America then. Let's talk about the bond market stateside. We're putting a lid on a 4-day sell-off in the US bond market. Yields are lower by 2 basis points, 466.89. Helped up yesterday by a downside surprise on ADP and a more dovish than expected Governor Waller. But check out those minutes. Is this Federal Reserve, or at least parts of it, getting a little bit political?
Well, so maybe a number might be. I mean, that was basically, if you were looking for clarity from the meeting minutes of the FOMC about how many, you got a number. That's your clarity about the number of people who took into account potentially tariffs and other policy changes. Others said that they did not. And this all goes to show that essentially it's a black box, and we have even less of an understanding of what the scenario analysis is at the Federal Reserve. Aside from basically individual speakers, we're going to get a whole host of them today, really giving their sense of, it wasn't me, guys. I wasn't the one putting that assumption.
Who are they? I think this is really important.
That's true.
Who are they, and did they do the same thing in 21 when this sitting president came out with massive spending plans and pushed them through a supply-constrained economy? If they didn't do the same thing, why didn't they? And that will keep the door wide open to accusations of political bias.
Pretty much everything right now is going to leave the door wide open to political bias. You talk about Chris Waller and the fact that he came out and said that basically tariffs he doesn't see as an inflationary impulse. Immediately, all the notes came in just as you basically had your knee-jerk reaction of, oh, is he running for Fed chair? There was some dampening of that. A news report of Bloomberg saying actually he's being taken out of the running because of the half-point rate cut last year. Putting all of this aside, the fact that this is on the table shows how politicized this Fed is getting, whether or not they actually are politically motivated in terms of how their moves are interpreted and the lack of understanding of exactly how the Fed is really analyzing the incoming information and the potential policies coming down the pike.
Stay tuned for more coverage on this. I just want to get into today's schedule just briefly. Anne-Marie's down in Washington, D.C., of course, marking a special important occasion in the nation's capital, observing a day of mourning, the funeral of the late President Jimmy Carter. That will have implications for markets here in the United States, so allow me to go through some times. Equity futures are open, but they will close early at 9:30 a.m. Eastern Time. The equity market, the cash equity market, will not open today, so that will not open at 9:30. For the bond market, cash treasuries are open. They will close, Lisa, at 2 p.m. Eastern Time.
Yeah, with futures, I believe, closing at 1 p.m., which really just puts all the more emphasis on the bond market, which frankly has been one of the main drivers of a lot of the concern that's really rising in equity markets. I want to bring this to you, and this I think is really important. The fact that equity markets have held in as well as they have in the face of some of the bond market sell-off highlights how much they are dependent on growth, and a downside surprise could potentially derail that. This, according to Christian Muller-Glisman of the Goldman Sachs.
Futures on the S&P negative by 0.2%. Your lineup for the next 60 minutes looks like this. We'll catch up with George Concarbis of MUFG on the global bond market sell-off. We'll speak to Tobin Marcus of Wolfe Research as Trump visits Capitol Hill, and Neela Richardson of ADP looking ahead to payrolls. We begin this hour with the US bond market stabilising after a 4-day sell-off. George Concarbis of MUFG looking for higher yields over the next year or so. A hawkish Fed, fiscal policy uncertainty, and more supply should keep 10-year yields higher in 25. George joins us now for more. George, welcome to the programme, sir. It is not just America, it is global. What do you make of the backup worldwide in bond yields?
Look, I think the earlier comments you guys all mentioned and the quotes that DM markets are acting very much EM-like, and I think that's a real consideration. And this is just, I think, par for the course. We're going to, the further we keep having these debt loads, higher interest cost servicing, all this stuff is negative, and it's a negative feedback loop. And until we actually do get our fiscal house in order, I don't see these things ending. In
America, though, George, at least we've got robust growth. Yields are higher off the back of a better economy. People think we're spending too much. OK. In Europe, it feels different, George. It looks like they've got a dire growth backdrop, but yields are up and people also think they're spending too much. How do they get out of that mess?
Yeah, look, Europe has its own set of issues that are going to be much harder to kind of get through. And, with the lack of growth and just really, a vision and a plan of how to actually, motivate innovation and actual productivity. I mean, I think that's really what's lacking. I mean, the U.S. has benefited, yes, from growth, a lot of it coming from government spending. We can't deny that fact. But productivity and just, we are the kind of the fountain of all this technological advancement. I think that, really, creates like a stagflationary environment in Europe and the UK.
How much, George, is this really stemming directly from the United States? Essentially, the U.S. catches a cold, the rest of the world catches a flu, and that's going to be the way that this really develops, even if the U.S. is the source of the profligate spending and the profligate borrowing.
Yeah, and that's a great point because, it is that whole negative feedback loop. And, one of the biggest pushbacks that we've had that rates don't matter, and obviously they do because, it takes time, but eventually they exert their force in different ways. And the one that's really been the most dominant has been through the dollar, right? I mean, it's ironically enough, although there's elements of we're acting as EM like in the way we're spending, but the dollar's benefited, the EM currencies have not benefited, and and the rest of DM has been suffering. So the dollar move and the rate move in the U.S. Combined really does start to kind of cause issues for all markets going forward.
George, something that you said I want to pick up and really tie this to what Christian Muller-Glisman over at Goldman Sachs said, which is essentially the U.S. has growth. And Europe doesn't. And that has been really the saving grace, even if it comes with government spending. That growth, the technological advancement, that's what's been saving United States markets. I'm just wondering how susceptible the U.S. equity market is to a downside surprise economically, whether it's a payrolls report tomorrow, whether it's something else that comes down the pike at a time where that's the one thing upholding the pillar. So even if you get a rally in the bond market on the heels of that, you could potentially get a sell-off. Do you agree with that type of scenario?
Actually, I do. And I think tomorrow actually poses a lot of risks because on the one hand, if NFP is strong, then the Fed's cuts really come out of the table or at least get pushed back even further. And the bond market will be kind of concerned there. So rates will go up and that's going to be negative for equities. If it's a really weak number, equities are probably going to look up and say, hey, maybe the economy is not as strong as we thought it was. And I think that kind of growth shock, and given the concentration risk in the U.S. and given the fact that the U.S. markets are such a dominant player in global equity space, I mean, there's only three ways you can fix that U.S. outperformance. Either the rest of the world catches up, the U.S. goes sideways, and nothing ever goes sideways, or the U.S. goes down. And if you have a big enough financial conditions correction, it's been FCI through the wealth effect channel that's also been a big driver of U.S. growth. Let's not kid ourselves on that as well. So government spending, FCI shock, you can have a real kind of protracted pullback.
George, equity markets are still close to all-time highs. Credit spreads are very tight. Nominal growth is pretty decent in America. Haven't we established over the last 12 months that we can handle rates at these levels?
I think it's to be determined still. I think that, we've been fortunate because of all the inflows, overseas investments into the U.S. If any of that were to change, I mean, it's not as if we're going to really pay down our debt that quickly, or at least reduce deficits that fast enough that we still need our foreign investors. And so I do think that if there's any sort of repatriation, if there's any sort of pullback on capital coming to the U.S. into equity space, I think that the jury's still out.
So get in the policy seat. You're in a risk management business, and you've got to figure out what is the biggest risk right now. Holding too long or cutting too much too soon? What is it? Cutting too much too soon or holding too long?
I mean, on the fiscal side, or just kind of risk appetite?
At the Federal Reserve.
Look, I think the risk is that the Fed deviates from a consistent message that they need to still be easing, not get into this kind of concerns about what the fiscal outlook might look like. They need to focus on delivering a consistent message, being methodical with their policy, and slow down to every other meeting cutting. And if things get better, they can stop in the future. But if they have a long pause, the risk is that they're going to actually make things worse.
How much does the fact that we're questioning the political independence, not necessarily with the idea that Donald Trump is calling them up and saying, guys, cut rates, more the idea that people are jockeying to be selected to be the next Fed chair. Some people are saying, actually, this is an irresponsible policy. We want to push back against it. Whatever it may be, the fact that that's in the zeitgeist of the market, does that potentially introduce more volatility? Does this undermine some of the Fed messaging? Or is just this basically the way it always has been? It's just basically being highlighted more now?
I think the focus is much more hypersensitive now, but I do think that, like you mentioned, like the minutes from yesterday, and that meeting was like the most hawkish meeting in quite some time. Even though they still cut rates, there's a number of folks that really don't want to see rates heading lower, and you have that that faction, and then if you think about what is the right prescribed policy prescription, they should still be cutting, and so it kind of puts them in a tough spot. But nonetheless, I mean they need to. Take into account that the U.S. government needs low rates too. I mean, this is all very circular and interdependent. I mean, the U.S. Treasury market and the Fed, in many ways, are linked at the hip through the interest rate channel, and I think that matters. And so, if you ignore that for too long, eventually the risk is that you have to do YCC or you have to do something more dramatic, right? So I think that you can't divorce those two.
You talk in your notes recently, George, about the lack of conviction in markets and how it's basically going to be treading water until we get some sense of some clarity on what policies are going to look like from President-elect Donald Trump and his administration. What policies in particular are you looking for that really turn the tide one way or another?
Look, so it really comes down to as we all have been saying, sequencing, implementation risks, the unintended consequences, what are the priorities, what are done first. I mean, a lot of the market's euphoria. And let's not forget, like the stock market's up, but it's actually flat to the election. I mean, actually, it's a little bit lower if you look at the S&P 500. We're basically to like October levels. So we had a big run. I think euphoria is present in a lot of other, high beta risk assets. But in general, stocks haven't gone anywhere, right? They've kind of gone sideways after all the euphoria. So I think that's going to come down to we've got a lot of good news priced in, or a lot of animal spirits kind of trying to get embedded. I think it's going to be the tariffs, like how aggressive, how fast is that initially put in, immigration policy, and then how do you get your fiscal house in order? Like you need to start to address that. If you have a credible plan, the bond market will respect it and rates come back down. The Fed cut 100 bips and the market's up 100 bips. The bond market's sending a signal to DC, like you have to get your fiscal house in order.
Hey, George, appreciate your opinion as always, sir. Thanks for the time. George Concalves there of MUFG. Bond yield to lower this morning. Stateside, at least, we're down 2 basis points on a 10-year to 4.67. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. And we begin in Los Angeles, which is experiencing its worst natural disaster in decades. 5 fires are burning across the city, driven by hurricane-strength winds. At least 5 people were killed, and more than 100,000 residents were forced to flee their homes. There is an evacuation warning for major landmarks, including the TCL Chinese Theater and the Dolby Theater, where the Academy Awards are hosted, as well as parts of Hollywood Boulevard. The Biden administration is planning more AI chip export restrictions. Sources tell us that the regulations would create 3 tiers of chip curbs. A small number of allies would have unmitigated access to chips. A group of adversaries would be basically blocked from importing. The majority of the world, meanwhile, would face limits. The regulations could be issued as soon as Friday. And it's the National Day of Mourning in the United States for the late President Jimmy Carter, who died on December 29th at 100 years of age. A state funeral for Carter starts at 10 a.m. Eastern at the Washington National Cathedral. President Joe Biden is expected to deliver a eulogy. Carter was a former Georgia peanut farmer who served 1 term as president. He was notable for his post-presidency humanitarian work, especially with Habitat for Humanity. That's your Bloomberg Brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Truly shocking pictures coming out of Los Angeles. We'll bring you updates throughout this morning. Up next on the program, unified behind Trump.
Whether it's one bill or two bill, it's going to get done one way or the other. I think there's a lot of talk about two, and there's a lot of talk about one, but it doesn't matter. The end result is the same.
We'll head down to Washington, D.C. and catch up with Anne-Marie in just a moment, live from New York City this morning. Good morning.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Just a touch softer this morning. We're down by close to 0.2% on the S&P 500. Some stability in the US bond market. Yields are down by close to 2 basis points now. The 10-year 467.29. Under surveillance this morning, unified behind Trump.
Whether it's one bill or two bill, it's going to get done one way or the other. I think there's a lot of talk about two, and there's a lot of talk about one, but it doesn't matter. The end result is the same. We're going to get something done that's going to be reducing taxes and creating a lot of jobs and all of the other things that you know about. But this was a really unified meeting.
So here's the latest this morning. Donald Trump praising a unified meeting with Senate Republicans on Capitol Hill, discussing his priorities. But Republicans in the House and Senate are still divided over how to get his agenda through. Anne-Marie joins us now from the nation's capital for more. AMH, good to see you down in Washington, D.C. once again. You tell us, are you seeing or hearing any details on this front? We get that they're saying they're all on the same page. Do we know about size, sequencing, process, how quickly, the timeline? Do we know anything?
Well, whatever you're hearing about the fact that they can't even decide on the sequencing, wait to hear about the size of this and the top line budget. Can you imagine the debate that is going to go on? I think what you see reflected right now amongst the debate right now, and I was on Capitol Hill yesterday speaking to some representatives about how they see and differ on this approach. I think you have to remember is that this is going to be very challenging, whether it's one big, beautiful bill or two-track approach. They have very slim majorities, more so in the House of Representatives. And remember, in the House, they also need to make sure they fill seats. Representative Matt Gaetz' seat, Mike Waltz, that is going to be Trump's national security advisor, and Elise Stefanik. They need to fill those seats to make sure that they have enough votes to get this bill through. Before they even start talking about how big it is, they need to decide on the sequencing. Or maybe the entire debate will play out open. The fact of the matter is, we don't know. And if you were looking for clarity, we did not get that yesterday, except for the fact that Trump has made clear he doesn't really care as much about the procedure. He's not there counting votes. And frankly, that's not his job. But he does care about his agenda. Whether it's one bill or two, he wants to get that agenda through. But this line stuck out to me. After meeting with House Speaker Mike Johnson, Senate Majority Leader John Thune said this, joking with reporters, that the plan for sequencing the legislation is as clear as mud. And I expect that at least for the next few days, maybe weeks.
They're at least attempting to hit the ground running. Anne-Marie, appreciate it. More from AMH in the next 10 minutes or so. Tobin Marcus of Wolf Research joins us now. Tobin, Speaker Johnson has talked about passing one big, powerful, beautiful bill and getting it out of the House by April. How big is that bill going to be, Tobin?
I think in terms of gross numbers, how it would be scored by the Congressional Budget Office, we're looking for something in the mid $4 trillion range. But of course, the gross size of the bill depends a lot on, the length of the extensions of various provisions. I think certainly there will be some timing gimmicks on some of the provisions to minimize the apparent cost. So it's going to be a big bill, and I think it's going to need to be at least partially paid for.
Tobin, how is it going to be paid for? We keep hearing this, that everyone's looking for cost cuts. Republican members come on the show and they say we care a lot about making sure that it is a balanced budget. And then we talk to analysts who say there is no feasible way to actually cut the deficit in any material way going forward. Is that your take on it as well, or are you seeing actual policies being put into effect or even discussed?
So I certainly agree that we're not going to be able to materially cut the deficit. I think our base case, even in a bill that does incorporate some meaningful offsets, is that the deficit to GDP ratio is going to remain in the 6% range or higher for the foreseeable future. So, the idea of balancing the budget, we're a long, long way from that. That being said, I think the one big beautiful bill strategy reflects the fact that the House is probably the sticking point here more so than the Senate. And I think House conservatives are going to demand, some tough choices to partially offset the cost of that bill. So, we're looking at partial rollback of the Inflation Reduction Act's clean energy tax credits. We're looking at possible long-term reforms to Medicaid. I think there are some realistic policies that could bring that number down that I think are going to end up being in the mix.
We've heard mixed things, Tobin, about how much this Congress is going to be looking at the bond market. Do you have a sense of what kind of check markets are going to be on some of these proposals, getting them on board with potentially a greater degree of cost cutting?
I think we probably need to see yields get materially higher before that starts to be a huge driver of the conversation in D.C. I mean, D.C. tends to be a little bit insular. The debates about the budget math are much more about the sort of 10-year scoring conventions and so forth than they are people, watching day-by-day movements in the 10-year. But, if yields push above 5%, I think that changes the conversation in a very significant way. The difference between 4.4 and 4.6, I don't know that really moves the conversation much.
Tobin, when we speak to Republican lawmakers, they talk about being responsible, aware, sensitive to what could develop in the bond market. But when you ask what they can do to offset some of the spending, you don't get much detail. What can Doge do to counter all of this spending? What kind of numbers are you thinking about on that front?
So I think it's less what Doge can do. I don't think that much of the spending cuts are going to come on the discretionary side. I think that Doge is very interested in looking at the ongoing operations of government and figuring out if they can squeeze waste out there in terms of year-by-year discretionary spending. But you can't really go after that in reconciliation. And so I think when we're thinking about reconciliation pay-fors, again, we're thinking about tax expenditures like the IRA credits. And when you look on the spending side, I think Medicaid really does stand out as the thing that offers itself up as a potential source of cuts. Like, they're not cutting Social Security and Medicare because Trump doesn't want to. The next big spending program, like mandatory spending program in terms of entitlements, is Medicaid. And I think they will look at that, even though they're not talking that much about it now. I don't think it's going to be that popular. I think it probably is politically survivable. We're hearing some noise, but I think that'll be heavily in the mix.
We're talking about so many different things. We're 11 days for inauguration, and we're already herding cats. Panama, Greenland, when it comes to the Gulf of Mexico. Tobin, the list goes on. And I wonder what you're telling clients. Do you believe these are just negotiation tactics, or do you believe the incoming administration is really pursuing a forceful realignment of the global order?
Well, John, I believe you mean the Gulf of America, but I think that it's floating sort of big ideas that appear outrageous to a lot of people is certainly in keeping with how Trump approached the first administration. I don't really think this is going to be what the administration is about. When it comes to Mexico, I think we have bigger things on the agenda for that bilateral relationship than the name of geographical features. Again, we have this 25% tariff threat out there. Immigration, I think, is probably going to be the biggest item in terms of day one executive orders, things that Trump does unilaterally the day he comes into office. And Mexican cooperation on enforcement is going to be a huge, big part of his potential for advocacy there.
Forgive me, the Gulf of America. I'll get there, Tobin. Tobin Marcus of Wolf Research. Tobin, thank you, sir. Thank you very much. You on board with that, Gulf of America?
Did you see what Claudia Sheinbaum of Mexico, her response? She gave this press conference where she put a map on the wall, and it showed what the map looked like more than 100 years before the United States was created.
She wants to absorb some southern states.
And she said at the time, North America was viewed as America Mexicana, or Mexican America. And she said, that sounds nice, no?
We're going to see a lot of trolling, aren't we, over the next several months on this front. It's already started.
Well, this is the reason why people are overreacting, maybe, to this, why Denmark just says, not really, guys. And you have Canada saying there isn't a chance in hell that this is going to happen and become the 51st state. Question is, what is the distraction keeping people from paying attention to? And that, I think, is increasingly what people are going to be focused on. How do you look at the signal and not the noise?
I think you've got to respect the seriousness of the attempt to realign the global order when it comes to things like Greenland. I think they're fairly serious on that front. I don't think that's just trolling. I think they're pretty serious on that front.
You think that they're going to take military action against Denmark?
No, I'm not going that far.
Maybe tariffs?
I'm just saying that there is a serious focus on that part of the world for geostrategic reasons, and that focus is not going away.
I would agree with that, and I think that some people would argue that because there's a pretty big military base there already from the United States and they have access to the rare earth minerals, they already have it. But you are correct. There is a real focus here.
Anne-Marie can answer all these questions. We'll head back down to D.C. in just a moment. She'll be speaking with the former senior U.S. intelligence official, Norman Rule, in just a moment. From New York, this is Bloomberg. drama this morning. On the equity side of things, we're down about 0.1% on the S&P. On the Nasdaq, we're down by 0.2. In the bond market, setting the tone for things worldwide, Treasuries settled down just a touch. Across the curve on a 2-year, 10-year, 30-year, yields are lower by a basis point or two. We're down a single basis point on a 10-year to 467.29. On a 30-year, 490, getting closer and closer to that 5% line in the sand. Jim Reed of Deutsche Bank had a great line in a note that he put out to start the week, that the 30-year in the US has only been above 5% for 6 trading days. 6 trading days, and that was back in October 23 since 2007. So it's been pretty rare over the last 2 decades or so to have yields at or close to these levels.
And yet here we are, and ultimately if we get there, as a lot of guests who come on the show say that we will, test to me will be whether it gets bought. And yesterday the signal from the bond market was that the 30-year got bought at these levels with a successful auction of $22 billion of notes. That was one thing that gave us support to this market. Does that continue as we get more details, particularly about the budget?
Let's pick out a market that's not getting much support. Let's look at what's happening with sterling right now. The pound is breaking down once again by 0.6%, 122.84. You can see this is playing out much more heavily for the sterling side of the trade compared to the euro, which is only softer by 0.2%. And this is happening even as the sell-off in gilts continues, up another 6 basis points on a 10-year. Least are approaching 490 for all the wrong reasons in the United Kingdom.
So yesterday, former Prime Minister Liz Truss sent a cease and desist letter to Sir Keir Starmer, saying that he needs to stop saying that she crashed the UK economy and saying that that is a libelous statement. And there is a real ultimate question here. Was it a Liz Truss moment, as we called what happened in 2022, and it was a much steeper sell-off in bonds and the pound, or was it a UK moment? This question of have they lost their clout on the global debt market stage, especially as they look to potentially increase taxes and cut spending in order to get a budget under control, and now it becomes maybe a Rachel Reeves moment, or maybe, just again, this is a moment that the country cannot avoid.
Yes. I think it'll evoke memories of 2022, but I'm with you. Speed, magnitude, completely different back in the 22 occasion, that scenario. I mean, we also had the overlay of the pension issues as well, and it's very different this time around. But I think you're right. This is becoming a UK issue. They're losing fiscal space. When you see yields up and a currency down, that's a very EM emerging market type phenomenon. That's not something we're seeing play out here in America.
And Jordan Rochester made this point, and I think a lot of people are drawing parallels between the UK and the rest of the world. But there is a message here, and I think this is the reason why people keep bringing up the Liz Truss moment for the United States. And that is when interest rates start rising enough, that torpedoes your ability to balance your budget at home because that increases your base costs. And that is what the UK is facing. And that potentially...
It's a doom loop.
Yeah, exactly.
Just get worse and worse. You mentioned Jordan, top of the note. What was it? Great British Peso or something like that?
Yeah, then talking about other emerging markets. I'll pull it up to get it for
Brutal in the United Kingdom. Jordan, thanks for that. Under surveillance this morning, a serious story. Los Angeles facing its worst natural disaster in decades as firefighters struggle to contain 5 wildfires burning across the region. The fires are leaving at least 5 people dead and forcing more than 100,000 residents to flee, with hurricane-strength winds expected to last through Thursday. Just brutal images coming out of that region.
The most devastating fire in the region, in LA, in history, potentially, at a time when there are real questions around, A, what could have been done to prevent this? B, how do you bring everyone to safety at a time where some people are saying, where was our plan? Why were we stuck in gridlock? And then a question going forward, how do you rebuild and ensure homes in areas that are prone to this type of fire, especially in a changing climate?
The blame game's already taken place. You're going to get the Democrats blaming Republicans for not taking climate change seriously. And I think the Republicans will make a very obvious counterpoint to that, which is you guys are in charge. Do something about forest management. Make sure you've got the water to begin with. I'm not sure the people who've lost their homes care. They want this fixed and fixed pretty quickly.
They want it fixed when it comes to preventions going forward. They want it fixed when it comes to assurances that things can be done to mitigate this going forward. And they want assurance from their mayor that she's going to come back to the country and possibly come up with some sort of plan.
And not be in Ghana. Yeah, angry. I can imagine they are just angry, really angry with the leadership coming out of California and Los Angeles.
In the meantime, our hearts go out to them because this is just devastation. More than 100,000 people evacuated. watching their homes get destroyed without really being able to stop it.
We'll bring you updates throughout this morning. Certainly some bad news coming out of California, some good news potentially on the horizon elsewhere. US dog workers and their employers reaching a tentative labour deal. The new contract would avoid a shutdown of East and Gulf Coast ports next week if ratified. Bloomberg learning the agreement includes guaranteed union jobs when certain technologies are implemented and preserves the 62% pay raise agreed to back in October.
What's interesting to me is that this wasn't at the last minute. Normally, these kinds of deals happen right at the 10th hour, 12th hour, right before January 15th, when it was sort of set in stone. I wonder if this is a sign of a realization that you kind of have to take what you can get, and that the world is changing faster than maybe you can demand certain provisions to stay up to speed.
But if there are some people with some leverage, I would say it's the union workers at the docks right now. I think they've got some leverage, but I'm with you. The broader story, I think that the labour market and the employees are losing leverage to the employers. And we've seen that. I think we talked about it yesterday with JP Morgan, reportedly asking people to come back 5 days a week. Not typically what you'd see when the labour market is super, super tight.
Yeah, I wonder if this is sort of the beginning of an ongoing slew of union negotiations, or something you've mentioned in the past, sort of the last gasp before a different change that we have in the market.
Yeah, without a doubt. Let's turn to this story. I want to squeeze this in. The latest Fed minutes showing the central bank is looking to slow interest rate cuts in the months ahead. Officials citing higher inflation readings and strength in consumer spending. Fed officials also using placeholder assumptions for possible policy changes under the incoming Trump administration. When we closed out the show just yesterday, I said we're looking for a number. How many people? And I literally said a number. Yeah. How many people? And then they just wrote a number. Lisa, you said this too. I mean, super helpful yesterday in the Federal Reserve minutes.
You said we're looking for a number. They gave it to you. A number. Yeah. And that's basically what we're going to be stuck with. I do just wonder, they're kind of stuck between a rock and a hard place, in fairness. If they don't take into account any of the policies coming down the pike, that could be potentially irresponsible. If they do, that also could be potentially irresponsible if they make assumptions that could be viewed politically. How much is it sort of saying the quiet part out loud, that they are kind of considering what the market is considering, and that is going to be proven to be sort of a bad calculation?
It's basically what they're telling us. And if they're between a rock and a hard place, they put themselves there. They're victims of their own communication apparatus. And if they don't like them, they can change them, can't they?
What would that be? Just to stay quiet?
Staff forecast, get rid of the dot plot, all of the above. We talked about this in the last couple of weeks.
Are you running?
Am I running?
Yes.
To be the Fed chair?
Yeah.
Nobody wants that. Let's turn to the Middle East. The Israeli military saying it has found the body of a hostage in Gaza, possibly alongside his son's remains. The discovery comes as Donald Trump's incoming team hopes to secure a ceasefire and hostage deal between Israel and Hamas ahead of his inauguration on January 20th. Let's head down to Washington, D.C., where Anne-Marie is sitting down with the former senior U.S. intelligence official, Norman Rule. Hey, Anne-Marie.
Hey, John, thanks so much. Yeah, what we're hearing right now from the incoming Trump administration, from Steve Witkoff, who went over to Doha to be a part and witness these negotiations and to really lend some support, is that they think that they can have good news to deliver. So, of course, we want to bring in Norm Rule, who spent decades at the CIA dealing with Middle East and conflicts. Norm, is it your understanding that potentially we could get a Gaza hostage agreement before President Biden leaves office?
Good morning. Yes, that is correct. The incoming Trump administration and outgoing Biden administration have been working very closely with no reports of any disagreements or frictions to achieve this. The statements by President Trump beginning in December that there would be all hell to pay if the hostages were not released, injected new life into this issue. And both Hamas and the Israelis have claimed that they have made concessions to make this hostage deal, which would be the first phase of a longer deal, happen. This said, the phrase cautious optimism has been used repeatedly in the past. Hamas has not dropped its primary demand, which is that Israel end the war and withdraw. Israel has not dropped its primary demand, which is Hamas cannot be allowed to regain control over Gaza. So the exit strategy for this conflict continues to be tied to this hostage deal.
Norm, I'm in Washington, D.C. today because of the funeral of President Jimmy Carter. And like Jimmy Carter, President Biden, on his final days of office, is working to secure Americans abroad. Now, obviously, these hostages, I'm talking about the Iranian hostage crisis that Carter dealt with, The conflict, the crisis, very different in nature, but all roads lead back to Iran. Given your work and decades of experience dealing with Iran, what has changed from Jimmy Carter's presidency to now?
In some ways, the modus operandi of Iran and its proxies and hostage-taking remains identical. And in fact, there's another echo from 1979. During the Carter administration, the Algerians played a prominent role in engaging with the Iranians. Today, we have the Qatari government playing its large role in dealing with Hamas itself and sometimes the Iranians. So you do have strange echoes of this period. But since 1979, not only the Carter administration, but the Reagan administration in Lebanon and the United States repeatedly with Iran have dealt with a drumbeat of hostage-taking by Iran and its proxies. And these events tend to be multi-month, multi-year in many cases, where in the end, significant financial or political concessions are required to release hostages. Iran and its proxies have very little care for human life and dignity, but focus on their own interests.
Many observers would point to the peace agreement between Egypt and Israel that Carter was able to get over the finish line. How do you see that shaping the region?
It was dramatic and significant, but at the time it was not something that was a sure thing. The Carter administration entered office hoping to follow the steps of its predecessors, large international conferences involving the Soviet Union, the Geneva process. In fact, the Carter administration was not initially enthusiastic about Sadat's solo diplomatic engagement. The Washington Post at the time famously described the cool Carter reception as being so chilly it could freeze the Nile. But it did open for the first time the possibility of something that eventually, under the Trump administration, became the Abraham Accords. It's just things move slowly on these issues.
I'd love to end on that point because we do have an outgoing president who wanted to expand peace in the region, that Abraham Accords between Saudi Arabia and Israel. He wasn't able to finish it. And now we have an incoming Trump administration that certainly wants to make sure they're able to get that over the finish line. Do you see that doable in the next 4 years?
Yes. And in fact, the Biden administration also built on the previous Trump administration's work to pull together a Gulf security agreement with an important agreement with the government of Bahrain. And this agreement with Bahrain, which is a bilateral security agreement with the United States, now also includes the United Kingdom and is open to other partners. I think what we're going to see is perhaps not an expansion of the Abraham Accords, although that is possible. We may see economic integration. We may see greater an expansion of the Bahrain agreement. We may see a variety of different architectures. But if a two-state process can be established, I think it's inevitable that you're going to see this integration of the region, which would mean an expansion of the Abraham Accords and the peace process.
Norm, thank you so much. Jonathan, that was, of course, Norman Rule, a former U.S. intelligence official. One thing is very clear to me. This Iranian hostage crisis that engulfed the final year of Carter's administration, when you talk to people like Norm, not much has changed about Tehran and the Iranian regime.
He is one of the very best. Anne-Marie, appreciate your time. Look out for AMH a little bit later this morning. In about an hour from now, catching up with the former Speaker of the House, Kevin McCarthy. That will take place at about 7:45 Eastern Time. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. At least 5 massive wildfires are burning across Los Angeles. President Joe Biden has canceled a trip to Italy instead to focus on the federal response to the fires. And during a meeting in Germany, Defense Secretary Lloyd Austin said the Pentagon is ready to provide aircrafts to help extinguish the flames from the sky. Mexico's President Claudia Sheinbaum has countered President-elect Donald Trump's proposal to rename the Gulf of Mexico with a suggestion of her own. Sheinbaum said that large parts of the U.S. should be renamed Mexican America, saying the name has a nice sound to it. She noted that a large part of the western U.S., including Texas and California, had previously belonged to Mexico. Former Google CEO Eric Schmidt has invested in 3D printed rocket maker Relativity Space. Sources told us that Schmidt has been backing the company since last year, helping it overcome fundraising challenges. The company is developing the Terran R rocket that is set to launch in 2026. It received a $4.2 billion valuation back in 2021. That's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the programme, counting you down to payrolls.
What we're seeing is a frozen labor market, one in which we're not seeing much hiring, we're not seeing much quitting. A frozen labor market is unstable. Policy direction over the course of the next few months is going to be key in determining which side of the ledger the employment market falls.
That conversation up next, live from New York. You're watching Bloomberg TV.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stocks at the moment just a little bit softer. We're down by 0.2%. Check out the bond market, though. Back on September 18th, your 10-year yield, 364. Why September 18th? Because that is the same day that Chairman Powell cut interest rates 50 basis points. And since then, Elisa, yields are higher by more than 100 basis points.
And it has been relentless, and it has been an escalating move starting at the last month of last year. And this raises the question of how much is tied to policy, how much is tied to debt exhaustion, and how much is tied to an economy that really is showing inflationary pressures.
The next stop is the economic data under surveillance this morning. We're counting you down to payrolls.
What we're seeing is a frozen labor market, one in which we're not seeing much hiring, we're not seeing much quitting. A frozen labor market is unstable because we could either see a further deterioration in labor market growth, or we could see a resumption of stronger confidence. Policy direction over the course of the next few months is going to be key in determining which side of the ledger the employment market falls.
So here's the latest this morning. Traders bracing for tomorrow's payrolls report. The median estimate in our survey calling for 165,000 jobs added and unemployment to stay flat. Nita Richardson of ADP predicting a slowdown, writing the labour market downshifted to a more modest pace of growth in the final month of 24, with a slowdown in both hiring and pay gains. I'm pleased to say that Nita joins us now for more. Nita, good to see you. Happy New Year.
Happy New Year. Good to see you.
You put out your numbers yesterday.
That's right.
Where did you see weakness and where did you see some strength?
Well, we saw weakness in manufacturing, and this is, doubling down on a trend we've been seeing all year. 3 consecutive months of shedding jobs in manufacturing. That's very cyclical. On the strength side, we have to turn to a very non-cyclical sector, which is healthcare. Healthcare has been posting strong gains for the last 6 months. You see that in the ADP data. You also see that in the BLS data. It's what's really driving the jobs market now. And the question is it enough for 2025 for healthcare to be in the dominant position?
Are workers losing leverage against that backdrop? If you're seeing more narrow gains, if we're losing breadth and it's coming from areas outside of cyclical sectors in the economy, are we seeing a loss of leverage for workers more broadly? We've been talking about this over the past few days. JP Morgan saying, get back to work, get back to the office 5 days a week. We talked about it a little bit earlier this morning, that maybe that's why the unions on the docks are maybe settling a little bit earlier. What are you seeing around pay and signs of a loss of leverage?
We're seeing a lot, and I would align with those remarks that workers have lost some leverage from the heyday of the Great Resignation when they were clearly in the driver's seat. There is no one in the driver's seat right now. I think in the labor market, it's pretty calm and quiet. But what we're seeing is that pay growth has declined. We're looking at the lowest pay growth for job stayers since 2021. So that is significant. But also you have to look at hours worked, and that's where companies are kind of fine-tuning their labor count. Layoffs are very low. They're at historical lows for the past 2 years, but the number of hours people are working have been declining consistently over the past year and a half. That means that workers are making less. Also, I'll point to the JOLTS data that came out this week. Everyone made a big hubbub about the job openings. I went directly to the job quits, which are much lower. So people are staying put in their jobs, and that means there's been very little turnover in this labor market.
I agree with you. 1.9%, which is tied with the lowest rate for quits going back to 2020, and really raises some eyebrows about just how much mobility an agency workers feel. I am wondering the why. behind this? Is it because of policy uncertainty from companies? Is it because borrowing costs are higher and they're not making big expansionary moves? Or is it because they're still watching what's going on the artificial intelligence front with the potential that this will make some big changes to their workforce and they're not sure exactly how?
So let's take those pieces together. I think there is a bit of uncertainty about policies, but when you look at where the weakness is in terms of firm size, it's really been in small firms that we've seen the slowdown in hiring. Big firms are still hiring. And you see that clearly in the ADP data. So that points to more financing constraints than it does to AI investment or uncertainty about what, the next tariff policy will be. Most small firms don't operate in that macro scenario on a consistent basis when adding 1 or 2 employees. So when you're looking at that, interest rates matter in terms of financing costs for small firms. Longer term, over 2025, I think that AI investment and those trade-offs between capital and labor become much more relevant starting this year, but also into the future.
Are you saying that on the ground, from the bottom up, what you're seeing is that long and variable lags still do exist and that they just got a lot longer and that they still are restricting certain smaller companies?
They've gotten a lot more variable. Our lags.
Okay. All right. So they've got a lot more variable, and that's the reason why you are seeing it only in smaller businesses. But are you saying that rates staying here might look like they're not necessarily hampering financial conditions, but they are constraining the labor market in a more significant degree at this point than they did even 6 months ago?
Firms that rely on bank capital and small business loans are feeling the effects of higher interest rates. It may not be translating to the larger firms yet, but in terms of on the ground, the mom and pop, the Main Street businesses, I think you see that in their hiring decisions. And so, yes, that is material because small firms are the engine of growth for the labor market and for the economy. And if you want that dynamism to continue, it really has to be at the small firm level.
So, Nita, what's your reaction to the recent shift over at the Federal Reserve? What do you make of things?
The recent, well, there's been a couple shifts. I think what we're seeing in terms of the commentary around the Fed is that they have put out this idea of being more patient. And this is a Fed that we're not really used to seeing historically. Usually the Fed, when it's starting a policy change, it's moderate, predictable, modest moves every decision meeting. Now we're seeing a Fed that says, hey, we might take a break. We might, go on vacation for this one and do a rate cut at the next meeting. And I think that adds a little uncertainty to what the future path of interest rates will be.
And some of us might include some changes to policy that we might expect, and some of us might not. And that's been part of the confusion as well, Lisa, over the past month or so.
How does a market factor in what the Fed is going to be looking at when we don't have a sense of what policies and input data will potentially be going into their equation? It makes it rather confusing.
Does that make it more confusing for you, Neva?
For me, it's about the data. Right? Some of this is just kind of animal spirits. It matters for the markets. It matters for the mood of making investment decisions. But does it matter for that HR director in a company who's trying to figure out how to grow a business in a particular area? Those policy changes are not going to hit that HR director in this month. It might play out over 6 months or a year, but they have to figure out the here and now in terms of the economic conditions that they're confronting with their customers, not what the Fed is doing.
It's increasingly complex, that's for sure. Nita, it's good to see you, as always. Thanks for dropping by. Nita Richardson there of ADP. Up next on the programme, we'll catch up with Jim Zauter of Apollo. Do not miss that. Jim in the building for 30 minutes. That kicks off in about 5 minutes from now. Then we'll speak to Alex De Silva of AccuWeather and the former House Speaker, Kevin McCarthy, catching up with Anne-Marie down in Washington, D.C. I think we've all got the question on top of our minds, Lisa, which is how big is that bill going to be and how quickly can you pass it?
And how much offsets are there? How many offsets to the potential deficit increase that a lot of people are expecting?
That's just around the corner, the second hour of Bloomberg Surveillance. Up next with equity futures on the S&P, just a little bit softer.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
You want to stick with the primary outperformance of the U.S., which we expect to continue.
If earnings are in double digits, we should have a positive year this year in the S&P.
We think the first half is going to be choppy. The second half of the year could be much, much better for equities.
We actually think that you are going to get the broadening this year. The deregulation backdrop that we're about to have in the incoming administration is profound.
These policies do matter quite a bit. That's why the market is moving so much on each of these headlines and will continue to move.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It's one of those mornings. It's that time of the year where you sort of wake up and the first thing you look at is the gilt market. Waking up in New York City. You look at UK government bonds, apparently. Yields are up by a couple of basis points again, up by 3 in the UK. Levels we haven't seen since 2008 on a 10-year, 1998 on a 30-year. The 30-year this morning up by another 2 basis points. They've got problems over in the United Kingdom. Not just of their own making. They've got problems from all over the world.
You mentioned Jordan Rochester earlier and how he's talking about how much UK is rhyming with an EM country in terms of the response in its debt market, its currency market. And you said something about the Great British Peso, which was his first thing that he said, and then Istanbul on Thames was the other one. And basically, this is sort of the sentiment right now. Have we broken the normal connection with developed markets and their ability to finance their deficits through the bond market?
We mentioned this in a previous hour. One thing that Jordan mentioned really to address the problems in the UK could come externally, at least one. They'd be praying for worse data out of the United States of America and a downside surprise on payrolls tomorrow morning. The estimate in our survey for payrolls tomorrow morning, 165, the previous number 227. You get a number north of 200k, you've got even bigger problems abroad.
This goes to the crux of the existential issue that's facing the rest of the world. The U.S. gets a cold, the rest of the world catches a flu, and it's even more relevant when the U.S. has a deficit that is the highest it has ever been on an absolute basis. When you talk about the fact that it is starting to be reflected in the bond market and it's being carried over into other economies that are much weaker, that are not seeing the same growth. What happens if the U.S. has the same deficit, same yields, but not the growth? And that is the fear that a lot of people have.
We live in a tripolar world, and if you go through each of every one of the 3 regions right now, it's really a different backdrop. In the United States, growth is good, yields are up, and people think we're spending too much. In China, growth isn't great, yields are down, and people think the government isn't spending enough. And in Europe, they're stuck in between, getting the worst of all worlds. Growth is bad, yields are up, and people think they're spending too much. What do you do with that?
Well, you try to get a leader first, which is part of the problem because there isn't really a great deal of leadership in Europe. But this is the reason why, even though the prospect of ECB rate cuts is much greater than, say, Fed rate cuts, people aren't flocking to the sovereign debt market in Europe because the backdrop is so uncertain and they are stuck between the 2 poles that really are whipsawing them in different directions.
Anne-Marie not around the table with us this morning. You might have noticed Anne-Marie is down in Washington, D.C. to observe a day of mourning for the late President Jimmy Carter, the funeral taking place later on this morning. That will have implications for financial markets here in the United States. Just allow me to go through some times for you if you are just joining us. At 9:30 Eastern Time, equity futures will close. The cash equity market will not open today. For bonds, cash bonds, the Treasury market will close at 2 p.m. Eastern Time. So just some names, some numbers, some times to keep in mind a little bit later on this morning and into this afternoon. The next 60 minutes is going to shape up as follows. I can go through the timeline of events for you. In just a moment, we'll catch up with Jim Zalta of Apollo Asset Management on the outlook for private credit. Later on at about 7:30 Eastern Time, we'll speak to Alex De Silva of AccuWeather as devastating wildfires continue to threaten Los Angeles. And then Anne-Marie catching up with the former House Speaker Kevin McCarthy on President-elect Donald Trump's agenda. Do not miss that in just a moment. We begin this hour with stocks inching lower. Jim Zalta and the team over at Apollo Asset Management looking for opportunity outside of equities, saying, quote, if interest rates remain higher, as we expect, and the terminal Fed funds rate stays higher than where it has been historically, we see private credit as an attractive alternative to overvalued public equities. Jim joins us now for more. Jim, good morning and a very happy new year to you.
Good morning, Jonathan.
I'm going to kick off this conversation by stealing one of Lisa's questions to start 2025. Are stocks too rich or are bonds too cheap?
Well, I think we have a backdrop. I think your point about the U.S. and China and Europe and the 3 parties, it's our view that and Torsten has been very consistent. The U.S. economy has been the beacon of opportunity in the last several years. Strong economic growth, capital coming in from around the globe. And so in terms of, I don't want to talk about the stock market, I'd rather talk about the underlying economy.
Sure.
Underlying economy looks like it's the place to invest. I don't think it's any surprise that when you peel the onion back, private capital, which has really been embraced in the U.S. and gives diversity of funding, lets companies grow, start, expand, and all the things we're talking about, the global renaissance. It's been the place to invest, and it's been attracting capital. Contrast that to what's going on in the UK and continental Europe, where they are stuck in a financing system that's really 15, 20, 30 years behind the rest of what's going on in North America. It tells us that the U.S. is the place to invest.
So you think some of these problems in Europe might be more structural in nature?
I think structural is really the key to really analysis. It's very easy to focus on the last 3 to 6 months. We talk about the Liz Truss moment in the UK. I think it is a great reminder for this current administration, as they've got great ambitions in terms of U.S. investment, CapEx, tariffs, immigration, a variety of other big initiatives. It's good for this reminder of the Liz Truss moment in the back of their minds to know what can happen if you lose confidence. But there's no doubt, I think, if you look at what the Draghi document did, later last fall, he pointed out in 158 summary pages of all the challenges that they have not really embraced. And while the banks are in better shape than they've been in a couple of decades in Europe, the U.S. is the standout. We have the greatest financial services sector in the world. We have the deepest, broadest capital markets. We've undergone a tremendous amount of regulations on our banks, and they've continued to thrive in a more narrow world. And that's the page that the Europeans should be looking at, embracing securitization, embracing private capital. They've got a massive amount of infrastructure needs, and they should be embracing that for their long-term economic success.
In the meantime, people are saying that maybe the ghost of Liz Truss is kind of hovering over this administration and hovering over the U.S. Treasury market right now, especially given the rise that we've seen in longer-term yields. And I'm wondering how susceptible you are to changing your view on how constructive the U.S. economy is if you get some more negative data prints. We had Greg Dako yesterday talking about a frozen job market. We had Neela Richardson talking about how smaller companies really are feeling rates where they are.
Rates have been higher for the last 12 to 18 months. They've been higher. Obviously, we're in a period right now where what the Fed did in its actions in the fall and what the market has responded to is a very unique period. So you're right. We are in a little bit of a unique zone here with regard to macro and rates in the U.S. I do think we are in a period where rates do look attractive versus where equities are. And we're in a period right now where we're still the place of economic growth, but it is a warning sign for the administration about how much they can push. Now, clearly, the other side of the trade, I would not probably be lowering rates right now. I think that you have full employment, economy is doing quite well. I'm not sure I see a need other than economic textbook to lower rates in terms of the target, but it does create a lot of room for the new administration if they have weakness in any kind of the economy because of their initiatives. The Fed put us back. They have a lot of room to move.
Your colleague is sort of edifying your points as you say them, Torsten Slok, moments ago. Inflation reaccelerating, to your point about not necessarily needing to lower rates further. You talk about credit being the sweet spot and debt, maybe even over equities. And that has been the story over a long period of time, this past couple of years. If inflation could be reaccelerating, could you see that story changing at a certain point?
Yes, you could, and I guess listen, there's a lot of consensus out there about where the S&P is going to go, where rates are going, but in our view, in the backdrop, the U.S. economy is still the strength of the globe. It's the beacon of economic opportunity. We still have a lot of economic growth in terms of the industrial renaissance that we've been talking about. So, in our view, the breadth of credit, investment grade as well as non-investment grade. We try to find areas of dislocation or areas of mismatch of capital and opportunity, and we're still seeing it in credit versus the equity markets. Now, when you look at the S&P 500, I would say that it's interesting. We all know what the Magnificent Seven are, but certainly the other 493, a lot of unloved opportunities in that basket. And there's probably an opportunity in a non-consensus view in terms of those companies in terms of just pure economic growth. But we are still, listen, private credit and private capital has been the engine of economic growth in the U.S. And I will, again, I said earlier, it's not a great irony. It's a great irony that the U.S. has been the bastion of economic growth with the embracing of private capital. But, one of the greatest investors in U.S. capital history, Warren Buffett and Berkshire. When you really pull the covers back on Berkshire Hathaway, of the $1 trillion of assets at the end of 23, 30% are in the public equities that we know about, Apple, Coca-Cola, American Express, B of A, but 70% are private companies. It's the growth engine. He's the greatest capitalist. He's been doing it for 50 years. That's where growth and opportunity is in America. Private capital in private companies. And they have access in the debt markets. They don't need to go public to raise capital anymore. 8,000 public companies to 4,000. That's the trend in the future. And we're sitting really at an intersection trying to bring those opportunities to the broad group of investors, retirees, and savers around the globe.
So you mentioned Europe, and Europe, certainly the bank channel is overburdened. We've been talking about this for years, the Europeans have. Draghi talked about trying to do something with public markets in the same way we have here in the United States. It's not happening. I want to understand from your perspective how you will work with the banks in America going forward from here, because there's a start of a new trend where the banks will originate the loans and then you'll provide the money. How's that going to work in years to come? How big could that opportunity be?
Oh, I think 24 was a pivot year. You know, for us as a leading firm in this industry and in this sector, you know, there was a great headline, and you and I talked about, the three of us have talked about it on this show many times, where the great battle between private capital and banks. The reality is, if you look at the commercial dialogue going on between the top 5, top 10 institutions and the handful of us that lead our industry, the amount of integration, dialogue, working together on big deals has never been deeper. Obviously, there was our Citibank transaction, our Citigroup transaction. There was a transaction we did with Standard Chartered, BNP. And so I think we're still at the early days. These partnerships need to have substance. They can't be, excuse the phrase, shotgun marriages. They have to be ones that really have substance, dialogue, trust, and some history of doing a lot of transactions together. We've been fortunate in all the ones we've put together where there has been a lot of either history of personnel or of activity. But I think still it's early days, early innings. Now, there's a lot of headlines just to grab headlines, and there's not a lot of substance behind them. But I think that trend of private capital and bank partnerships is going to extend in 25 and 26. And I do think, if you think about the economic backdrop, I do sense that there is a great opportunity for strategic M&A. That clearly feels like it's going to happen. I'm a little bit more skeptical about the massive IPO window. If you look at the last 10 years, equity issuance has been about $250 billion, 50 billion IPOs, 200 billion secondaries. That's removing all the SPAC numbers. I think you still have a valuation issue with a lot of private equity companies that want to come out and do their IPO. And so I think we have a consensus view or non-consensus view at Apollo that number is going to be not as large as people think. And so the big mismatch, if you have a big credit market, a big equity market, this area of hybrid in between, which we've been talking a lot about, applying capital to those over-levered companies, that's the opportunity of 25 and 26.
Just to build on the IPO issue just a little bit more, is that just a valuation issue, or do you think it's a role that you have to play here, that these companies don't need to go public anymore?
It's a combination of both. It's a great question. I think it is a valuation issue for probably 50 to 60% of them. I think it's very, very clear now private companies have access to all sorts of capital, debt and equity, preferred, convertible, whatever it may be. And so the typical route where you needed to go to have your employees be able to monetize their investments, broad-based capital, equity, revolvers. You saw what OpenAI did several months ago, bringing in a bank facility. There's tremendous pools of capital, private capital, that can fund and finance these companies. So going public is by no means the ticket to liquidity that you needed in the past. A lot more options.
In 5 to 10 years, will there be a difference between public and private markets?
We don't believe so. I think there will be some differentiations, and I think the question that gets raised right after that question that you ask is, well, is there going to be a massive compression in yields? And the advantage is going to go to those folks that have the bigger, you're going to make money on the origination. The ability to make the $3, $5, $7, $10 billion commitment to XYZ company, that's where you're going to garner the extra spread. But all the things that we're doing in origination, in capital formation, in trying to bring some liquidity to these markets in terms of secondary activity, with transparency and price discovery. I think the barriers and what's private is risky and what's public is safe. I think those barriers will be coming down. And again, I go back to this Berkshire. No one really talks about it, but it is quite an irony that the greatest public investor of all time, 70% of those companies, when you look at the web page, these are some great American companies. And over 50 years, he's assembled them, and they're massive compounders. And that's 70% of the underlying value. Geico being at the top, Clayton Homes, BNSF, many other great companies. And I think that's a lesson for us all. There's companies that are private and there's private equity. You should differentiate between the two. But we clearly want to be part of that big trend and offer those to investors and retirees around the globe. It's a big change in market structure.
You're going to be sticking with us to talk about that change in market structure and the changes we could be seeing in Washington, D.C. a little bit later this year. Jim Zauter there of Apollo Asset Management. Let's give you an update on stories elsewhere just briefly. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. More than 100,000 Los Angeles residents have fled their homes as at least 5 massive wildfires burned across the region. It's the worst natural disaster in the city in decades. AccuWeather estimates that the fire will cause $52 to $57 billion in damage, making it likely the nation's most expensive wildfire. Apple, meanwhile, says that it never used data from Siri to build marketing profiles and that it didn't sell that information to anyone for any purpose. This statement comes after Apple agreed to pay $95 million to settle a class action lawsuit alleging that user privacy was violated when human reviewers listened to Siri recordings. Apple says that contractors listened to recordings only to improve Siri's voice recognition, and recordings are only retained if users explicitly opt in. And in English football, some big upsets. Tottenham edged out Liverpool in a 1-0 match in the opening leg of the semi-finals at the EFL Carabao Cup. 18-year-old Spurs midfielder Lucas Bergvall scored the winning goal in the 86th minute. The match follows another upset, Newcastle's win over Arsenal in their semi-final match earlier this week. Arsenal coach Mikel Arteta complained of the quality of the balls being used in the tournament. Both teams will face off in the second leg of the semi-final in early Feb. And that's your brief. John.
Hey, Danny, thank you. Who put Tottenham in a brief? Who did that? Up next on the programme, cutting the red tape.
Any business that invests $1 billion or more in the United States will be eligible for fully expedited permits and approvals, including environmental approvals from the federal governments.
That conversation up next, live from New York City. This is Bloomberg.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress. By deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
Equity futures on the S&P 500 negative by close to 0.2%. If you check out the bond market, stabilising a touch. We're down 2 basis points, call it down close to 3 on a 10-year, 466. Over in the United Kingdom, things stabilising just a little bit. I won't get too excited. Yields are still higher by 3 basis points. The 10-year over there, 482. And the Savannah's this morning, cutting the red tape.
Any business that invests $1 billion or more in the United States will be eligible for fully expedited permits and approvals, including environmental approvals from the federal governments. They took away 625 million acres of offshore drilling. Nobody else does that. We're going to be drilling soon. We're going to be opening up Anwar. We're going to be doing all sorts of things that nobody ever thought was even possible.
So here's the latest this morning. President-elect Donald Trump pledging to draw global investment to the United States, slashing permits and approvals for investments of $1 billion or more. Trump also vowing to overhaul the nation's energy sector by opening more space for offshore oil and gas drilling. Jim Zauter of Apollo is back with us. Jim, I've got to ask you this, and we can move on quickly if you want to. How close were we to losing Mark Rowan to the swamp down in Washington, D.C.? How close did we come?
Well, I think that the administration saw an amazingly bold thinker and who would have had a huge impact on the future trajectory of our economy and our the far-ranging responsibilities of the Treasury Secretary. And I think he was, very engaged in the process. But America's loss is Apollo's gain, and we certainly feel we have a great, deep management team that could carry the water in his absence. But he was very engaged in the process.
Let's build on your gain, and that's diplomatically put. In early November, when we got this election outcome, your stock was like a rocket. What were investors seeing? What do you see as an opportunity of the incoming administration? What kind of changes are you expecting that might benefit your business?
Well, I think they've seen in our particular example, we've been a company that has grown over the last decade by being at this intersection between retirees and investors around the globe and companies needing to raise capital. And as the markets have evolved, we've continued in a low rate environment and a high rate environment. We've been able to continually, 15 to 20% growth of our business every year. And they see that in an environment where we're going from an administration that was clearly not pro-business and not as pro-growth to one that clearly is pro-growth, a regulatory environment that clearly has changed. So I think the view has been, if these folks have succeeded so well in an environment where there's been an administration that was not cheering them on to one that's clearly cheering them on, that's a better backdrop of a broader success. And I think that's what we're seeing right now. Certainly the refreshed view of a regulatory backdrop, this refreshed view of M&A, the refreshed view of bringing capital into the United States and having capital really provide a lot of this growth, whether it's in technology, whether it's in the onshoring of companies. We're feeling the backdraft of that, which I think is very, very positive.
Well, I want to pick up on that, the idea of financing some of the technological advancements. We've heard a lot about that, whether it's some of the warehouses, whether it's some of the energy grid. What areas is Apollo going to double down on as a result of maybe more free permitting, more acceptance, and frankly, some of the sentiment that you were talking about?
I think you've identified them. Certainly when you look at the big TAMs of infrastructure, of data centers, of the utility grid, of that broad infrastructure, all of those by many, many investment-grade companies, even the highest-rated investment-grade companies. Witness what we did last year with Intel. There's a whole slew of those that are looking at massive CapEx needs, and we've talked about it here in the past. As much as the investment-grade market is a very robust, open market, a lot of the growth that these companies are confronted with are well in excess of what can be financed purely with the investment-grade market with their existing ratings. So you've identified 4 or 5, and they're really in those big pools of economic growth of infrastructure, technology, digital, data, all of those areas, which many U.S. companies, as well as the onshoring of foreign companies coming to the U.S., wondering how they're going to finance these activities. So, as I said before, since the Intel transaction, we have been incredibly busy. I would argue I've used the term phone ringing off the hook about the dialogues we've been in with a variety of these investment-grade companies looking to finance their business in a variety of manners.
And certainly there's a belief that the incoming administration, Lisa, is going to have a more pragmatic approach to the energy needs that are going to be required to support some of these shifts. That's for sure.
With respect to drill, baby, drill, there has to be a host, though, of different energy provisions, and that's one thing that we keep hearing. Key question for a lot of people is how consistent can some of the regulatory parameters be, and that's why some of these connections are for many years in terms of the investments and some of the big tech companies that are making some of the financing.
Well, also, these are long-duration investments, and again, this is another theme that really came to the surface last year in terms of what the market has really embraced is the duration of the capital that we have with our annuity and retirees that many of our peers have as well, but the scale and the integrated manner that we've brought that to the forefront, I think that's what the market has embraced.
Jim, you're one of the best. We appreciate your time.
Thank you.
Thank you, sir. Jim Zauter there of Apollo Asset Management. Up next, Alex De Silva of AccuWeather as devastating wildfires continue to threaten Los Angeles.
this gig. You get comfortable being uncomfortable. The enemy is always adapting.
Hey, handsome.
Always iterating.
Equity futures at the moment pulling back by 0.25% on the S&P. We're down by about 1/3 on the Nasdaq 100. On the Russell, would you believe it? The Russell is basically flat since the election. After that massive month of gains in November, we took almost all of it back in December and some to kick off 25. It's kind of amazing, isn't it?
It is amazing until you see the buzzkill, which is bond yields, and then you say, wait a second, this is exactly what some people warned, that the stock market would like some of the proposals, the bond market wouldn't, and oh yeah, the bond market might be in the driver's seat.
Fireworks in the global bond market. Let's get you some of those fireworks right now with Bloomberg's Manus Cranny. Morning, Manus.
Jonathan, Lisa, good morning. You're right. The depth charge that started in the United States was a debate about term premium, not about inflation. It was a debate about the trajectory of the Fed. We've broken trend, so yields are down by 3 basis points. This is a bear raid, not vigilanteism. That has got to be put in context. We've sort of broken higher, but not to the extent that you saw in 1994, where bond yields exploded by 5%. So it erupted here, and the triage is for the rest of the world. And what do I mean by that? We're going to begin to discover who really is swimming naked when the tide goes out, fiscally speaking. And this is where the disruption is in the United Kingdom. Levels that you haven't seen since 2008. Again, put in context. People are talking about a Liz Truss moment. This is not a Liz Truss moment in the bond market yet. In 2022, the bond market erupted by 100 basis points over the period of a couple of days. This is 30 basis points in the space of a week. But what we have here is, how do you constrain this? And I like what you said earlier from Jordan Rochester's note. I mean, people in the brokerage community are saying the great British peso and the Istanbul on terms. The question is, fiscally, what happens in the United Kingdom? And when you have Martin Wheel, ex-Bank of England, talking about 1976. 1976 is when the UK went to the IMF for a bailout. That's not what people are calling for, but Martin Wheel is writing about it. So how do we stop the rot? Have a look at the US bond market. One big, beautiful bill. That is the narrative. That is the mantra from the Biden administration and from President-elect himself. The question is, what triggers a real dislocation in this bond market? Is it additional tax cuts above $5 trillion? The real yield is the important thing here, Jonathan. And what you're seeing is a mini bear raid in the US, morphing into a global dislocation. But this is a lesson for this US bond market, that if you push the fiscal envelope too hard and too fast and too aggressive, the whipsaw can be pretty monumental. 1994, go check.
Manus Cranny, you lived it. Appreciate the update. Thank you very much, sir. Looking forward to payrolls tomorrow morning. 165,000 is the estimate in our survey. The previous number is 227. There's been a few occasions over the last 12 months where we've said good evening Tokyo, because we believe that Japanese authorities are following the economic data so closely, given what was happening to dollar yen. I think we've got to say good afternoon, London, tomorrow morning when we get those numbers, right? That's going to be a big issue for the UK.
Even more so than good afternoon Tokyo, because Tokyo is doing just fine with some of the wage increases that they've seen. It really is now about the United Kingdom and, frankly, about Europe that's feeling some of the pressure from higher yields globally that are impacting markets that don't have the same amount of growth.
Under surveillance this morning, gilts extending a fourth day of losses on concerns the UK's Labour government will struggle to keep the deficit in check. Some investors drawing comparisons to both the 22 gilt crisis and the 76 debt crisis when the UK government asked the IMF for a bailout. The pound also falling to a multi-year low. Pound sterling, Lisa, 122.78.
This is important. Essentially, what this shows is that as yields go up, fewer people want to come in, and that is going to be really the hallmark of the great British peso, as we just heard about from Jordan Rochester, that was mentioned by Manus. This is really the concern. How much is this becoming an emerging market type of behavior that really does make it difficult for this administration to alter the ship?
Well, let's talk about that administration. They've got internal problems and external problems. The internal issues, spending too much money. One, on the monetary policy side, QT. Probably not the best time for QT. Let's see what happens there. Then there are external issues. They're importing weak growth from Europe. That weak growth is being imported from China. And then you've got what's happening with global markets, driven by the United States, which is the point that Manus was making. The external issues are much, much harder to address. growth's not going to pick up anytime soon on the continent. It's basically flatlining to worse in certain regions. And in the United States, this administration is hell-bent on making sure that we live in a high nominal growth world in the United States of America. And so long as that's true, there's going to be pressure on bond yields upwards, and that's going to be exported to the rest of the world, and we're seeing that play out in the gilt market.
There's one feature in this scenario that you paint very well that's interesting to me, which is that in the UK, they're trying to raise taxes to pay for some of what they're doing. In the US, the goal is to cut taxes to juice growth. That divergence right now is benefiting the US at the behest of the likes of the United Kingdom. And I'm curious about the history books of how that gets written.
It's a real crowding gout. It's been a theme of this program for the past few weeks. There's a real crowding gout taking place. Let's keep it here in the United States. President Biden planning an additional round of restrictions on AI chip exports. Sources telling us here at Bloomberg that Biden is looking to curb the sale of AI chips, including from sector giant NVIDIA, on both a country and company basis, focusing on development in friendly nations.
So there are a lot of questions here, not least of which is how much this is actually going to remain in place through the Trump administration. But it remains this issue of where is it okay for U.S. technology to be implemented outside of the U.S.?
What's a friendly nation?
What is a friendly nation?
Is Japan a friendly nation?
Exactly. And this becomes the heart of the issue of basically it's not just NVIDIA. This is a matter of Google or Microsoft creating a data center in another country, because that also is within one company exporting those chips in order to create that center. So how narrow is our group of allies, and what was the goal of this particular credo at the twilight of his term?
The Biden administration having a very busy close in the last few days, that's for sure. The president also cancelling a planned trip to Rome as wildfires continue to threaten Los Angeles and surrounding areas. The White House saying the president is staying in the United States to, quote, remain focused on directing the full federal response in the days ahead.
Well, and this is probably more on par with the tone right now than, say, the mayor of Los Angeles, who I believe is still not in the United States, is still in Ghana. But there's this question here about how you prevent this from going forward, and then how you tackle this in real time when they're running out of water. I mean, it's an absolute catastrophe, and it raises a lot of questions structurally about how you prevent this, how you redevelop, and frankly, how you insure properties where a lot of them had stopped being insured because the insurance companies couldn't raise the premia. So they just got out of California altogether. It creates this real mess.
A victim of their own regulations.
Well, we can call it whatever we want. We're going to be dealing with the aftermath for quite a while.
Difficult to track the mayor, but I believe the mayor is back. But I think I think the issue that the mayor has got is the issue that the president of the United States has got as well. Let's be honest. I'm not sure how much the president of the United States is actually doing right now to help out on this situation. But if he was in Italy, he'd be criticised, that's for sure.
So it's a public relations thing. Sure, he's not out there fighting the fire personally, but a lot of this is an important tone. You need to show, if you've got 100,000 people who have been evacuated from their homes and more, and there are hundreds of homes that are being demolished, I mean, a joyride?
Let's keep it on the wildfires. Those wildfires forcing more than 100,000 residents to flee the area's worst natural disaster in decades. AccuWeather estimating the total economic damage will be between 52 and 57 billion US dollars. Joining us now is Alex Da Silva of AccuWeather. Alex, thank you for joining the program. What's the latest this morning?
Yeah, we still have 3 major fires burning on the north side of Los Angeles right now, all of them less than 10% containment right now. There's even a few fires that have popped up around the area as well. Those are much smaller and do have, fortunately, some containment. But again, those 3 major fires, the Palisades, the Hearst, and the Eaton fire, all 10% or less containment. Now, let's take a look at the winds. What are they doing? Because that is the major question. Are these fires going to get worse? I have some good news. The winds did back down considerably last night, but it does look like they're going to pick up a little bit today into tonight. So we're looking at winds of 30 to 50 miles per hour. The good news is that's down from the 70 to 90 miles per hour that we've been dealing with over the last day or so. But again, still going to be windy across the Los Angeles area. I do think that these fires are going to continue to make some progress. But again, the winds have come down a little bit, so the firefighters should be able to make at least a little bit of progress as we go throughout the day today. Like you just mentioned, AccuWeather estimating $52 to $57 billion in economic damage from these wildfires. It's not just the physical damage, it's the tourism damage. And it's a lot of those repercussions that kind of come after the event. So it's not just about what's going on currently, it is how are these going to impact the future? And so that's all baked into this estimate of $52 to $57 billion in damage. The question is, how does this compare to other natural disasters? On top, you see the $52 to $57 billion in the California wildfires. In the 2020 wildfire season, many of us remember that was such a destructive season. That was 130 to 150 billion, but that was over the course of the entire wildfire season. This is almost half of that, and it is in just a couple of days. And then you can see how it compares to Hurricane Helene with over $200 billion in damage.
Do we have a sense, Alex, of who's going to be paying for some of these damages?
Yeah, I'm not sure. I think the federal government is probably going to be aiding in some of these repairs that are going to have to be made. But like I said, the damage is not done yet. It looks like that some of these wildfires are going to continue to spread. So, certainly a disaster declaration will have to be declared probably in this area, and federal money will have to come in, I think, to the Los Angeles area.
Alex, appreciate your time this morning. No doubt we'll catch you up with you before the weekend. Alex De Silva there of AccuWeather on the latest in Los Angeles. With an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. First, the latest in the battle to stop those wildfires. The U.S. military is ready to help. Defense Secretary Lloyd Austin said the Pentagon will provide aircrafts to help extinguish the flames from the sky. At least 5 massive wildfires are burning across Los Angeles, as we were just hearing. 27,000 acres have been scorched, 5 people have been killed, and 100,000 have been forced to flee from their homes. A union representing U.S. dock workers has reached a tentative deal with port operators for a new 6-year contract that avoids a strike. Bloomberg has learned that the agreement guarantees union jobs when certain technologies are implemented. That includes the semi-automated cranes that had been a sticking point. The deal still needs to be ratified by the two sides. Hershey is asking the U.S. government for permission to buy huge amounts of cocoa. Concerns surrounding the global shortages of the commodity have soared, and record high prices expected to persist for a 4th straight year. Hershey is seeking to purchase over 90,000 metric tons of cocoa. That exceeds the U.S. Commodity Futures Trading Commission's limit. And that's your brief. John.
Danny, thank you. I'm surprised there's actually that much cocoa in Hershey's.
Oh, really? You're going to go there?
I'm just saying I'm surprised.
I was just going to say that explains why I couldn't get my bushels.
How much chocolate is actually in the chocolate?
Okay, I know.
We'll talk about this another time,
all right? How do you eat our chocolate?
Love chocolate.
Do you actually look at the percentage?
Yeah.
Of course you do. And you only do above 70%,
like
right?
60% and up.
60% and up is okay?
Like that,
you can do that.
That's too high, I sneeze. Got an allergy in there somewhere. Up next, seriously, Donald Trump's agenda turning into reality.
Given our small margin in the House, we're going to need everybody's vote and everybody on board. Our Senate and House Republican majorities are going to have to work together.
Seriously, I don't know what it's about. Anyway, down in Washington, up next on the program, we'll catch up with the former Speaker of the House, Kevin McCarthy, sitting down with Anne-Marie.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Equity futures on the S&P 500 negative hit by 0.2%. Call it down by 0.3, 0.25%. Yield to number 2, that's helpful. We're down 4 basis points, the 10-year 4.65. Under surveillance this morning, Donald Trump's agenda turning into reality.
Given our small margin in the House, we're going to need everybody's vote and everybody on board. Ultimately, our Senate and House Republican majorities are going to have to work together. Nobody's going to get everything they want out of this. There's going to have to be a good faith negotiation if we have any chance of passing a reconciliation bill.
So here's the latest. President-elect Donald Trump is back on Capitol Hill discussing his priorities with Senate Republicans and telling reporters whether it's one bill or two, there will be results. Anne-Marie joins us now down in Washington with the former House Speaker Kevin McCarthy. Anne-Marie.
Good morning, Jonathan. Well, I love what Majority Leader John Thune said. It's clear as mud in terms of the sequencing, but the priorities are clear for President-elect Trump in order to get his agenda through. And we're going to talk about that right now with former Speaker of the House, Kevin McCarthy. You know how challenging it is with slim majorities to get anything done in Congress. What's your advice to President Trump? Does he go for this one big, beautiful bill, or does he lean on the Senate, who wants to see a two-track approach?
I think one bill is the right answer. And this is why. You've got to understand for you.
But is it big?
Well, this is the point. It's different, okay? This is the first time in modern history the majority in the Senate is larger than the House. So the Senate's going to have a different view. They've got 53, but they really have 54 by having the vice president. The House even has a smaller majority than it had in the last Congress. They lost seats while everybody else won. Plus, come January 20th, they're going to lose 2 more members for a time period. Those 2 Florida seats won't get filled till April 1st, and then the New York seat won't get filled till after that. So you can't take that many bites of the apple. And remember for your viewers why you're doing reconciliation. It's a special provision that allows you, if your party controls the Senate and the House, to pass in the Senate without 60 votes. But you can't write a perfect bill. So this is how the Democrats did Obamacare. It's how we did tax reform. You've got tax reform you have to get done by the end of the year. Otherwise, your taxes all go up. So the pressure is on you. If you make the bill too big and too beautiful, most in history, it collapses upon itself because it's too big. The reason why they're looking at 2 different bills, they need money now for the border. But I believe the border is a disaster. Declare it a disaster. Pull money from the disaster fund. You're going to be putting more in for Californians and let you do the border right now because tax will take a little longer. The other problem they have, though, is they made a mistake. They never finished the funding from last year, and this is a disadvantage for Trump. They hurt Trump by making him worry about last year's funding now, which is due in March.
Was that a fault of Speaker Johnson?
I don't know whose fault it is, but they should have got the job done, okay? And they should have done the debt ceiling already. So these are 2 provisions that the Democrats could use to an advantage and slow down your agenda. So the first thing I would do, you still have time now, finish the funding from last year and take care of the debt ceiling so President Trump could have the honeymoon or the agenda he wants to start putting forward. Because we're now they got to confirm in the Senate the new cabinet. He's got to get his people in line to start working. But President Trump knows this job already. He knows he's got 4 years. He's not going to waste one moment. He'll do tremendous on the executive orders, but he needs the legislative body to catch up to him.
Who's going to be that moderating voice to make sure that it's not too big so that it doesn't actually collapse?
Well, it's what I love. It's the free market. It's a natural that you'll see.
So you think it's this bond market? We've seen yields go up. People starting
to
be very
that's going to be on
the
debt.
Financial discipline. Do you think the bond market does Congress have room to spend as much as Trump's rhetoric is talking about?
Well, the problem is Trump's just now coming in. It's like I'm taking over a company. And remember what the debt ceiling is. You've got to give him leeway. So all it says is paying the debt that the last people had spent. But the debt ceiling doesn't solve all these problems.
The market right now is pricing in his future plans and spending. Will that be the moderating force?
You're not counting in Doge, okay? And what I look to Doge, I think this is good because it gives people the opportunity. But the way to handle this, and I tried to get Biden to go for this, in 1989, the Soviet Union collapsed. So we needed to reform our military, all designed to fight the Soviet Union. But what member was going to raise their hand and said, close my military base? Nobody, but you need to. So you created a commission, but this was the important part. You had teeth to it. If they got their work done, it got a vote in the House and the Senate with no amendments. And lo and behold, it passed. They need to do something like that for Doge. When Doge gets their work done, let them vote in the House and the Senate with no amendments, and you'll know whether you can get it. I think one of our greatest threat is our debt, okay? But we've got to do a lot of things going forward. The debt ceiling is not a part of that. You should take that out of the way, let the president be able to govern, do the job that has to be done.
Are you feeling that this can potentially be done, though, in April, what Speaker Johnson's talking about? All of this? New spending, reconciliation, and a disaster?
Well, I think it's hard to say by April 1st because you haven't put every vote matters. I'd wait till the Florida seats because that's 2 more seats. You can't get tax done that fast because remember, tax, they're going to do something about salt. They're going to do something about tax on tips. That costs money, so how are you going to pay for it? But you've got to start working on the border. So take that money from disaster and do the executive orders. Get that done. You want to do something on energy. But if you put the debt ceiling to reconciliation.
Which is what people are talking about.
That won't work. And this is why. Because there are members in the Republican Party that will never vote for it. And you have no votes to spare.
The House Freedom Caucus.
Yeah. So you should.
Who wins that fight, Trump or the House Freedom Caucus?
Well, no. Trump will always win. House Freedom Caucus loses from that perspective because the House Freedom Caucus is then saying to the American public, your taxes are going to go up. And you know, you've watched in the House Freedom Caucus, their former chairman was anti-Trump. They have anti-Trump people in that caucus, and it's unfortunate. So nobody can fight here. They've got to focus on priorities, but they've got to focus on the policy. You're not going to get it 100% right, but government isn't designed that way, right? You've got to have conflict because you've got to deal with the Senate. But you'll get this done. It's in the sequencing of how you do it.
I also want to ask you, you mentioned California and the disaster at the top. How do you think Trump is going to deal with when he's inaugurated and the incoming tragedy, devastating fires that are apocalyptic, people not having their homes, not having enough water, not having enough firefighters? How is he going to work with Democratic Governor Gavin Newsom to solve this crisis?
There's a third point, too. A lot of these families lost their insurance in the last 6 months because of Gavin Newsom's inability to deal with this problem. You know,
the insurance companies wanted to raise the rates.
They wanted to be able to make sure they can afford to insure. When he wouldn't focus on that issue, they have left the state. My mother lost her homeowner insurance from Geico, and she had no claims because California was uninsurable, and they ignored the problem. He gallivanted around. You know the saddest part about all of this? We've had these fires before. I went out to California with then President Trump, November 17th, 2018. We just had Paradise, where 85 people died. And we toured that with Gavin Newsom, who had been elected governor, not sworn in, and Jerry Brown. And then we flew down to Malibu that had a fire as well. I was in the meeting walking these places where President Trump is saying, you got to take the fuel away. Yeah, you're going to get a fire when there's wind and push it, but if it doesn't have fuel, it can't keep growing. The other problem, too, is had you worked on the evacuation ahead of time, instead of these cars getting stopped and people, that's what happened in Paradise. What about the infrastructure? You can't go to a fire hydrant and not have water. And President Trump worked on providing the water further, and you know who fought him on it? Gavin Newsom.
But looking ahead, Trump is going to come in and want to make sure that California gets the money they need.
I think you're going to see Trump will be there for California. But what Trump's going to do, too, is you can't keep repeating the same mistake. I think you're going to see executive orders pretty early about the water again. The President Trump did that last time. Had Gavin followed through, we would have had water. President Trump was very serious about making sure taking out that fuel, protecting it, managing it so you won't have that. You're going to see him double down even harder on this. But California, the state, they've got to change their behavior. And I think what President Trump will do is put the mechanism is where Gavin cannot make this mistake again.
Since you left Congress, I know you've been focused on AI. I just want to end on this. But you've also become an informal advisor to President-elect Trump. You were at Mar-a-Lago just last week. Do you see yourself going into government, or do you like being that call on the outside?
Look, I served for a long time. I want to utilize the knowledge I have from being Speaker and everything else, and also on the outside, that Congress starts looking at the issues the next 50, 60 years. I mean, if Congress is looking back to do the funding from last year, we're losing the battle for the next century. And I firmly believe whoever captures AI and quantum, so these are all the issues I worked on while I was Speaker. You know, I went to MIT, which teaches a course to all the generals in our military. 4 years ago, I happened to develop a course to teach it to all of our members of Congress. The China Select Committee, right? The AI Committee. So whoever captures AI and quantum has the advantage. But if you want to capture AI and quantum, you've got to get the energy policy right. Otherwise, it'll never happen.
Yeah, the data centers.
So what I'm doing in the Alpha Institute is literally just policy, showing a roadmap for the policymakers to solve those problems. Just continue what I did while I was working there to help the policymakers and America succeed and be successful.
Former Speaker of the House, Kevin McCarthy, thank you so much for your time. John, it's clear he thinks one bill, but it might not be so big.
We'll see. Watch this space. A big space. Maybe a really big space, or maybe not at all. Look, we're talking about numbers of 4, 5, 6 trillion. We spoke to a guest just yesterday who was expecting a bill as big of $6 trillion US dollars from this administration.
You're not counting Doge. That ultimately is going to be the question. But this is the issue, right? How do they get those cuts through when this isn't necessarily a cabinet position? That's going to be actually one of the most interesting aspects of these negotiations.
I agree. In the third hour of Bloomberg Surveillance, here's your lineup. Greg Battle of BNP Paribas, Craig Moffett of Moffett-Nathanson, Jonathan Pingle of Natixis, and Terry Wiseman of Macquarie. From New York City, this is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
The equity market can move higher, but obviously people are worried about more of a melt-up in rates.
Rates are the things that pressure equities.
A lot of uncertainty with regards to what's happening in terms of bond yields.
Fiscal deficit, inflation issue that's not solved, all of that is in the mix and it's pushing up yields.
I think the bond market here is pricing in the worst case scenario for what the upcoming administration could or might do.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 just a little bit softer. We're down 0.1% on the S&P. Some important times for today's session. Anne-Marie's down in Washington, D.C. to observe a day of mourning for the late President Jimmy Carter. That funeral taking place. It means some changes to market openings and closes. The cash equity market will not open today, so that is closed. Equity futures are trading, but they will cease trading at 9:30 Eastern Time. And the cash treasury market will close a little bit earlier today at 2 p.m. Eastern Time. So some times to think about as we progress through the market day. As we think about the bond market, let's check out treasuries to begin with. Treasury yields are heading just a little bit further lower. On a 10-year yield, we're down by 4 basis points. On a 30-year, we're down by 5. So pulling back from these multi-year highs. In the UK, things stabilising as well. Lisa, looking at the gilt curve right now, just about unchanged.
Which raises this question about, again, how much the U.S. is setting the tone for the rest of the world. If there's a bid in the U.S. Treasury market, does that give a reprieve to Rachel Reeves and the entire UK government that's grappling with something that rhymes with Liz Truss? Maybe it isn't exactly Liz Truss. And Liz Truss came out yesterday with a cease and desist letter to the government saying, guys, I did not torpedo the economy.
Do you feel sorry for Liz Truss yet? That every time there's a bond market sell-off, it's called a Liz Truss moment.
Well, maybe she should just embrace it because
it's
not going away.
Lehman going under, like a Lehman moment, and now it's a Liz Truss moment.
Do you imagine if that was like sort of your reputation? Well, that's the reason why she's sending a cease and desist letter yesterday, right on cue, as we get something that rhymes somewhat with, I have to say it, a Liz Truss moment.
The global bond market will be focused on one data point tomorrow morning, 8:30 Eastern Time. Payrolls Friday. 165k is the median estimate in our survey. The previous number is 227. I think that the British authorities are doing that. Talked about this yesterday and saying, please, a downside surprise.
Yeah, although I've been thinking a lot about this. Would it be something that would be positive for risk assets in the U.S. if you did get a downside surprise and then the commensurate rally in the Treasury market that a lot of people are expecting? On one hand, you take some of the pressure off from yields. Well, that should be a good thing for stocks, given that the relationship has inverted recently. On the flip side, there is this issue that if you have weaker growth, what is the argument to keep going into stocks at elevated valuations at a time where we still haven't left inflation behind?
Equity futures right now down by a little more than 0.1% on the S&P. Coming up this hour, we'll catch up with Greg Battle of BNP Paribas. As last year's rally hits a little bit of a wall, Craig Moffett of Moffett-Nathanson on why Apple is due for a big pullback. Look out for that. Big call from that team. And Jonathan Pingle of Natixis, the most accurate forecaster of payrolls on Wall Street. We begin this hour with stocks inching lower as investors await tomorrow's payrolls print. Greg Battle of BNP Paribas saying volatility dynamics have been consistent with what we described earlier in the year as late cycle exuberance. Stretched valuations, positioning excess and volatility suppression have all started to amplify risks of disorderly corrections. Greg joins us now for more. Greg, good morning.
Good morning.
That's a Bramo-type statement there at the top of this programme. Disorderly corrections, where are we seeing those?
Yeah, so I think we got like a little bit of a sense of that in December, where what we had is this environment where equities were trending higher, huge inflows came into the market post the election. And then when we had a negative catalyst, we broke from this very low volatility regime into a big risk-off move. We got a 3% down day in the S&P. We got a 12-point one-day increase in the VIX. large dislocations based off of the kind of negative surprise associated with the FOMC. So that's, we think, a little bit of a playbook for some of the environment that we could be in for this year.
That goes against some of the hopes and dreams post-election of a market that broadens out. And then we saw all this negative breadth, that the Russell, the small caps would start performing, and then basically the Russell's rolled over and we're unchanged since election day. What is it going to take for this market to broaden beyond Mag 7?
Yeah, I think the price action is amazing. We got these huge one-day moves the day after the election, and then we saw some follow-through, but that totally evaporated through December. So what we need to see is evidence of breadth coming in from earnings season, and we need to see this kind of macro environment remain in a kind of Goldilocks type state where the data is good. We do need strong nominal GDP growth, but not too hot that the bond market derails things.
I'll take your disorderly corrections, and I will counter it with something Nick Colas of DataTrek was talking about, which is he lived through the 1995-1999 period and the subsequent 2000 to 2002 period. And he said the hallmarks of the sell-off was higher volatility. And we're not seeing that. So without that, and given the fact that there's something behind some of the dynamism people are talking about, he remains fully bullish. Why do you reject that? Why don't you think that it is an indicator that we haven't seen a real spike up in the VIX?
What we've seen is quite a nuanced volatility market. So if you do look at the VIX behavior through the second half of 2024, you do have some evidence that it...
Guys, US market की candle open हो चुकी है. न्यूज़ मैंने बताया था रसिया यूक्रेन के रिगार्डिंग स्पेशली यूएस सैंक्शंस लगाने वाला है. रसिया पे नए लगा दिए हैं, उसका एक इम्पैक्ट देखने के लिए मिल रहा है. मार्केट मॉर्निंग से कम्प्लीटली बुलिश है. अच्छा रेजिस्टेंस था ये, 15 मिनट का नहीं 30 मिनट का रेजिस्टेंस था. मार्केट ने उसको भी होल्ड नहीं किया. एक कैंडल देख रहे हो, सीधा ओपन इक्वल टू लो बनी, ऊपर निकल गई. नेचुरल गैस एक फेक ब्रेकडाउन देने की कोशिश जरूर करी 630 जो न्यूयॉर्क सेशन था उसकी कैंडल की ओपनिंग पे, बट रिकवर कर गया और फिर टारगेट हिट. रेजिस्टेंस से सेलिंग किया, थोड़ा ट्रेल करना. ठीक है, ये भी थोड़ा बुलिश ही लग रहा है ओवरऑल. टारगेट इतना जरूर है बट ट्रेल. बाकी क्रूड ऑयल में और ऊपर कोई रेजिस्टेंस देख लेते हैं भी या नहीं 30 मिनट टाइम फ्रेम पे, बिकॉज दैट इज़ द ओनली रेजिस्टेंस जो कि 30 मिनट में दिख रहा था. 15 मिनट में तो चार्ट ही नहीं दिख रहा है उसमें. ऊपर भी रेजिस्टेंस है, डे हाई भी रेजिस्टेंस ही है 30 मिनट, बट देखो न्यूज़ की वजह से मोमेंटम है तो थोड़ा संभल के ट्रेड करना. डे हाई भी रेजिस्टेंस ही है. ठीक है, ये भी एक रेजिस्टेंस है और देखना पड़ेगा ऊपर वाली रेजिस्टेंस से सेलिंग आती है या फिर ये थोड़ा सा और रिकवर करता है. ये सारे रेजिस्टेंस 30 मिनट के हैं, ध्यान रखियो 15 मिनट के नहीं है. ठीक है, ये भी एक रेजिस्टेंस है, यहाँ से भी सेल कर सकते हो बट थोड़ा ध्यान रखना क्योंकि ये भी जो रेजिस्टेंस था अब इसका ब्रेकआउट हो गया है तो ये कहीं रीटेस्ट ना कर दे. बाकी अगर ये रीटेस्ट ना करे, सीधा नीचे निकल जाए इस तरह से, तो फिर बड़ी सेलिंग एक्सपेक्ट करेंगे. दैट इज ऑल्सो रेजिस्टेंस. बाकी इस ट्रेड में एसएल जा चुका है, ध्यान रखियो. यहाँ पर जो एसएल था 30 मिनट टाइम फ्रेम के अकॉर्डिंग वो जा चुका है. ऊपर से किसी ने अगर सेल किया है दे कैन ट्रेल, अगर फिर से सेल करना चाह रहे हो फिर से कर सकते हो. रिमेंबर, यहाँ अगर सेल किया है तो ये रेजिस्टेंस सपोर्ट भी बन सकता है रीटेस्ट के तौर पे. तो बड़ी सेलिंग तभी आएगी जब ये 6600 के नीचे कहीं क्लोज कर दे. कि आज तो पूरा न्यूज़ भी निकल गया मार्केट क्रूड ऑयल का. डेटा भी अब 8:30 वाला ही है जो थोड़ा बहुत इम्पैक्ट कर सकता है प्राइस को, उसके अलावा और कोई डेटा नहीं है आज। कर रहा हूँ ये क्रूड ऑयल में जो रेजिस्टेंस बन रहे हैं ना, ये सारे के सारे 30 मिनट के हैं, 15 मिनट के नहीं है, ध्यान रखना। तो रीटेस्ट वगैरह ज़्यादा मत प्लान कर दियो डायरेक्टली। तो तेज क्रूड ऑयल वापस ऊपर क्यों जा रहा है बता दिया, न्यूज़ की वजह से। शुड आई होल्ड द ट्रेड? कौन सा ट्रेड है आपका मोहित श्रीवास्तव जी, कौन सा ट्रेड में हो? क्रूड नेचुरल गैस क्रूड बाई करके तो नहीं रखा है नीचे से कहीं? जी पर रुक रहा है क्रूड ऑयल, ब्रेक कर दे तो आ जाएगा नीचे। काफ़ी दिन बाद मेरी आवाज़ सुनी क्यों? कल तक मैं लाइव ही था। कंटिन्यूसली बोल नहीं सकता ना, थोड़ा सा इतनी हेल्थ भी सही नहीं है कंटिन्यूसली बोल पाऊँ, इसलिए मेन टाइम पर ही बोल रहा हूँ जब कोई इवेंट डेटा आने वाला है या फिर कुछ और।
To market cap weighted S&P is a bit of a catch-up trade this year. So I think if we end the year higher in equities, it will be because the cyclical
कोई बात नहीं।
Chair Powell, the macro data, the corporates, or Donald Trump, a combination of all of these things.
We've heard a few times this week is Jensen, haven't we? A couple of times on this program.
Which is bold, because then, there could be a phone call. Excuse me, let me tell you. And, from the White House.
Oh, you think Donald Trump's going to call market strategists and tell them?
He could call Greg.
He could call Greg himself.
He'd be like, really? You think that I'm not the most important guy in the room?
How are you coping with this cold in New York City, Greg?
The cold has been somewhat challenging.
Just two Brits talking about the weather, Bramwell.
Oh, yeah, I like how you
just let it happen.
Okay, go, please, go. Carry on.
So I have come armed with the sweater today. I think the windswept avenues in New York are a little challenging to navigate.
Would you swap it for the damp cold of the United Kingdom, though?
So I think this is a little bit like the markets, right? We're concerned about both tails here. So we're concerned about inflation and we're concerned about growth. I'm concerned about the UK.
30 डेटा है, ध्यान रखना गाइस, गोल्ड और सिल्वर वाले। लाइक भी करते रहो गाइस, 50 लाइक्स हो चुके हैं, 100 लाइक्स का टारगेट है। ये एफईजी ब्रेक कर दे, नेचुरल गैस आ जाना चाहिए नीचे। बाकी देखो क्रूड ऑयल मैंने बता दिया, ऊपर भी रेजिस्टेंस है, वापस सेल कर सकते हैं, बट ये भी रीटेस्ट की तरह काम कर सकता है, तो ये फंसा हुआ है अभी। अगर ये नीचे लेवल ब्रेक हो जाता है, जो ब्रेकआउट हुआ है अभी फिलहाल, तो फिर हम एक्सपेक्ट करेंगे जो टारगेट था वही 6515 का। नहीं तो न्यूज़ की वजह से तो सुपर बुलिश बना हुआ है, ऑलमोस्ट अपर सर्किट के पास। ब्रेकआउट अगर होता है डे हाई का फिर से,
Keep it right here on Yahoo Finance. That does it for Morning Brief. Coming up next is Catalysts.
Discover Schiller's respiratory diagnostic solutions. Accurate lung function tests such as spirometry, diffusion, body plethysmography, forced oscillometry, and more. To know more,
MongoDB is well positioned to shape the future of data management and continue to drive digital transformation across industries.
As I reflect on the past 10 years, I'm so pleased with what we've accomplished, and I'm very grateful to all of you, the employees here and around the world, who have helped build this company to what it stands for today. Thank you for helping us build something very special, and I truly can't wait to see what MongoDB does in the next 10 years.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills. We are 30 minutes into the U.S. trading day. Let's get to the three catalysts that we're watching this hour.
First up, a blowout jobs report hitting stocks today as investors rethink their rate expectations. We'll break down how to trade the changing rate landscape as treasuries fall off.
Plus, we break down the biggest geopolitical risks facing investors and how to navigate Trump's tariffs plans this year.
And TikTok's future is in the hands of the Supreme Court, which is hearing arguments on a bipartisan law requiring a sale or ban of the Chinese-owned app. We'll speak with the investor and Shark Tank star Kevin O'Leary about his bid to buy the app. That's next right here on Catalysts. Let's take a look at some market headlines to start the hour, sponsored by Tasty Trade. Taking a look at the major averages, still under pressure this morning following that better than expected jobs print by a mile from that jobs number coming in. Really hot here. You see the S&P 500 down nearly 0.9%, but a lot of the pain really in those tech-heavy large cap names. The Nasdaq down nearly 2% in the trade, and a lot of that is being driven by the action that we are seeing in the bond market. We've seen the 30-year in particular on the longer end of the curve continuing to push up, the 30-year hitting that key 5% level at one point this morning. You can see the 10-year up an additional 4 basis points at the moment. That bearish momentum in bonds potentially having more legs and momentum moving forward here, as throughout the week we have not seen buyers coming in, and that has given this move and bear steepening a little bit of more momentum here this week.
All right, well, the move today coming amid several bearish calls on the bond market, with ING forecasting the 10-year yield could rise to 5.5% by the end of the year. You've got T. Rowe out with the scenario and a call saying that there is a potential in the realm of possibilities that maybe we could even see 6% on the 10-year yield. So here to break that all down, where we're headed next, we want to bring in Leslie Falconio. She's the head of taxable fixed income strategy at UBS Global Wealth Management. Leslie, it's great to have you back here on Yahoo Finance. So we certainly are seeing a push even higher here in yields on the back of this morning's very strong jobs print. I think the next milestone that investors are closely watching is that 5% level for yields. Is that likely coming in the next couple of weeks?
Oh, you could absolutely see that 5%. I mean, that 501 was the October 2023 high. We're 25 basis points away from that. We have inflation numbers coming out next week, and still a lot of unknown in terms of policy. So seeing that 501 is definitely attainable, but we just don't believe it's sustained. And some of the reasons why we don't think it will be sustained is that when we look at what's happening, such as 10-year real yields at a 235, they're about 15 basis points below the high that we saw in October of 2.5. And at that point, I think in that over 5%, even if it is on like strong payroll like we saw today, we think risk assets, start to get a little bit nervous. So you could see 5%, you could see 5.10, but the question is whether or not it's sustainable. We just don't believe that it will be.
What level is sustainable?
Listen, we still think, we think growth is going to be trend down, but remain, above trend, right? So we still think growth is going to stay strong. Obviously, today's employment with, 256, it's the highest we've seen since March of 2024 and around the 48th consecutive positive number that we've seen. So the economy is strong, but we do think over time, growth will start to slow, but stay above trend. But we also believe that over time, inflation is going to come down as well, simply because our expectation is that things like owner equivalent rent will start to trend lower. So we have strength. We have, a strong economy. We just don't think you're going to, be at a 5 or 5.10, particularly since now the market is already pricing out most cuts. It's down to only one cut in 2025, later in the year in September. So the question of whether or not they're going to pause or not really isn't a question anymore. I mean, it'd be highly unlikely that they go in March, cut in March, unless you see some, true collapse in next week's inflation report or some sort of negative payroll the next couple months. So a lot of this bearishness, if you will, is priced in simply because they've taken out so many cuts.
Leslie, the market now only sees one cut here this year. Do you?
We see two, actually. We're still staying with the two. We have June and September, right? But listen, there's a lot of data from now to then. And one thing that we know, and the Fed has stated clearly, they're data dependent, right? So you're going to see a lot of shifting narrative for each number, which really just makes the interest rate market that much more volatile and will probably continue to be volatile given there's such data dependence. So we have a rhetoric right now that the economy is very strong. They're not going to cut. 6 months from now, that narrative can completely change. So as of now, we're staying with the June and September, 25 each, so 50 basis points in 2025. But again, it's really going to depend on what the data shows.
Talk to me about what you're anticipating as we look ahead to the next 4 years under the Trump administration. We know that Trump's Treasury has talked about shifting away from shorter-term borrowing. How do you anticipate that impacting the yield curve?
I think that's a great point because when you look at, supply, supply is really more of a 2026 issue, right? I mean, it's not so much a 2025 issue, but to your point, what the market will be paying attention to in 2025 is the composition of that supply, meaning that, whether or not they choose to take those bills that have been used to fund the deficit and lock them up, right? So you extend out 5, you extend out to 10 years, and that composition change could have an impact on Treasury yields. But I think that's one of the reasons why that we have this rising term premium, why the yield curve is steepening, because investors are looking for compensation for that potential. But, we really don't know, or really don't see a lot of supply, or is increase in supply a concern until that 2026 sort of time frame. But even listen, a lot is going to get to be seen in terms of what they could actually get passed through, particularly when it comes to further tax cuts outside of just the extension. But that's going to be, I think, an end of the year type of issue into 26. What's not is how that composition works and whether or not they take those bills that are rolling off and lock them in a little longer. But I think that you're getting compensated for that now, and that's why the term premium has been rising so much.
All right, Leslie, thanks so much for joining us.
Thank you.
We're going to move over to consumer sentiment data crossing the wire for January here, coming in below the estimate at 73.2. The estimate was 74. Really interesting to look at the inflation expectations. Year ahead inflation expectations rising to 3.3% versus the estimate of 2.8%. So a huge move to the upside on that. And then the 5 to 10 year inflation expectations rising to 3.3%. That is the highest 5 to 10 year inflation expectation since 2008. So certainly key when we think about consumer expectations for inflation, potentially as an indicator that that inflation story is coming back in.
Yeah, and I think that's really ultimately maybe why we did see an uptick here in that headline number, just in terms of what we did see versus the expectations. Again, the consumer sentiment coming in at 73.2. When you take a look at some of these headline numbers here, it was 74 the prior month, so maybe just a bit of improvement. But I think this still illustrates that inflation is very sticky, right? And that's one of the challenges that economists and investors are grappling with right now, trying to figure out just what exactly that trajectory looks like if we are going to see any improvement on that number here over the next several months to a year, and to the extent of that improvement. And I think that's why we have seen so many traders, so many investors just split, and economists split on what exactly the Fed is going to do next and the timing. We were just talking to Leslie Falconio, and she was saying how the market's still pricing in, or the market is now pricing in only maybe one cut this year. She's still pricing in 2 cuts this year. We had Blake Wynn from RBC earlier on in the program saying that he actually thinks the Fed could be done this year in terms of rate cuts. So again, I think that just plays into this debate that we've long been having here on Yahoo Finance and beyond on Wall Street, just in terms of what the Fed's policy path is going to look like going forward, considering the fact that inflation does remain so sticky.
And the growth that we saw in the labor market as well. A lot of growthy areas today. Well, escalating geopolitical tensions, a change inside the White House, and the Fed's uphill battle with sticky inflation are top of mind for investors as we kick off 2025. Amid the challenging environment, the Eurasia Group's top risks of 2025 is out. Topping that list is the risk that G0 wins, meaning a lack of concentrated power driving the global agenda could hurt international order. Joining us now, we've got Ian Bremmer, Eurasia Group's founder and president. Ian, thanks for being here. So to what extent does Trump's presidency fuel that top risk for you of a fragmented global leadership agenda?
It's the most recent development, but I mean, it's more of a symptom than it is the underlying causes. The underlying causes have been coming for a long time. It's the fact that when the Soviet Union collapsed, Russia wasn't integrated into the West, and Putin blames the United States for that and now has an alliance with North Korea and Iran. It's China being integrated into the global economy, but not aligning with Western values, not opening its political system, certainly not becoming more of a free market economy, and the West not being happy about that. And then finally, it's people across the advanced industrial economies, especially in the U.S., that are no longer prepared to support the U.S. being the global sheriff or the architect of free trade, or even the promoter of democracy, because they don't think that their leaders work for them. And so, as a consequence of those things, one of the things you get is much more unilateralism, much more rejection of that old U.S. exceptionalism and leadership in a multilateral way, supporting rule of law. And Trump is a huge symptom of that. So the answer to your question is yes, but there are things that have been happening that make that the reality we have today. And so now you have a law of the jungle, which is great if you're the apex predator, but my God, it's a real problem for everyone else playing defense.
And Ian, talk to me a little bit about how the U.S.-China relationship then plays into all this. If we do see a further breakdown of relationship here between the world's 2 largest economies, just some of the risks that then poses, and how you're expecting Trump maybe to handle some of these engagements.
Yeah, I think we do expect that the U.S.-China relationship is going to break down from what has been a relationship of no trust under the Biden administration, but nonetheless a lot of effort to stabilize the relationship. Just in the last year, some 25 high-level bilateral channels being established and regularly engaged in, from the economy to technology and climate to military relations. I expect those will mostly break down. And Trump fully intends to put significant tariffs on China in the early weeks of his administration. I think we'll also see a significant tightening of export controls in technology and an expansion of areas of the economy that are seen to be relevant to national security and therefore should be decoupled. You'll also see pressure from Trump on other countries that are acting as pass-throughs for Chinese manufacture. The only part of their economy that's working is that export sector into the United States, especially Mexico, but also India, also Vietnam. Now, Trump is always interested in cutting a deal. And remember, he's the only president that ever invited a Chinese leader to the inauguration, even though Xi Jinping's not going to come. So, I mean, they are going to have conversations, and I suspect there'll be talk about, hey, Trump is willing to talk to this guy. Might they figure something out? But what the Chinese will offer in response will be nowhere close to what will be required to back the Americans down. So, yeah, these are the two most important economies in the world, and I fully expect that the relationship is not only going to head towards a trade war, but will also have a feeling of increasing Cold War that other countries in the world that want to do business with both are going to have a hard time navigating.
Ian, I quickly want to get your take on some news crossing the wire here. Trump will not get jail time or probation in his New York hush money case. It reminds me of your call on a lack of checks on Donald Trump heading into the next 4 years. What's your reaction?
The United States is not going to become a dictatorship. There are plenty of checks in ensuring that the republic stands, like a professional military and an independent judiciary, irrespective of who appoints them, and a federal system. I mean, the elections, of course, are managed at the state level, not at the national level, so very hard to actually rig. But Trump's strength compared to 2017, the consolidation of his appointments, of his cabinet, loyalists as opposed to establishment Republican figures, and the fact that the GOP desperately needs his coattails and not the other way around, means that he's more than capable of hitting his adversaries hard in the face and backing it up. And you will see others around the world that will appease him. Mark Zuckerberg in the United States, perhaps the most well-known appeaser in the last couple of days, changing his business model, community notes, and now he's all in favor of free speech. Why? Because Trump and Elon won. And if you think that Mark is backing down and kissing the ring to Trump, you haven't seen anything compared to the Danish prime minister, given the Greenland challenges, or Panama, or other countries around the world where Trump he's beating up on much weaker people than much weaker countries than the United States, and then him and Elon. And that's going to play out in a very volatile way. A lot of furniture is going to get broken over the course of this administration.
Ian, let's talk about Trumponomics, because I thought you had some great things to highlight here in this risks report. When you talk about Trump heading back to the White House here for a second time, he's coming at a time, we just had the jobs report out this morning showing once again that the labor market remains strong. It's very resilient, yet we are still dealing with sticky inflation. How do you see some of his policies like tariffs affecting the economy here in the years to come?
Well, first, I believe that he is going to implement a lot of these tariffs. I don't expect it'll be 60% across the board on China. It might end up being an average of 25% or 30%, but that's still meaningful in terms of impacting corporates, reducing profits, and increasing prices at home. He won, and the Democrats lost on the back of immigration. Top issue. Everybody is angry about the level of illegal immigration that has not been adequately dealt with in the United States by Biden and by Harris. Trump absolutely will deport. I wouldn't be surprised if we see 1 million illegal immigrants deported from the U.S. in the first year. That will lead to more jobs for Americans. But as you say, the job market's pretty hot and labor rates are already up. So, I mean, that's going to lead to more costs. And by the way, illegal immigrants are working illegally, but they do pay tax and they do consume. So that's also taking money out of the U.S. economy. So I do think that these things will lead to constraints and that the markets have not adequately priced that in. There will be positives. Trump will, of course, reduce regulatory authority, and DOJ will do what they can to increase efficiency for the private sector. And you'll also see an extension of the 2017 tax breaks for corporates and for high net worth individuals. But most of that low-hanging fruit has been picked. And as you say, the macroeconomic environment, not just on inflation, but on, interest rates, on debt, as well as on higher multiples that stocks are presently trading at, just makes it more challenging to get everything right. So I think the consequences of Trumponomics are more serious than people think.
Ian, it's always great to get some of your time. Thanks so much for joining us here on Yahoo Finance. Hope to have you back again soon.
My pleasure.
On the other side of the break, we'll be speaking with investor and Shark Tank star Kevin O'Leary about his bid for TikTok. We've got that and much more coming up next on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
The Supreme Court is hearing arguments right now in a decision that will dictate TikTok's future here in the United States. Unless the court decides otherwise, TikTok has until January 19th, less than 10 days from now, to sell its U.S. assets. And Project Liberty, led by Frank McCourt, wants to buy TikTok. The group submitted a formal proposal to ByteDance on Thursday. Kevin O'Leary, O'Leary Ventures chairman, is a partner here in Project Liberty's bid to save TikTok, and he joins us now. Kevin, thanks so much for taking the time to talk to us. Great to see you.
Great to be here. Thank you.
So you delivered the proposal to ByteDance. What can you tell us about the details of that proposal and whether or not you've heard anything from them yet?
Well, we did this intentionally. We press released it on Monday of this week to make sure the justices knew that the company had an option to sell it without the algorithm. It was widely believed in the market that no bidders would emerge if the algorithm wasn't for sale. ByteDance has been clear that the supreme leader of China will not sell the algorithm. But we wanted to make it clear as they debate starting 10 minutes ago that we are a buyer. We've got a valid syndicate. We're prepared to put up as much as $20 billion. And we don't need the algorithm. We don't want the algorithm, obviously, because the order of Congress is forcing them to shut down because of the algorithm. It's Chinese spyware. Pretty well everybody knows that now. And it's not really an issue around free speech because if they sell it, we'll keep it lit up, and we want to. And certainly for me, the majority of my companies, up to 60% of their digital spend each week is on TikTok. It's a very effective platform. And I want to make sure as an advocate for American entrepreneurship that we keep it lit up, which is why I got involved in this in the first place.
Kevin, 20 sounds low to me. How do you get to 20?
You don't know yet because you don't have the numbers. Everybody's just assuming revenues somewhere between 7 and 10 billion. I don't know how many of the existing U.S. institutional shareholders are going to roll into the new deal. That will not require cash. Obviously, it'll be more than 20 billion if they do require cash. We just don't know. If I were an existing shareholder right now, and I'm looking at the wall of two options. Remember, I'm a shareholder in ByteDance, and let's call ByteDance 10 to 15% of its value is inside of TikTok USA. And so if all of a sudden they just shut it off, because that's an option the Supreme Leader can do, you're erasing about 38 to 40 billion dollars worth of value from me as a shareholder, just because the Supreme Leader had a bad hair day, just didn't want to play ball. Now, I think that's highly unlikely, that because the cost of capital to Chinese deals after that will skyrocket, because people don't trust that they're going to be treated fairly as shareholders. So they spin off that asset into the U.S., and then our syndicate buys it, and we operate it according to the order of Congress. Now, the timing is really complicated here, because we're talking as the justices are debating. Out of this debate in a few hours, we will find out the direction. If they turn back the case, in other words, they don't want to hear it, it goes back to the executive. That is Biden. Biden then looks to the market and says, is anybody willing to buy it? Should I give them a stay of execution of 90 days? And then he would say, yes, because I see that Project Liberty is willing to do it. McCord and O'Leary, they'll buy it. Then I'll give them 90 days to work it out. And then, remarkably, just a few days later, at 12:05, we're now operating under the administration of Trump, the new president. So we have to work with yet a new administrator on the deal. I've never been involved in a more complicated deal in my life, but it is a legacy opportunity, and I'm really excited about it, and so is Frank. And we have so many great plans for this platform. We're going to clean it up, make it better. And I think, you know, they're stalled out 170 million users. Why don't we have 200 million? We can do that by just letting people feel safe. They can put it on their phone. Many people won't put it there because they know it's Chinese spyware.
Kevin, have you heard anything from ByteDance?
Well, you should make the assumption, you know, I got to be very careful here. You know, I'm not going to answer that question, but you should make the assumption that in order for them to know there was an offer, we found a way to get it to them. So you just, you know, the thing is, I know all the shareholders. So does Frank. We know who they are. We've known that for 2 years. I know them personally. So that's the answer.
Kevin, you also need President-elect Trump to get this done. And I know you've had a lot of conversations with him. You were recently spending some time with Trump. What have those conversations been like? And I guess how confident are you that you will be able to get this done under the Trump administration?
My first conversation with Trump was the night before the Senate hearing that passed this bipartisan bill to ban TikTok, that far ago. I have not stopped talking about it with him because I know we're going to have to work with him. There's no question about it. I was at Mar-a-Lago last weekend. I'll be there this weekend. This is a top agenda item for Frank and I. We pooled our resources together to put this on. We know we have to work with both administrations. This is a bipartisan effort. We don't care if you're running a business on TikTok, 1 to 3 million is the average. There's about 6 to 7 million small businesses generating reportedly up to 10 billion in revenue. We'll find out when we see the books in the data room. But many of them are Republicans, many of them are Democrats, but they're American entrepreneurs. They represent 62% of job creation. Businesses between 5 and 500 create 62% of the economy's jobs. So I care a lot about
नेचुरल गैस एफईजी पर ही रुका हुआ है. अगर ब्रेक करता है तो देखो थोड़ा बड़ा टारगेट रख सकते हैं. हाफ प्रॉफिट बुक करके रखना है इसमें, ठीक है, नेचुरल गैस में. एंड देन ट्रेल क्रूड ऑयल भी मुझे लग रहा है आ जाएगा नीचे. अगर 6604 के नीचे अगर क्लोजिंग देता है तो ये टारगेट बड़ा है, वही फाइनल 6512 का. यहाँ पर भी रेजिस्टेंस ही था, यहाँ से भी सेलिंग एक्सपेक्टेड थी, बट वो न्यूज़ की वजह से ऊपर चला गया. सेकेंड रेजिस्टेंस से वापस सेलिंग आई है. लेट्स होप थोड़ा बड़ा टारगेट मिले अब इसमें, एटलीस्ट यहाँ तक तो मिल जाए 180 पॉइंट. मेकिंग एम पैटर्न कह सकते हो, एम पैटर्न भी गैस का एफईजी लेवल क्या यही है 336.2 से 333.9। करते रहो गाइस, 100 लाइक्स का टारगेट, 50 लाइक्स हो चुके हैं ऑलरेडी। बोलो सर, मुझे गोल्ड का बता दिया ऑलरेडी लाइव में। सभी लोग लाइक करते रहो गाइस। 9 PM हो चुका है, लास्ट ट्रेडिंग सेशन है, थोड़ा सा ध्यान रखना। आज और कोई डेटा नहीं है, ये लास्ट डेटा था 8:30 वाला। फिलहाल के लिए अभी यूएस में डोनाल्ड ट्रम्प की आई थिंक हियरिंग चल रही है वहाँ पे। आगे जो 8:30 का डेटा था दैट इज नेगेटिव फॉर डॉलर, पॉजिटिव फॉर गोल्ड एंड सिल्वर। एक्चुअल गैस में हाफ प्रॉफिट जरूर बुक कर लेना गाइस। एफईजी के नीचे क्लोजिंग नहीं आई तो जाएगा नहीं नीचे। और आगे देखते हैं क्रूड में ये पूरा टारगेट देता है क्या 6514 तक, या फिर रुकता है यहीं पर, क्योंकि बीच में और कोई सपोर्ट नहीं है। ये दोनों ही रेजिस्टेंस थे, ये भी रेजिस्टेंस है, ये भी रेजिस्टेंस है। यहाँ पर तो ऐसा लेट कर दिया, यहाँ से एक सेलिंग आ तो रही है, बट ये ब्रेकआउट हुआ है तो रिटेस्ट की तरह काम कर रहा है शायद। बट अगर ये निकलता है नीचे तो फिर हम एक्सपेक्ट करेंगे 6512 तक इजीली आ जाए, विच इज़ अराउंड 180 पॉइंट फ्यूचर में। यहाँ तक लगभग 80 पॉइंट है, यहाँ तक जाएगा तो 160 180 पॉइंट मिल जाएंगे। नेचुरल गैस का भी देखोगे तो लगभग 6 पॉइंट ये यहाँ पर है। पूरा टारगेट हिट हुआ तो लगभग 11 पॉइंट मिलेंगे, तो हाफ प्रॉफिट बुक कर सकते हैं एटलीस्ट, एंड देन ट्रेल रिमेनिंग क्वांटिटी। 11 पॉइंट इज ह्यूज टारगेट एक्चुअली। सी ये टारगेट मिलता है या फिर नहीं मिलता है पूरा। बाकी सैंक्शन वाली न्यूज़ ऑलरेडी आ चुकी है तो उसका तो इम्पैक्ट नहीं होना चाहिए मेरे अकॉर्डिंग। मॉर्निंग से मार्केट ऑलरेडी बुलिश बना हुआ है। That is the last level for buyers. Support. वही प्रॉब्लम है. थोड़ा नीचे आ जाता ना यहाँ से बाइंग वापस अच्छी हो सकती है इन लेवल से. These are good levels बाइंग के लिए. थोड़ा पुल बैक आ जाए तो बाइंग इज अ गुड एरिया फॉर दोस लेवल्स. अगर कोई न्यूज़ नहीं आई तो. देव जी, welcome to Trading with Sagar. If you have any question, you can ask in the comment box. Like भी करते रहो बाकी. Don't forget to like the stream. Trump sentencing in hush money criminal case begins in New York. Trump gets no jail time or probation in New York hush money case. देव जी अभी नहीं है कोई क्वेश्चन, कोई सुनिए.
News when you want it with Bloomberg News Now. I'm Nathan Hager. No jail time, no probation for President-elect Donald Trump in the New York hush money case. That is the sentence just handed down in a brief virtual hearing this morning, a day after the Supreme Court refused to delay the case. It was a split decision that might not fully put this matter to bed. Bloomberg's Zach Cohen reports.
He can continue to appeal this decision, especially given the fact the Supreme Court in July had this landmark presidential immunity case that the president-elect's legal team feels pretty good about the fact of getting that ruling overturned.
Bloomberg's Zach Cohen reporting. President-elect Trump's lawyer called this a sad day for Trump and the country. Again, the president-elect is receiving an unconditional discharge for falsifying business records 10 days before he returns to the White House. At the Supreme Court, the justices are now weighing the future of TikTok 9 days before a law takes effect that would ban the video sharing app in the U.S. unless its Chinese owner ByteDance sells it. Tamlin Basin covers tech for Bloomberg Intelligence.
For TikTok, it's more or less an existential risk, at least in terms of U.S. operations. If it can't succeed at the Supreme Court, then it will be banned come January 19th. For its rivals, that could create an opportunity for market share gains if TikTok is removed from the U.S. market. So firms like Meta, Snapchat could see growth if TikTok is removed from the U.S.
Tamlin Basin with Bloomberg Intelligence. Right now, Meta shares are down more than 1%. Snap is higher by 1% as the TikTok hearing begins at the Supreme Court. Los Angeles is still reeling from some of the worst wildfires it has ever seen.
Mars would be more habitable than this place.
price right now. So it's crazy. There's absolutely nothing.
That man's in Pacific Palisades, where firefighters are just starting to gain ground on the biggest fire in the region. It is now 6% contained, and the fierce Santa Ana winds are expected to die down today. The flames have left at least 10 people dead and turned some of Southern California's priciest real estate into ash. Matthew Palazzola covers insurance for Bloomberg Intelligence.
What has been surprising is the speed with which structures are being destroyed. So within one day, we got reports of 1,000. Within 2 days, we're getting like up to 5,000 destroyed. And that's pretty unprecedented for something this big. With home values that high as well. So that's why it's kind of pushing these numbers higher and higher.
Matthew Palazzola with Bloomberg Intelligence says insured losses could run as high as $20 billion. The total damage may be more than 7 times that. California has placed a 1-year moratorium on insurers canceling or dropping policies in affected neighborhoods. Meanwhile, a winter storm has grounded more than 2,000 flights from Dallas-Fort Worth into Atlanta. Much of the South is under a 9-inch blanket of snow. More snow is expected today in Tennessee and the southern Appalachians, as well as ice in Atlanta and central Georgia. On Wall Street, stocks and bonds are tanking after the latest economic data. We have consumer sentiment numbers from the University of Michigan coming in weaker than expected. Long-term inflation expectations are at their highest level since 2008, 3.3%. Bloomberg's Michael McKee.
We haven't seen any inflation problem. It's basically been flat. It hasn't been going down very much, but there's been a lot of talk that Donald Trump's policies are going to be inflationary. We hear it from the politicians, we hear it from the economists, and my suspicion is American people are picking up on that.
Bloomberg's Mike McKee. These sentiment numbers follow a blowout jobs report for December. 256,000 new jobs added. The unemployment rate fell to 4.1%. Acting Labor Secretary Julie Su says the Trump administration is inheriting a solid labor market from President Biden.
He is the only president that has had positive job growth every single month of his presidency, and that is what we hand off.
Acting Labor Secretary Julie Su spoke to Bloomberg Television, but the strong numbers are raising bets that the Fed could wait till October now to cut interest rates, and stocks, as I said, are tanking. The S&P 500 right now is down more than 1.5%. The NASDAQ Composite's down 2%. The 10-year Treasury yield is up nearly 4 basis points to 4.72%. Shares of Delta Airlines are soaring by nearly 10% after an earnings beat to end 2024. Bloomberg's Kriti Gupta has that.
Looks like it's coming in line with estimates. Their revenue topping the forecast, which was really the focus. They're saying that the demand in the fourth quarter has really picked up.
Bloomberg's Kriti Gupta reporting. Constellation Energy shares are higher by more than 20%. It's buying Calpine for more than $16 billion to create the largest fleet of power stations in the U.S. And Walgreens Boots Alliance is up more than 25% after quarterly sales that surpassed Wall Street expectations. That's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
For value, small and mid-cap traded about 17 or 18 times trailing PE. The S&P 500 trades at 25 times because the biggest stocks have driven the market up so much over that period of time. So if you look at it, for example, over the last 5 years, the S&P is up about 82%, but the small and mid-cap sector has actually underperformed that by 35 to 49%, which is why you have this wide disparity in the valuation between the two. And in an environment where the Fed, and I started this year saying I think there's a close to a 50% chance the Fed doesn't cut at all, and they could potentially raise. And with the jobs number this morning, that's even more likely. I think you've got to really start thinking about these policies really benefit stocks other than the S&P 500.
Well, let's end there, Dan, because your top pick for the year is cash. How risk off should I interpret that pick being?
Well, I mean, the last time I picked cash as a top 5 pick was in 2022, and the S&P went down 19%.
Key
and
indicator.
You got pummeled on. Yeah, and you got pummeled on bonds as well because, remember, inflation was going up. So, yes, given that and given what I've written, which is, I think, the upside in the stock market, if everything goes right, is it's up 10%. But the downside is down 20 to 30 because multiples compress because inflation comes in higher than what we're thinking, and the Fed doesn't cut, in fact, pauses or raises, then yes, obviously, cash is in there for a reason.
All right, Dan, thanks so much for taking the time. Unfortunately, I have to leave it there. Hopefully, we can have you on again soon. Dan Niles, thanks so much.
Thank you.
Got much more on your market action ahead. Stay tuned. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
BCG survey of top CEOs finding 3 potential economic headwinds for 2025. So here's what's top of mind for some of the biggest business leaders across the globe: a softening labor market, emergence of unsustainable growth sources, and an unwind of elevated asset prices. Here to talk about that and more, we want to bring in Rich Lesser. He is BCG's global chair, joining us now for more on what he's hearing from the C-suite. Rich, it's great to have you. Thanks so much for taking the time to join us here on Yahoo Finance. Give us a better sense of those conversations, because it's interesting to me that a weakening labor market is top of demand, and then squaring that with the, once again, very, very strong print that we got out this morning.
Well, first of all, you do these surveys and then you see real data. So what people worry about isn't always what materializes. I'd say most people believe the base case economic strength is quite good. That's certainly what we would say. But they also see a world of just so much risk and uncertainty, so that, there's a base case view that's pretty positive. The way I express it is higher base, higher beta. The higher base is we've got a strong baseline economy. If there's some deregulation, if there's some other things that should continue to keep a strong base. But the uncertainties, tariffs, labor markets, geopolitics, interest rates in a world where inflation isn't cooling as fast as we would want, and that's reflected in the market today, put a higher beta around that too. And I think that's the reality most business leaders are trying to wrestle with right now.
To throw one more survey into the conversation, we also got that consumer sentiment data in showing that inflation expectations are rising for consumers. And it reminds me of this bifurcation we've seen in the data. You see a strong labor market, and then you have consumers not really feeling great about the economy. What do you make of that bifurcation? Has that come up in your conversations with executives?
Well, I do think people observe that consumers are not as confident as the underlying economics would suggest they should be when you just look at macro GDP data or unemployment data. I do think they're stressed. Some of that's overhang from the massive uncertainties that consumers have felt as well over these last 5 years. It's almost exactly 5 years ago that we entered into this COVID period and all that's happened since then. And I think some of it is, they also pick up the news and the uncertainties of what would a tariff mean? What would labor shortages mean if there's deportations? Like policies that we honestly don't know what they're going to be, how effectively they'll be implemented, that could create upsides, but could also create challenges. And that plus lingering uncertainty, I think, is reflected in consumer sentiment.
Rich, talk to us about how AI fits into all this. It's top of mind for investors when it comes to investment opportunity. It's top of mind for business leaders. They're trying to find out ways to best incorporate into their business, obviously try to make themselves a bit more productive. What do you see as the biggest impact it's going to have, not only on productivity, but on from a labor force standpoint, and how you see business leaders navigating this change?
Right. So I'm going to focus more on the 3 to 5 year horizon. There's obviously AGI and all the things that could play out over 10 or 20 years and what that could mean. I think in the near term, there's really substantial upsides from AI, both to help individual businesses perform better. And by that, I also mean the revenue side, not just the productivity side. In fact, we've seen some very interesting things clients have done where they, for example, work on customer service, but instead of using it to have fewer customer service reps, they use it to allow their reps to be better enabled to serve their customers and to give them more time because a lot of basic requests can be handled through technology. We see that in multiple areas: engineering, customer service, marketing and personalization, research, development, many different places. And in a time when labor markets could be pressured, when we're looking to bring inflation down, this is pro-productivity, should be anti-inflationary as it rolls out. It'll take a few years to really broad base it across the economy, but that should be a real advantage. And I think for businesses individually, they are realizing
6,600 put option OI पे हाई है ना। मैं ऑप्शन चेन नहीं देखता प्रदीप जी, इस पर कुछ कमेंट नहीं कर सकता। मैं ऑप्शन चेन देखता ही नहीं हूँ। I didn't check the option chain, I only was the levels. फिर भी देख लेते हैं एक बार क्रूड ऑयल 6,600 6,600 कॉल साइड का OI 9,217, पुट साइड का OI 13,533। तो पुट साइड का OI ज़्यादा है 6,600 पे। टाटा स्टील का फ्यूचर भी चेक कर लीजिए एक बार। 130 का पुट ऑप्शन लिया हुआ है, एक पे चार्ट चल रहा है। किस पर्पस से लिया था स्विंग पोजिशनल बता दो, ये भी लिख लो फिर देखते हैं।
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
नेचुरल गैस गाइस नहीं ब्रेक कर पा रहा है एफईजी को अपना हाफ प्रॉफिट बुक करके चलना है इसमें। अगर ये नहीं ब्रेक किया तो ये फिर या तो साइडवे चला जाएगा इसी रेंज में या फिर ब्रेकआउट के लिए जा सकता है। सो एटलीस्ट बुक द हाफ प्रॉफिट एंड ट्रेल द रिमेनिंग क्वांटिटी। ओके, एफईजी ब्रेक नहीं होगा तो जाएगा नहीं नीचे। बाकी क्रूड ऑयल ठीक ठाक आ गया, ब्रेक भी कर दिया लेवल। लेट्स होप ये 6513 तक पहुंचे। यहाँ पर शायद थोड़ा बहुत रुकना चाहिए, नहीं रुका तो फिर ये दो टारगेट रहेंगे, ये रीटेस्ट और फिर ये सपोर्ट मॉर्निंग वाला। टाटा स्टील को इस पे सेल किया था, फिर तो ट्रेल कर सकते हो 145, ये तो 127 चल रहा है अभी। को ट्रेल कर सकते हो यार, ट्रेलिंग ऐसा लगा दो वापस ऊपर 136 के अराउंड आए तो वापस सेल कर देना। 136 पे ट्रेलिंग एसएल रख सकते हो, फिलहाल वही एक ट्रेलिंग एसएल बन रहा है। वहां पर चाहो तो ऐसे और क्वांटिटी भी ऐड कर सकते हो सेलिंग साइड पे। बाकी और कितना डाउन जा सकता है, डेली टाइम फ्रेम का चार्ट है। ठीक है, 121 तक का टारगेट रख सकते हो, 121 तक का टारगेट मिल सकता है, वहां पर एक सपोर्ट है। तो 120 121 के आसपास बाइंग का प्लान कर लेना। हो सकता है कल थोड़ा बहुत यहाँ पर भी रुक सकता है ये 127 126 के आसपास, नहीं तो नीचे टारगेट 121 120 है। यहाँ पर भी एक छोटा सा है सपोर्ट, वीक है बट है। लेट्स सी किस तरह से प्ले आउट होता है। बाकी ऊपर सेल करना चाहोगे तो 136 के अराउंड वापस सेल कर सकते हो। तो ट्रेलिंग एसएल का यूज कर लो, यूज द ट्रेलिंग एसएल। क्रूड ऑयल सही आ रहा है, लेट्स सी जितना ऊपर गया उतना पूरा नीचे निकल जाए तो 80 पॉइंट। लेट्स सी द नेचुरल गैस एज वेल, इसमें भी एक बार ऊपर के लेवल देख लेते हैं। नेचुरल गैस भी इतना पीछे रिसेंटली गया नहीं है, अगर ये निकल गया ऊपर तो फिर जो भी परसों इसने हाई बनाया था 30 दिसंबर के आसपास 350 के आसपास, वही एक रेजिस्टेंस शायद होगा, नहीं तो 15 मिनट में और लेवल भी नहीं है। क्रूड ऑयल आ गया है टारगेट तक। काफ़ी अच्छा ट्रेड निकल गया, जितनी बाइंग आई थी उतनी सेलिंग आ गई। कैंडल ओपन इक्वल टू हाई है, ध्यान रखना। बुक करना चाहो तो यहाँ पर बुक कर सकते हो, पूरा प्रॉफिट थोड़ा बहुत हो सकता है रुके 6515 के अराउंड। बाकी कैंडल अगर ओपन इक्वल टू हाई में सीधा निकाल देता है तो फिर ये रीटेस्ट वाले जोन ही रहेंगे। रिमेंबर दिस करंट कैंडल इज ओपन इक्वल टू हाई। Sellers can exit and buyers अभी डायरेक्टली बाय तो मत करना, वेट फॉर द कैंडल क्लोजिंग बिकॉज कैंडल इज ओपन इक्वल टू हाई, वी कांट सेल ऑन ओपन इक्वल टू हाई बट द टारगेट इज डन। डन, सेलर्स एग्जिट, थोड़ा बहुत रुकेगा जरूर।
The level of rates, the term premium within rates on the longer end, it's about the velocity of the move and expectations. And so all those things happening at the same time, the sharp move up, is really not great for the stock market right now. It's not great for valuations, and we're seeing that throughout the market today.
You say that some sectors are being left behind as we continue to see ultra concentration in tech. What are those sectors that are being left behind?
Yeah, Brad. So if you think about we all talk about the Mag 7 and those 7 stocks that have done phenomenally well over the past handful of years, especially last year. So what it's doing is causing a group of not so magnificent sectors. And those sectors tend to be small cap versus large cap, value versus growth, and then international versus U.S. And it all stems from the same performance dynamic of the S&P being driven by these just few handful of stocks. Now, as stock pickers, we kind of like that because, a lot of stocks are getting left in the dust. They're not making headlines every day. And there's some really undercovered gems out there. So in our fund, for example, our top 5 holdings, best performers last year, 3 of them were up over 100%, and 3 of them were small caps. And so we like that. And we like to uncover some of those gems, and we'll get that in a market that is this divergent.
What do you believe the sweet spot is for investors right now? Trying to find perhaps, and dare I say, cheap stocks, but with future paths to growth, and where are those areas?
Yeah, you're right, Brad, because that's the thing. We cannot pull apart value from growth at this point in terms of a story for a stock if you really want to buy one. You can't buy just cheap, for example. If you buy just cheap, you will get left in the dust because the market isn't reflecting any value in those names because they want to see growth. They want to see some top line growth, some margin expansion. And if they don't see that possibility, they'll stay cheap. So to your point, where are we going to look? First, we're going to look for cheap, but then we have to dig in and then try to find some value. So I do think there's a few different areas, even within tech. As a value investor, what we're seeing is these huge capex numbers from Microsoft and Amazon, and it's totaling up to $300 billion in the next year. That money is going to go somewhere, and it's really good money from companies that have great balance sheets. So there's kind of this halo effect outside of the big names that everyone's heard of, and there are a lot of smaller cap names where I can't name individual names that we own, but there are a lot of individual names that you can find there in small and mid caps that should benefit from that capex spending, which again, if you segment out the bubble aspect of and the fervor in the market from the underlying fundamentals, you can kind of tie it all back to that capex number, and that's what we're going to do next year.
Okay, so steering clear of individual names. Switching gears, though, many sectors are likely to be hit by President-elect Trump's proposed tariff plan. And you're watching 2 specific companies that are likely to be affected, or at least the qualities around those companies that could give us a signal for some other names that could be affected. What are those?
Yeah, so if you think about on the international side, and we're seeing it in manufacturers. So again, I'm trying not to name the specific companies, but we're talking about manufacturers here that again are going to have to import into the U.S. If you think about automakers, for example, just about every automaker outside of the U.S. is having a really, really hard time. If you think about the impact of increasing competition from China and now the potential for higher tariffs into the U.S., that's really hurting a lot of global auto companies right now. And that, again, that can extend to other manufacturers that import into the U.S. Now, again, there's a lot of rhetoric out there regarding tariff talk, and I think a lot of it is more of a negotiation ploy than it is going to, actually hit. But yeah, that's what we're focused on today. We're worried about certain companies that may get impacted. But inside the U.S., I do think a lot of companies, a lot of smaller cap companies that make in the U.S. and sell in the U.S. should do pretty well.
George, all right, judging by your background, I think it's safe to say, go Birds. Good to see you, George.
Let's go, Brad. Thank you.
All right, see you soon. Yeah. Now time for some of today's trending tickers that we're tracking. Scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Wayfair shutting down its business in Germany effective immediately. The company expects to spend up to $111 million as part of the restructuring, with most payments happening over the next year. Around 730 employees will be impacted, and half are expected to shift to roles in other offices. Money saved from the move will be reinvested across the company's core initiatives to cover and over the rest of the year. And next, D-Wave Quantum announcing fiscal year 2024 bookings will exceed $23 million. That is a 120% jump from last year. And this comes as Wall Street continues to seek out good news on the AI front, looking for companies' ability to monetize AI. Finally here, we're also tracking Constellation Brands falling after it fell short of a number of third quarter metrics. The alcohol beverage company cutting its annual sales forecast and reducing the lower end of its profit range. The company's president and CEO, Bill Newland, citing subdued spending and value-seeking behaviors from consumers. Well, Treasury yields rising to their highest level since November of 2023 after a stronger than expected November jobs report. Yahoo Finance's Julie Hyman joins me now to explain exactly what's going on. Hey, Julie.
Hey, Brad. Yes, indeed. We have been seeing yields push higher and higher here. Even before this jobs report, we have been seeing the yields flirt with those levels that they hadn't seen going back to November of 2023, and they just keep on going higher today. There was a little bit of a hint of this earlier this week as well when we had the Institute for Supply Management Services report. As part of that report, there's a prices paid component, which is a measure of inflation. So we got that earlier this week, and if you can see here, basically we saw it go higher, right? So raising a little bit of concerns about inflation re-accelerating. This is something that Torsten Slok of Apollo flagged in a chart earlier this week, that prices paid component tends to lead headline CPI. So you take some of these indications of inflation showing that in some cases it's either not slowing down or even re-accelerating. You add to that a hot jobs report, and what you get is a lot of concern about inflation re-accelerating. So if you look at some of the reasons behind the recent rally in bond yields that is continuing today, this morning Greg Dacco was on the program in reaction to the jobs report, and he reiterated some of these issues. He talked about, of course, inflation and those concerns about inflation, and then layer on top of that the expected fiscal policy of the incoming Trump administration, which is being seen by many economists as something that can further potentially fan inflation. We're talking about tariffs and things like that. Then also that expected fiscal policy could potentially lead to higher deficits as well if you get a lot of spending on the part of the incoming administration. For example, if there are further tax cuts that are passed. And then there is the risk premium. That's a buzzword that is getting a lot of attention within the bond world and the stock world. Basically, it is the premium that people demand to hold bonds over stocks. And it's been sort of wonky as of late. And perhaps some of the deficit and fiscal policy stuff is feeding into that. So what does this all mean? Well, not necessarily good news for stocks. And Steve Sosnick of Interactive Brokers was on the show this morning as well, and he talked a little bit about that phenomenon.
If the bond rates are rising because of inflation fears, because of just general concerns, because of just general malaise, that ultimately does weigh on stocks. And so there is a number at which high bond yields become a problem for stocks, but it's a fluid situation. It can be very dependent upon market psychology.
So to that point, last year, yields were climbing higher, even with the expectation for rate cuts early last year. it wasn't necessarily problematic for stocks. It didn't become more problematic for stocks really until the latest leg up in bond yields. And we saw that happen kind of in early December. Now, the 10-year yield is up about 100 basis points, 1 full percentage point from when the Fed began this recent cutting cycle. And it's up about half of that amount just in December alone. At that same time, we started to see stocks sell off, of course, from their highs. So these higher bond yields aren't always problematic for stocks. It depends on the underlying reasons why the bond yields are going higher. And it seems like, to cite Steve's fluid situation, we are in such a fluid situation at the moment. We'll see what ends up happening as we start to get, for example, more inflation data, and as the Trump administration starts to roll out some of the things it's been talking about, Brad.
Julie, I never thought a bond market explainer would need a Hammond B3 organ behind it, but you need a strong case for it here today.
Thank you.
Appreciate it. TikTok in the hot seat today in the highest court in the land. Lawyers for the social media app arguing in an emergency hearing ahead of a key January deadline that a ban of the app violates free speech.
The government's real target, rather, is the speech itself. It's fear that Americans, even if fully informed, could be persuaded by Chinese misinformation. That, however, is a decision that the First Amendment leaves to the people.
A final decision is not expected today, but we want to get TikTok users prepared with everything they need to know if a ban does go into effect. We're going to get answers to questions like what happens to TikTok on your phone, how do you save videos, and where do you go if you can't scroll TikTok. Here with more, we've got Abrar Al-Hiti, who is the CNET technology reporter. Abrar, great to have you here with us today. So let's just start with the first big question that might be knocking around folks' minds right now. What happens to TikTok on people's phones if the app is banned?
So come January 19th, if TikTok gets banned, it's not going to magically disappear from your device. Instead, you won't be getting updates, which means that over time it becomes more laggy and then eventually unusable. You need those updates to keep that running smoothly. But then after January 19th, if TikTok gets banned and you don't already have it on your phone, you've missed the boat. You will not be able to download it anymore. Companies like Apple and Google would be fined for making it available on their app stores. So really the clock is ticking, and pun intended.
So how can people save their videos on TikTok?
When you are going on TikTok, and this works for your videos, for other videos that you've seen other people post, there's a little arrow on the bottom right of the screen. When you tap that, you'll see an option that says Save Video. And I use this a lot, including when I send videos to people who don't have TikTok. It's a good way to just have that stored on your device. And if TikTok goes away, then that will all be safe. And the same goes for drafts. You can also go into your drafts, and there's a button where there's on the side, again, you'll see an arrow where you can go ahead and hit save as well.
So let's talk about some of the alternative platforms. Where are people expected or anticipated to go to? There's a lot of changes that have come forward over the course of this week in some of those other competitor platforms.
The obvious choice is Instagram, because Instagram over the years has really tried to beef up Reels into being a strong TikTok competitor. So that's where a lot of creators already have a platform. They kind of post to both Instagram and to TikTok. Facebook Reels is a similar idea. You can post across both Facebook and Instagram. It's the same company. But YouTube Shorts has also really been taking off. I've personally noticed when I go on YouTube, a lot of Reels are being pushed out because people want that bite-sized content as well. We all have really short attention spans, unfortunately. And then there's also Snapchat's Spotlight feature. This is a tab within the Snapchat app. It shows short form videos as well. Then there's Triller, which is similar to TikTok, lets you bring music and videos together, offers in-app editing. And then Byte, which was actually developed by the co-founder of Vine. This has a bit more limited editing features and music options, but also kind of that similar dynamic.
And finally here, there's a bid to buy TikTok from Project Liberty, and it's led by Frank McCord. If TikTok is sold, any idea what the platform could look like? I mean, we've had Kevin O'Leary, O'Leary Ventures chairman. He's a partner in Project Liberty, and he was on our show earlier today. He talked about getting rid of the algorithm. I just want to play this quick clip and then get your reaction on the other side.
We don't need the algorithm. We don't want the algorithm, obviously, because the order of Congress is forcing them to shut down because of the algorithm. It's Chinese spyware. Pretty well everybody knows that now. And it's not really an issue around free speech, because if they sell it, we'll keep it lit up.
I mean, even users have lauded TikTok's algorithm. So what does it mean if it does not have the same algorithm and if that needs to be built from scratch?
The algorithm is what makes TikTok TikTok. It's what's made it so successful. No one else has really been able to replicate it to that level. So losing that would be a really big deal. It's easy to say we can just go ahead and rebuild it, but that's not going to be an easy process, because if it were, then platforms like Meta wouldn't be competing so hard with TikTok at this point. So it's going to be an uphill battle if somebody does have to build that algorithm from the ground up, and the biggest hurdle for sure.
Abrar Al-Hiti, thank you so much for taking the time with us today.
Thanks for having me.
All your markets action ahead. Stay tuned. You're watching Yahoo Finance.
Oh yeah, you're not going to forget to cancel those free trials this time.
Well, joining us now to break it all down in studio, we want to bring in Steve Sosnick. He's the chief strategist at Interactive Brokers. We also have Greg Dacko. He's the chief economist at EY. Great to have both of you. Steve, you're sitting right to the right of me. And I heard you say, wow, under your breath when these numbers came out. How are you looking at this print?
Wow. My first reactions, in my case, the reaction that fits here. I mean, the numbers, no one was really looking for a rise in payroll. It was just going to be how much smaller was it going to be than last month, and we blew it out. Looking at the 3-month revisions, it's 8,000, which means there's no funny business, at least in the very short term, going on here. The problem here now is if you are looking for rate cuts based on a weakening labor market, this fits in with the Fed rhetoric that we've heard. Stop looking for those. It's not going to happen, at least in the immediate term. And I think, unfortunately for stocks, the bond market doesn't like that. In theory, stocks should like a stronger economy. But in reality, what we're getting is an economy that seems to be keeping jobs in there. And I think, there was the hope that labor was going to get the Fed onto a more accommodative footing. And this doesn't do that right now.
Yeah, Greg, want to get your read in, especially as you're thinking about what this does signal for the Fed and how they could continue to look at this report, even going into the kickoff of their meetings for 2025.
I think it's the paradox of 2025. It's a robust but frozen labor market, one in which we're not seeing much churn in terms of the labor force. We're seeing very little entry into the labor market. We're seeing very little exit out of the labor force. And that is really the state of the labor market right now. It's reflective of businesses being very cautious as to their hiring needs. They're not hiring. The hiring rate is at a 10-year low. They're not laying off either. So you're seeing this steady but slightly cooling labor market trend, which is very encouraging from a Fed perspective. I think the attention will actually pivot back towards inflation developments over the course of the next 3 months, and I wouldn't be surprised that we see some positive inflation surprise with inflation moving lower over the first 3 months of the year on base effects, which could lead to a reassessment of the Fed trajectory by very reactive policymakers.
So what do you think that Fed trajectory looks like then?
I think they skipped the January rate cut, but they still proceed with a March rate cut. The trajectory after that will be highly dependent on policies that are put in place by the incoming administration, whether it's deregulation, immigration restrictions, trade, and tax cuts. All of those elements will influence the economy to a great degree, both inflation and the labor market, and that will lead Fed policymakers, whether they like it or not, to react to those policies.
What's the trade that investors that are firing up their laptops, their computers to a report like this morning should be making?
I think you go back. I think you start to look again at economically sensitive stocks because the economy in general is telling it you're pretty good. Mm-hmm. I do think you have to watch out for the bond market here. There's a very worrisome signs, and we were supposed to go to hell in a handbasket if we went through 450. That didn't happen, fortunately. Then it was 470. Well, we're through that now for basically 4 3/4. Now they've moved the number to 5, where we should be getting worried. But I do think this is a fundamental issue here. Is we are getting stocks are getting some competition from rates. So I think being nimble and focusing more on economically sensitive names is the way to go here.
Do you think we're going to be reaching that 5% level likely in the next couple of weeks?
The bond market tends to move in big, long trends, like sort of 3 to 4 month trends. I hope not, but after a number like today's, it's hard not to it's hard not to say that we won't see a 5 handle on the 10-year. It's just the momentum is going in the wrong way. It's going in the wrong way internationally. UK and some other places, with the exception of China, where bond rates are basically approaching zero because their economy, is doing the opposite. I think in general, bonds have these. I'm not going to call them secular trends, but sort of if you look back at the charts, they move in a big direction for 3 to 4 months. I don't see anything right now, but this number would have been the thing to break the momentum, and it hasn't.
How problematic, though, is that for equities over time?
The relationship between equities and bonds is a weird one, because if bond rates are going up because the economy is very strong, it's okay, right? Because that means that companies are making money, and that's really what it comes down to as an investor. Am I investing in companies that will bring me earnings, dividends, cash flows, et cetera? That's a good thing. If the bond rates are rising because of inflation fears, because of just general concerns, because of just general malaise, that ultimately does weigh on stocks. And so there is a number at which high bond yields become a problem for stocks, but it's a fluid situation, and it can be very dependent upon market psychology. I think back to when I started in the business, and I'm going to age myself here, and I started in 1987, which was one of the worst years in the bond market, and was one of the best years in the stock market until, of course, it wasn't. But that's kind of that relationship is always stuck in my mind, is that you can diverge for long periods of time, but a lot of it has to do with why. And
you'd mentioned that a lot of the focus might shift back towards inflation, and we have an incoming president that's talked a lot about what geopolitical policies, what tariffs could be added on, and what executive orders are starting to line up for day one. And even within the first seemingly 180-ish days of the presidency, we could see some tariffs get talked about, get implemented. How inflationary do you think that would be, and how much pressure do you think that would put on the wage growth picture as well here to continue to try and outpace some of that anticipated inflation?
I think what Steve mentioned is very important. We have to understand why the yields are rising, because we've had the Fed cut rates by 100 basis points, and yet yields have risen by about 100 basis points. So you've had massive divergence there. And I think there are a few factors that are driving this rise in yields. You have expectations of higher inflation with the policies that are likely to be implemented. Whether it's deregulation, immigration restrictions, trade and tax cuts, they are likely to be inflationary and push up the inflation premium in terms of bond yields. The other thing that we have to keep in mind is that they're also likely to lead to larger budget deficits. Going over the next 10 years, we're likely to be in an environment where the budget deficit is averaging around 6.5% of GDP for a decade. That's the type of budget deficit that you usually have in bad times. So we have fiscal sustainability concerns at the same time, and a risk premium that's being added onto yields. That is why I'm a little bit concerned, because the higher we go with yields, the more of a risk-off environment you risk entering in, which would have a feedback effect on private sector activity and lead to a slowdown in economic activity.
In these incredibly complex environments, end-to-end observability is no longer optional. It has become
Let's take a look at how things open up here on this Jobs Friday. We're seeing some early declines here at the opening across the Dow Jones Industrial Average. Starts the day off lower fractionally by about 0.5%. The S&P 500, you're also seeing that start off the day down by about 0.7%. And as the NASDAQ Composite calibrates here, we're taking a look at declines right now of about 0.9% here. We're also taking a brief look at the 11 S&P 500 sectors here. Out of the gate here this morning, you've got a lot of red. Real estate is the worst of the decliners right now. It's down by about 1.7%. Energy, though, to the other side of that is up by about 1.7%. Utilities also catching a bit of a bid here. And then just briefly, I'll take a look at the Dow 30 components here as we're just taking a look at what looks like more decliners than gainers right now. Chevron leading the pack, NVIDIA pulling up the caboose. Jared, I'll toss things on over to you for a deeper dive.
Thank you. We got a lot to cover here. First of all, small caps are leading down. Let me just pull up the Russell 2000 real quick. I'll give you the year to date. You can see still maintaining gains for the year, but we have a pretty negative reaction to this jobs report. And by the way, we're actually seeing the NASDAQ down 1% right now. I'll give you the intraday real quick. I want to go to the bond market because what's happening to the 30-year is pretty surprising. We have it touching 5%, and that is the first time it's touched 5% in over a year. Here's the 3-year look. Now, it's not the absolute high on this chart, but we talk about the dollar wrecking ball and higher treasury yields pressuring stocks. That is what is in store right now. So sometimes we see a reversal off of these payroll reports. Maybe that's what we get today. But that 5% on the 30-year, that is a warning shot. Looking at the sectors here, energy is the only one majorly in the green. That's up 1.5%. Utilities up 1/3%. Real estate down 1 2/3%. But we're seeing some negative action in the majors. NVIDIA down 2.64%. That is the worst off of all of the Mag 7 stocks. And I'm going to leave you on crypto because Bitcoin had a little bit of a negative reaction here, but it is holding support. We got that 90 to 93, 94,000 support level in play here. So at least Bitcoin looking positive this morning, guys.
All right, Jared, thanks.
Full time and what you're seeing in the data.
So our data shows that about 1/3 of our taskers are working on a platform full time, but many people come in and do it full time for the summer maybe, or do it full time for a couple of months when they're in between other opportunities. And many people do it just over the course of years. And so we have examples of taskers who've been on our platform since 2020, since 2018. Emily has been on our platform for the last couple of years as a student in Boston. So of course, the cost of living in Boston is super high. So she tries to augment her time with doing tasks around Boston area to earn some extra money. We've got retirees who have been on the platform for many years who are also trying to earn extra income. So there are many different ways that people are using the platform to earn something more meaningful to them.
You noted 3 long-term trends that you're watching in the gig economy at large here. I want to know what those trends are and how you anticipate them playing out in 2025.
So yes, there are 3 trends that we're seeing. First of all, gig economy continues to expand and grow. And so in response to that, the gig platforms need to do better and need to continue to have a lot of provide a lot more support to taskers, or in our case, to taskers. And so that means really being more consistent, providing better jobs, providing just better support overall so that it's easier for taskers to book their jobs, it's easier for them to get between jobs, and so forth. I think the next trend is really the expansion of gig economy in terms of in terms of the types of jobs. So more creativity and more different types of jobs. Of course, many companies are asking employees to come back to work full time in office. And so for a lot of people, that's really difficult. And so they are using their skills, many of their skills, to really get on these types of platforms to be able to really earn income in a different way than maybe they had previously. And then finally, really, and we're seeing some of these studies. There's a study that was just published in Forbes by some folks who have shown that local economies are growing because of these types of platforms. So they are a root and a base of entrepreneurship. So a lot of people start their business this way. So, they may have some skills. Let's say they have some skills in being electricians, but they may not have any clients. They haven't done it for many years. They can start this way and then grow and expand their business. And this is definitely something that we're seeing.
What are the most common traits that you see of successful taskers that are on the platform?
That's such a great question. Really, it's being reliable. It's showing up when you say that you're going to show up. It's being on time. It's really working closely with your clients, understanding what it is that they need, and making sure that you're there to help them solve whatever problems that they may have. I have taskers at my house all the time. I just had one a couple of days ago, just for something small, but he was so great, and he noticed a couple other things that I need to help with and fix them on the spot. And that's really something that will make that type of a tasker stand out.
Anya, thanks so much for taking the time here with us today. Really appreciate it.
Thank you for having me.
Certainly. Coming up, everyone, your Yahoo Finance Market Update. We'll check out how stocks are moving and run through 3 stories that you don't want to miss. Stay tuned.
Oh yeah, you're not gonna forget.
Taiwan Semiconductor, their revenue for December beating estimates, up more than 57% from December of last year, boosted by some continued AI demand. The chip maker also posting its highest annual revenue since going public in 1994. Where were you when? Take a look at shares. They're up by about 0.7%. As we're taking a look at some of the results here from this December revenue report, they also did note that on a consolidated basis for the month of December 2024, they saw an increase of 0.8% sequentially from November 2024. And then, of course, that increase that we saw year over year and mentioned a moment ago of 57.8% from December of 2023 here as well.
Yeah, and I think, Brad, the big takeaway here is from these strong numbers. Obviously, the reason why this is so important is because it's a go-to chip maker for names like NVIDIA and Apple. When you see a 39% rise in revenue like we did, that's obviously a bullish sign here for the industry moving forward. And I also think this reaffirms maybe some of those expectations or further bolsters some of those expectations that these larger cap tech names, when you take a look at names like Alphabet and Microsoft, are going to continue to spend and build and upgrade their data centers in order to better position their businesses for this AI boom and what that demand is going to look like here in the years to come. So again, TSMC's sales here beating expectations, boosting their AI outlook here for 2025. Obviously, we're seeing that reflected on the street here. Some optimism playing out as well. We'll see whether or not that holds just in terms of when we do get more of these numbers from some of the names that are up on your screen right now, whether or not that is consistent here with what we're hearing from TSMC this morning.
I think some of the strength, too, is really pointing back to the fact that you're not going to see, at least in mass, some fabrication platform or plant that comes online at such a rapid clip that it clips TSMC's ability to continue to hold on to its existing client base, the demand that they're seeing for being able to fabricate and their own wafer processes for these chips here. And until you see that come forward, we're still going to be watching TSMC be one of the de factos until more Hanai or Foxconn or until more Intels of the world are able to really not just break ground, but also begin producing chips at the same type of level that TSMC is doing as well.
Shares moving to the upside after the company topped Wall Street's profit expectations, driven by gains in international and corporate travel. Walgreens jumping after sales at its pharmacies topped expectations. Higher prices for branded drugs and prescription volumes helped drive revenue to $39 billion for the quarter.
And TikTok heads to the Supreme Court. The future of the social media platform rides on a Supreme Court clash that pits national security against free speech. The justices will hear arguments this morning, just 9 days before a federal law is set to ban the app in the U.S. if it is not sold by its Chinese parent company. Unless the Supreme Court strikes down or otherwise delays the effective date of the law, the social site will shut down on January 19th.
That's indirectly going to happen if ByteDance chooses itself not to permit TikTok to walk away with the code. So does that matter, that distinction between Lamont and this case?
No, for two reasons. One, under the Sorrell case, you look to not just the law itself, but its practical operation. And the practical operation is prevent us from working with ByteDance. So that's one answer. And you bring up Lamont, and Lamont's actually a very important case, I'm sure you all recognize here. It's important to look not just at the court's opinion, but look at the briefing in that case. The government itself never came in and argued there's no right to receive this information. That's the sort of greater argument. All the government argued was, of course, Americans have a right to receive this, but it's just not so much of a burden to require them to raise their hand to get it. So Archibald Cox, when he was the Solicitor General, said to the court quite explicitly in the brief, we're not even going to make this argument because we think it's so contrary to history and tradition. All we're going to argue is the burden isn't enough. Now, what happened is the D.C. Circuit kind of turned that upside down and said, oh, Lamont's just a case about the burden. Well, that's because that's the only argument the government was even willing to make in this court. There was no argument that Americans didn't have the right to hear that speech.
What about, so I think this goes to Justice Gorsuch's questions about antitrust divestiture. Let's say that for antitrust reasons, or let's even say not for that. Let's say for suspect First Amendment reasons, Congress tells Jeff Bezos that he has to divest in the Washington Post. He can no longer own the Post. And let's say that neither Bezos nor the Post challenges that. But let's say that you represent clients who really like the Post as it was, who really want to keep receiving the Post, who really want to publish op-eds in the Post. Yeah. Would you have standing? Like, what kind of a claim would you be making there?
I believe so, Justice Barrett. And the court has cited Lamont in other cases in more recent years to say we've recognized a right of American listeners to receive information from others. And remember, even that is that's only a small part of the argument I'm making on behalf of the creators. I don't mean to diminish Mr. Francisco's arguments on behalf of the company and ByteDance, but the core speech in front of you in this case are the videos and other forms of communication.
That was the Supreme Court's ongoing hearing of a potential ban of TikTok. You can scan the QR code below to listen in on the arguments. We have more on Wealth with Brad Smith after this break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh.
Today, the LA wildfire spreads, pushing more than 100,000 people from their homes. A market sell-off piles pressure on Britain. Lebanon heads to the polls, testing Hezbollah's weakened influence on the country's politics. And, in Mali, a fight over gold profits. It's Thursday, January 9th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, every weekday. I'm Carmel Crimmins in Dublin.
When you hear LSEG data and analytics, what do you think of? Comprehensive data you can trust, exclusive access to Reuters News, industry-leading analytics and unique insights.
People destroying hundreds of homes, including some celebrity mansions, and stretching firefighting resources and water supplies to the limit. More than 100,000 people have been ordered to evacuate.
And the fire continues to grow with 0% containment.
LA County Fire Chief Anthony Maroney describing the fires as a widespread disaster.
No, LA County and all 29 fire departments in our county are not prepared for this type of widespread disaster.
All day our crews have been out filming the devastation and speaking with residents, like this man, who asked to be referred to only as Curtis.
This is pretty devastating.
I don't think LA's seen anything like this before.
Curtis had just returned to his mobile home park in Pacific Palisades to find only rubble and burnt-out cars.
My heart goes out. I know 5 friends already that have lost their homes.
Our video journalist, George Garcia, has been covering the fires.
Coming into the fire zone, it's like someone just, dropped a bomb in this portion of the city, the neighborhood.
Top 25 drugs prescribed under Medicare Part D have nearly doubled in price since first entering the market. And inflation isn't totally to blame here. Yahoo Finance's Anjali Kamlani has more on this. What did this report find out, Anj?
Well, in fact, Brad, this new study released by AARP yesterday shows that these drugs increase more than inflation, and that's pretty much how the industry has functioned for some time. Then the report noted that there are 25 drugs responsible for nearly $50 billion in total Medicare Part D spending in 2022 and were used by more than 7 million Part D enrollees. It's important to note that these branded drugs have been increasing faster than the rate of general inflation for decades, but most of them, and this is an industry line, that they've been staying under that 10% mark. And so that's supposed to be sort of that sweet medium where they continue to increase the price of drugs, but not so much more every year. Drugs with the highest lifetime list price changes were Merck's diabetes drug Janumet. That was an increase of 293%. And then diarrhea drug Xifaxan. That is by 253%. Medicare has already begun negotiating drug prices for some of these top drugs, and that's, of course, because of the IRA. But some of these, like the ones I just mentioned, have not yet made the list. We haven't seen them. We've seen other blockbusters like what we expect to see in coming years, GLP-1s. Ozempic, which has been the longest on the market since 2017, has a lifetime increase of 43% already in the last 5 to 6 years. So we're likely to see that coming up on the list, and it'll be really interesting to watch that one happen. But as it stands right now, the report itself, not so much a surprise as much as the actual numbers and just looking at how Medicare has negotiated and which drugs do end up on their target list versus the list we just saw.
All right, Anjali, thanks so much. We appreciate that breakdown. Well, also tracking egg prices are surging once again here. The national average price for a dozen large grade A eggs, now $3.65, tick higher from October, headed towards the highs of early 2023, according to the U.S. Bureau of Labor Statistics. So, what's causing this rise in prices? Our very own Brooke DePalma is here with the latest. Hey, Brooke.
Good morning, Brad. The return of the bird flu is to blame for this increase in egg prices. Here you see the return of the bird flu lead to less egg-laying hens and therefore less eggs in the market. And that's what really is driving prices here. If you take a look at the numbers, according to the latest from the USDA, U.S. egg production is down 4% year over year with 3% less egg-laying hens. And that's expected to stick around, these higher prices in this incoming year. You see a professor telling Yahoo Finance that in some of these farms, not only are they losing the hens, but in addition to that, they're losing future generations of egg-laying hens because of the return of the bird flu. And that's what really is making it harder to rebuild their total flocks. Keep in mind, we haven't yet even recovered from what we saw back in late 2022. In addition to that, holiday demand also influenced prices here and caused them to rise. Now, we could see a bit of a break post-December, but then come back once Easter comes around. We'll then see an increase in demand yet again. But one good thing here is that there is decreasing cost of food. Think corn, think soybean meal. And that's really good news for these producers when it comes to their margins.
So we're seeing lower production but improved margins. What does this mean for egg producers and investors as well, ultimately?
Yeah, so the ones that aren't getting hit by the bird flu, they're doing really well here. One expert calling it a seller's market, essentially comparing it to the real estate market. Because if you weren't hit by the bird flu, well, then you're the guys to go to. And that's good news for the largest U.S. egg producer, Cal-Maine Foods. And what we're seeing is them do really well in their last quarterly report, their Q2 results. They beat estimates. Revenue increased 82% year over year to $954.7 million. Net income also came in higher at 219.1 million. And as egg prices really have jumped over the past year, we've then seen Cal-Maine stock react to that. In the last year, investors really flocking, so to say, to Cal-Maine stock. It's up nearly 90% compared to a year ago. One analyst saying that if you didn't get in already, you might have missed the train. And if you do jump in now, you might be in for a bad ride. But another analyst telling Yahoo Finance that perhaps there could be still some upside, about 10 to 20% here. So really it remains to be seen. If egg prices decrease, we could then see Cal-Maine stock take a bit of a hit. But right now, experts telling Yahoo Finance they do expect these egg prices to remain elevated, at least in the near-term future.
Brooke, thanks so much. Man, how did you get the egg beat? Like, my goodness.
Honestly, I kind of like it. It's relatable. Everybody's talking about it.
It's true. Yeah. I mean, it's on my desk every day.
Right.
Yeah, in a different form. Anyway, thanks so much. Appreciate it. Mortgage rates increasing for the fourth straight week, according to Freddie Mac, inching closer to 7%. The average 30-year fixed rate is 6.93%. Here with more on the housing market, we've got Sean McPeak, who is a licensed real estate agent and team lead at Serhant. Great to have you here with us in studio.
Brad, thanks for having me.
Absolutely. So mortgage rates climbing. Where are you seeing the 30-year fixed rate by the end of the year? What's your projection there?
I'm seeing it being brought back down below 6%. I think the sweet spot for us here in New York would be around 5.5%. I don't think that's going to happen, but I predict around 5.8% to wrap up the year.
What needs to happen for that to actually come to fruition?
I think the Fed needs to cut rates more, and I also think that the pricing of risk into the market also needs to be factored in order for that to happen. And I think economic growth is going to help that.
Are your clients sounding like they're anticipating sweeping cuts from the Fed, even as the latest data that we've seen this morning now is looking at a CME Fed Watch probability of us not seeing a cut until late this year, the back half of this year?
I think everybody has the grass is greener on the other side syndrome. Okay. So I do think that everybody is holding with bated breath. However, there are deals to be had in the market right now. If you're finding the right situation, you can negotiate fantastic deals with great concessions.
What do you think is going to happen in order for us to see better conditions, lower prices here, and your thoughts on the housing market recovery more broadly?
I think you are seeing a lot of better conditions for buyers right now. In a lot of states, it's either the market has cooled off or there's been an influx of inventory in some of the larger urban markets and some of these middle of the country type states. So I do think conditions have improved. However, certain markets like New York City, where there's a lot of regulation and very high cost of labor, we are seeing less supply coming to market, which is also kind of keeping prices propped up.
What are you seeing as the most persistent risk right now to the housing?
क्रूड ऑयल ना थोड़ा बहुत सपोर्ट ले चुका है. कैंडल ओपन इक्वल टू हाई बनी जरूर थी. इट टेक द सपोर्ट नेक्स्ट कैंडल से बाइंग एक्सपेक्टेड है इस ब्लू कलर की लाइन के आसपास तक जाना चाहिए प्राइस को. बाकी नेचुरल गैस तो वही एफईजी पर ही रुक गया, ब्रेक नहीं कर पाया. ट्रेलिंग एसएल जा चुका है इसमें ऑलरेडी. अब होल्ड मत करके बैठे रहना. ट्रेलिंग एसएल इज ऑलरेडी गॉन. एफईजी ब्रेक होता तो और नीचे आता, बट ब्रेक नहीं हुआ. बाकी अब इसके ब्रेकआउट रिटेस्ट पर भी ट्रेड मत प्लान करना, बिकॉज ऊपर कोई और रेजिस्टेंस है नहीं. ऑलरेडी वो लास्ट टाइम 350 का हाई बनाया था, दैट इज द ओनली लेवल. जिन लोगों ने अगर बाई किया हुआ यहाँ से, वो यहाँ तक का छोटा सा टारगेट रख सकते हैं. मोमेंटम तो कम हो रहा है, लेट्स होप टारगेट आ जाए. तो बाकी एक बार फॉरेक्स चार्ट देख लेते हैं. फॉर नेचुरल गैस अगर यहाँ से और ऊपर गया तो कहाँ तक जा सकता है, बिकॉज एमसीएक्स में तो कुछ खास लेवल बने नहीं है जिस पर ट्रेड किया जाए. So let's see the forex chart. Don't forget to like this stream guys, like भी करते रहो. अच्छा मूव कर रहा है क्रूड ऑयल आज. ठीक है, ये रेजिस्टेंस बनता है फिर नेचुरल गैस में 353 वाला. देयर इज नो अदर रेजिस्टेंस. 30 मिनट में देखते हैं, 15 मिनट में तो चार्ट नहीं जा रहा है पीछे. लेट्स सी इफ इन एनी रेजिस्टेंस इन 30 मिनट, बिकॉज इतना पीछे प्राइस लास्ट टाइम बहुत पहले मूव किया था. नहीं, 30 मिनट में भी नहीं है लेवल. लेट्स सी द 1 आवर टाइम फ्रेम. वन आवर टाइम फ्रेम पे दिख रहा है बस एक छोटा सा लेवल MCX में। आई थिंक ये 2 जनवरी 2023 में का लेवल है। नहीं तो लग रहा है 4 आवर टाइम फ्रेम या 2 आवर टाइम फ्रेम ही देखना पड़ेगा अब सीधा। या 1 आवर टाइम फ्रेम पे भी कुछ खास नज़र नहीं आ रहा बिल्कुल भी। ठीक है 2 आवर टाइम फ्रेम देख सकते हो, वहाँ पर थोड़े बहुत फिर भी क्लियर लेवल है। इवन 1 आवर टाइम फ्रेम इज नॉट दैट मच क्लियर। गया क्रूड ऑयल ऑलमोस्ट। यहाँ से वापस थोड़ा बहुत रिजेक्शन मिलने के चांसेस हैं। 6605 4 के लेवल से। मेरे अकॉर्डिंग अब साइडवेज हो जाना चाहिए क्रूड ऑयल को। पर एक रीटेस्ट दिख रहा है 2 आवर टाइम फ्रेम पे, वैसे तो कर चुका है रीटेस्ट ये। हो सकता है थोड़ा बहुत रुके, अदरवाइज 354 ये रीटेस्ट जोन है। लास्ट टाइम भी यहीं से रेजिस्टेंस लिया था ना। हाँ ये 2 आवर टाइम फ्रेम पे एक रीटेस्ट दिख रहा है, एक सपोर्ट एरिया था बहुत पहले का, अप्रोक्सीमेटली 2022 मार्च में, ना मार्च 2022 में एक सपोर्ट था, वो ब्रेक डाउन हुआ था 2 आवर टाइम फ्रेम पे सीधा इन 2023 जनवरी में रीटेस्ट किया था, फिर वही जनवरी में ही 5 जनवरी को, और एक रीटेस्ट कल किया है शायद इसने, लास्ट टाइम किया हुआ है। तो ये एक रीटेस्ट जोन ही है, रेजिस्टेंस तो दिख नहीं रहा है इसमें। नीचे भी इसका एक रेजिस्टेंस था, उसका भी ब्रेकआउट ही करने वाला ऐसा लग रहा है। फिफ्टीन मिनट में भी होगा, बट 15 मिनट में लेवल दिख नहीं रहा है ना वहाँ पे, इसलिए लगाया नहीं है। होने को तो 15 मिनट में भी होगा, बट लेवल ही नहीं लगाया तो क्या कर सकते हैं। टुडे बिग मूव कोई डेटा था क्या? डेटा नहीं था, न्यूज़ थी एक्चुअली। रसिया पे यूएस ने फिर और सैंक्शन लगा दिए इसकी वजह से।
like the most likely option at the moment, but that comes with a cost. Voters are pretty tired of austerity, and there could be a lot of opposition within the government cabinet to further spending cuts.
Desde 1607 vamos a llamarle América Mexicana.
Mexican President Claudia Sheinbaum suggesting North America be renamed Mexican America, pointing to a giant map from 1607 behind her that used the historic label. Her comments come on the heels of President-elect Donald Trump saying he wanted to rename the Gulf of Mexico the Gulf of America. Former President Jimmy Carter is honored with a state funeral in Washington, D.C. today, before his body is returned to Georgia for burial. President Joe Biden will deliver the eulogy, and President-elect Donald Trump will attend. Authorities in Tibet have wound down the search and rescue operation for survivors after Tuesday's 6.8 magnitude earthquake near Mount Everest. More than 45,000 people have been moved to shelters, and the number of missing is still unknown. Lebanon's been without a president since 2022, but today it'll try again to elect a leader after several failed attempts. It's a test of Hezbollah, the Iran-backed Shiite political party and paramilitary group, and its hold on domestic politics. Timur Azari is here to explain what's at stake in today's election.
So the leading candidate is Army Commander Joseph Aoun. He's a longtime partner of the US and other European and Arab countries. He's currently overseeing the ceasefire between Lebanon and Israel. He's seen as a sort of uncompromising figure in Lebanon, someone who has a military logic, someone who has maintained the unity of the army, and so he's not your average Lebanese politician.
If Aoun is elected, what would that mean for politics in Lebanon?
Aoun is not Hezbollah's favored candidate, but they did recently say they're not going to veto him. The balance of power has shifted in the region. I'm speaking to you from Damascus after the fall of Bashar al-Assad, who was a key ally of Hezbollah. We are speaking after Hezbollah got battered in a war with Israel and Iran's entire axis is weakened. Hezbollah needs to reconstruct in Lebanon. Its community was hit hard, thousands of buildings destroyed, thousands of people killed. To do that, they need international consensus. They need support from outside. And at this point, the international community is standing behind Joseph Aoun. That's why they might show some compromise here.
So how could this election impact the ceasefire with Israel?
What the ceasefire calls for is for military infrastructure in the area to be dismantled so that Lebanese security forces are the only forces there. If Joseph Aoun becomes president and he is the army commander, that means that it might give extra wind in the sails of the Lebanese army doing that and having a sustainable, long-lasting ceasefire.
In Mali, a standoff between a Canadian mining company and the military government is escalating. As the price of gold has surged in recent months, Mali and other West African nations have been applying pressure to mining companies, seeking a bigger share of their revenues. Mali has restricted gold shipments from Barrick mines, and Barrick now says it'll suspend mining operations there unless those restrictions are lifted. But as David Lewis reports from Nairobi, the relationship between Mali and Barrick could be hard to disentangle.
Well, even for a company as big as Barrick, its operations in Mali are hugely important. The Lulo Gunkoto mine in western Mali that's at the center of the talks with the government accounts for around 14% of its estimated global gold output. But the operation is also hugely important for Mali as well. Barrick employs around 8,000 people in the country, nearly all of whom are Malians. Over the years, the company claims to have contributed over $9 billion to the Malian economy. An investor as big as this is critical for an economy like Mali's, which has struggled during years of war against Islamist militants and sanctions imposed on the country since the 2020 coup.
Mali has issued an arrest warrant for Barrick's CEO, Mark Bristow, so relations have really deteriorated.
Yes, the arrest warrant against Barrick's CEO, Mark Bristow, is extreme, but the junta has already detained Malian executives working for Barrick in the country, and they've also detained the foreign CEO of another mining company while he was visiting. But more broadly, it's part of a trend in the region, which includes Burkina Faso and Niger, which are also run by military governments, to try to get more for the minerals that are dug up from these countries as the prices of, in particular, gold and uranium are high.
What's Mali saying about Barrick's pledge to cease operations?
Mali is maintaining that this is a process that's just aimed at leveling the playing field, making sure that the government gets its own fair share from its own resources. And a Malian government source that we've spoken to on background did say basically that the mining code seeks to address the inequalities without killing the industry. For its part, Barrick submitted an arbitration request to try and settle the dispute. But sources say that there are talks going on behind the scenes as both the company and the government do want to try and find a solution.
And if you're interested in gold and its surging price on financial markets, check out this week's episode of Reuters Econ World. It's all about the precious metal, and it's available on the Reuters app or wherever you get your podcasts.
To stay ahead in fast-moving markets, you need to transform quality data into
one that I think
tailored,
is much
practical,
harder,
and
right?
valuable
Canada's
intelligence.
not going to become the 51st state, but there's not a lot of concessions they can give that allows Trump to back down and sort of declare victory. So that's the tricky one for sure.
But you have to wonder then, what does this mean for the configuration of alliances? If you're talking about invading Greenland, and of course Trump also talking about pulling the US out of NATO, I mean, is it just a case of just sort of blow everything up? But this is someone who essentially wanted to be a peacemaker. When you look at what he wants to do in the Middle East, what he wants to do with Russia and Ukraine, this seems to fly in the face of that while still trying to benefit US interests. I'm not sure how much of an appetite there's going to be for this, Rick.
Well, when Trump says America first, in a way, he also means America alone. And he considers the United States to be the senior partner in all of the alliances, and he's not wrong about that. I mean, it's clear, without a doubt, the United States is the senior partner in NATO. And during his first term, Trump highlighted what is a legitimate issue, which is that many European countries were not living up to their pledge to spend at least 2% of their budget on defense. And Trump drew attention to that, and some of those countries actually started spending more on defense. And then Russia invaded Ukraine in 2022, and that has kind of changed everything. We also have a hugely important economic alliance here in the United States. It's now the USMCA, the United States, Mexico, and Canada. Trump does want something from Mexico and Canada. I mean, it's getting muddled exactly what he wants from these countries. But, I mean, we know that a core principle is Trump wants more production and more manufacturing in the United States, which means he wants fewer imports from elsewhere. By the way, most economists say it's just not going to work the way Trump wants it to. But he is obviously, once again, he has said one of the first things he might do is put a 25% tariff on imports from Mexico and from Canada. That would be an economic disaster probably very quickly if that happens, so it probably won't. But Trump wants something in return. From Mexico, we know that he wants help with migration, more help stopping undocumented migrants coming across the border. And Canada, again, a little more puzzling, but there are some migrants who do come from Canada. I mean, not very many. And also, Trump has raised fentanyl. He wants everybody, Mexico, Canada, and China, to help interdict fentanyl shipments to the United States. I mean, on that one, I would point out if fentanyl stops coming into the United States, that's not going to reduce demand for opioids in the United States. That's the core problem. And the market, including the black market, will probably figure out how to meet that demand. But Trump is tackling the supply side.
It's very hard to know where to go from there. I mean, obviously, he said he's going to do a lot of these things on day one. I know we've talked about some of this before. What actually needs to happen on day one, Ben? What are you hearing, even in terms of sort of the appetite for what Trump is able to do on day one?
Yeah. Well, yeah. So there's definitely going to be a lot on day one, and Trump has already signaled a lot of what it's going to be. The big one, in the sort of the broader sense, is going to be immigration. Trump was on Capitol Hill this week, and Stephen Miller gave a whole presentation to Senate Republicans about the immigration day one stuff, reinstating the Remain in Mexico policy, things like that. So that's going to be, I think, in terms of the overall media, the larger headline. The tariff one is going to be some sort of action on day one, but the question is kind of what specific methods. I wrote a whole story on this I won't bore people, get in the weeds, but the one thing to remember is the International Economic Powers Act of 1977. That's the kind of big option Trump could go in. That allows the biggest changes and the quickest implementation. There's some that think he could announce it on day one and it could be in place on day two, literally that fast. Other options, Section 301, Section 232 tariffs, take longer, and it's a whole review process and are a little bit lower. So he's definitely going to kind of go big on tariffs at the beginning. The question we still don't know, and I think even in Trump's camp they don't know, do they try to actually have it go into place quickly or in any form, or is it sort of we're announcing it, it's going to be in place later in this year, which
इस क्रूड ऑयल बाइंग का टारगेट भी हो गया है, बायर्स भी निकल जाना, यहाँ पर थोड़ा बहुत रुक सकता है प्राइस, ठीक है। मुझे अब साइडवेज ही लग रहा है इस रेंज पे, नॉर्मली साइडवेज जाना चाहिए। दो पॉसिबिलिटी, या तो नीचे आ सकता है या फिर थोड़ा सा इसी साइड रेंज पे चला जाए। यहाँ पर एक एफईजी है दैट विल एक्ट लाइक ए रेजिस्टेंस। ठीक है, बाकी बीच वाले लेवल को अब रिमूव कर सकते हैं, इसकी ज़रूरत नहीं है। कि नेचुरल गैस भी देखोगे तो लगता है वापस चल जाएगा 2 आवर टाइम फ्रेम पे, वही जो ऑल टाइम हाई बना है यहाँ पर रिसेंट वाला 354.5, वहीं पर एक रेजिस्टेंस बना के बैठा है। एफयूजी बड़ा इंपॉर्टेंट है, अगर निकल गया क्रूड इसके ऊपर तो वापस डे हाई आ जाएगा, नहीं तो यहीं से रिजेक्शन मिलता है तो डे लो मतलब अभी का लो 6516। नेचुरल गैस ब्रेकआउट करेगा, लगता है नीचे आने की मूड नहीं है। हाँ शायद ऊपर ही जाए। टू आवर टाइम फ्रेम के अकॉर्डिंग यही रेजिस्टेंस है, बाकी किसी और टाइम फ्रेम पे तो कोई रेजिस्टेंस बना ही नहीं है 355 के अराउंड। बाकी मेरे अकॉर्डिंग मत ट्रेड करना है यहाँ पर, अभी ब्रेकआउट रीटेस्ट पे कोई नया लेवल बन जाता है तो देखेंगे, नहीं तो रहने दो।
expectations for the economy. By and large, they're not giving us a lot of detail on, what exactly they think Trump is going to implement. Overall, they're anticipating that these tariffs are going to hit sometime in the near future, and the vast majority of the people who are mentioning this expect them to hit in their pocketbooks. They're expecting those higher prices, that the cost of tariffs are going to be passed on to consumers.
So when the conversations that you're having with people about tariffs, how soon are they expecting to see this impacting the prices that they're looking at?
It's really hard to say, and I think there's not a lot of agreement. I mean, I think, or there's just a lot of uncertainty. We don't know when these tariffs are going to be implemented. So there's one thing we've been tracking for quite some time, which is the share of people who say now is a good time to buy durables because the prices are going to just go up next year, so you better buy them now. And we saw a surge of people mentioning that motivation for buying now in December. And interestingly, when you look back to 2016, when Trump was elected at that time, he also campaigned on tariffs and and right after the election, we also had a surge of consumers at that time saying, buy now, avoid future price increases. At that time, it took about 2 years for the tariff hikes to go in. And when the tariffs did not actually hit on day one, we had fewer people saying buy now. But of course, when tariffs hit in 2018, everyone again was worried about prices going up. And will it take him 2 years? Is this merely a negotiating ploy and he's not actually planning on hiking tariffs? I think consumers aren't really sure.
We're not sure either. So the way I think about this is I don't think people understand tariffs very well. I mean, they're somewhat arcane, and there's a lot of misinformation about tariffs. And there was one survey late at the end of 2024 asked people about tariffs, and most people in this survey, I think it might have been a Morning Consult survey, got it wrong about tariffs. So only like 30% said knew what a tariff actually is, which is it's a tax on an import that is paid by the importer, which means American businesses and consumers. A bunch of people said the foreign government pays for the tariff, or that somebody else pays for the tariff, and it wasn't even clear in that survey whether people thought tariffs would raise prices or not. So do you feel like the people in your survey understand tariffs and view them negatively, or is it not that simple?
I think it depends on the person. Among Democrats, they unambiguously believe that tariffs are going to increase prices. Republicans, they are not really concerned about tariffs at all. They're way more concerned about the persistence of high prices right now. They're less worried about prices in the future. They do expect Trump's policies overall, not tariffs specifically, to lower inflation. So we have basically people on different parts of the political spectrum who are drawing different conclusions from the policies that they anticipate. Now, what I don't know about Republicans who are not concerned about tariffs is it their belief that tariffs will not affect prices paid by consumers, or is it their beliefs that tariffs are a negotiating ploy and they're not actually going to be implemented? We don't really know at this point. We don't ask specific questions about that, but we're trying to do a bit more investigation. Notably, independents are leaning towards where the Democrats are on tariffs. Independents are consistently in the middle on basically everything that we measure, but we do have a solid share of independents who are also quite worried that tariffs will bring a resurgence in inflation.
So, Joanne, can you tell us where this all shakes out overall? My understanding is Republicans are more optimistic about the economy since Trump won. Democrats are more pessimistic, and it's kind of a wash. I mean, that the overall confidence sentiment level hasn't really changed that much, and also the sentiment level is relatively low. Am I getting that right?
That is all correct. So, I think that the partisan gap in sentiment gets a lot of attention, but it kind of obscures the main message. Overall, if a Democrat's in power, Democrats have higher sentiment, if a Republican's in power, vice versa, but they're just really rotating from one position to the other when there's a White House change. And our data have consistently shown that independents are in the middle and right at the national average. Right now, what we've seen is, over the last 2 years, we've seen an improvement in sentiment. sentiment has been on an overall upward trajectory that kind of stalled a bit in the middle of 2024. And so consumers do recognize inflation has slowed and the economy they perceive to be in a much better place than it was 2 years ago, but they don't feel like they're thriving. And that's true across the population.
And how does this wash phenomenon you're talking about, is there any changes in how that's happened historically? You mentioned this going all the way back to Reagan in certain sense. Has the sort of flip we're seeing right now similar or different than ones in the past? And what does that tell you if so?
It looks very similar. We actually only have a couple of situations where we have month-to-month data right around the election. You know, as mentioned, historically speaking, we measure partisanship, political affiliation a few times, but not every single month. What's really interesting that we're seeing right now, we have questions both on how people perceive the current situation, the current conditions, as well as what people expect for the future. And we've only seen a partisan shift in terms of the expectations for the future, how people see their personal finances right now, how they see buying conditions for durable goods right now. There's not been any sort of partisan shift. And so I think that really signals to us that it's not just people changing their minds on the drop of the bat, depending on how the election went. They're really responding to how they think economic policies are going to change under the new administration. And there happens to be a lot of disagreement on that. But they are really quite focused on the possible changes in policy that the new White House may usher in.
And Joanne, I know we're tight on time here. I do want to ask, because you've mentioned some of the new ways and different ways that you've been tracking some of this consumer data. Are there any changes that the survey is going to implement with the incoming Trump administration to really get a more sort of nuanced take on how the consumer is feeling?
We have been running the surveys of consumers here at the University of Michigan since 1946, and so we have continuously over time we field new questions from time to time just to make sure that we can really address the current events of the day. So right now we are collecting additional data to find out how much of an impact people actually think tariffs are going to have on the economy, so we can say a little bit more in the coming months. Beyond just tracking how many people are spontaneously telling us about it.
I appreciate you taking the time for joining us. Joanne Shu there. Thank you so much.
Thank you, Joanne.
Thanks, Bud.
Thanks for having me.
Well, that does it for this episode of Capital Gains. A big thank you to Joanne Shu and, of course, to Rick and Ben for this episode of Capital Gains. You can find us where you find all good podcasts. And, of course, be sure to keep tracking our coverage here on Yahoo Finance. That does it for us this time. We'll see you next time on Yahoo Finance.
Bye, people.
Bye, everybody.
When you want it with Bloomberg News Now, I'm Amy Morris. President-elect Donald Trump was formally sentenced in his hush money case, but as expected, the judge declined to impose any punishment. The outcome cements Trump's conviction, but it also frees him to return to the White House unencumbered by the threat of a jail term or a fine. Trump himself spoke during the hearing.
The top legal scholars and legal pundits in this country, they all said this is a case that should have never been brought. It's an injustice of justice.
Judge Juan Merchan had indicated he will impose a sentence of unconditional discharge, meaning that Trump will not serve time nor probation, but will become the first person convicted of a felony to assume the presidency. It's been no secret President-elect Trump plans to impose massive new tariffs when he is sworn into office in about 10 days. Some are questioning that decision, though, including Nobel laureate in economics Paul Krugman.
Everything is kind of coming up roses. It's soft landing everywhere. And yet he's preparing, or claims he's preparing, to go on this trade war against everybody. And the question really is why? What is it? Why do you want to do something so disruptive when you're inheriting an economy that is really looking pretty good?
Economist Paul Krugman. It is a big upside surprise for the final U.S. jobs report of the year. Bloomberg's Michael McKee has December non-farm payrolls.
Change in non-farm payrolls, 256,000. That doesn't suggest that there's weakness in the economy, nor does the unemployment rate number, down to 4.1% from 4.2%.
Bloomberg's Mike McKee. Chicago Fed President Austin Goolsbee says this indicates the labor market is stabilizing at full employment, not overheating. Goolsbee predicts interest rates will be lower in 12 to 18 months if inflation does not increase. He tells CNBC the Fed should lower rates to a neutral level if inflation stays around 2% and employment remains stable. That strong jobs report left markets in the dust as traders slashed their bets that the Fed will cut rates anytime in the next 6 months. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 1.6%. NASDAQ down almost 2%. The Dow down 1.5%. The Russell 2000 index down 2.4%. The 10-year Treasury yield at 4.74% and the 2-year yield at 4.36%. 3 days after the fire began raging in the Pacific Palisades of Los Angeles, only 8% has now been contained. Residents are still required to stay away. For some perspective, Pacific Palisades is bigger than Manhattan. But it's not the only fire burning in L.A., and at least 180,000 people remain under evacuation orders. Officials estimate at least 10,000 structures have been damaged or destroyed. FEMA Administrator Deanne Criswell says the federal government is committed to helping communities rebuild.
For something as catastrophic as what I have seen so far here across Los Angeles, we know that this recovery is going to be complicated. But it is doable when we all come together with the city, the state, the federal government, our nonprofit partners.
California's Department of Insurance issued a 1-year moratorium on homeowners insurance non-renewals and cancellations in fire-ravaged areas around L.A. The moratorium covers policyholders for 1 year from January 7th. The U.S. Supreme Court right now hearing TikTok's challenge to a law that would ban the platform if it's not sold by its Chinese parent company on an expedited basis. TikTok's lawyers argue the platform is constitutionally protected speech. The court scheduled arguments for today to consider the law before it takes effect January 19th. The U.S. has imposed new sanctions on Russia's oil industry, targeting 2 firms that handle more than 25% of Russia's seaborne oil exports, as well as insurers and traders linked to hundreds of cargoes. The sanctions aim to disrupt Russia's oil exports and supply chain and could cost Russia billions of dollars each month, making it harder for President Putin to finance the invasion of Ukraine. President-elect Trump says a meeting is being set up with Putin after he takes office. Trump mentioned it in a response to a reporter's question at Mar-a-Lago. Bloomberg's Rosalind Matheson says he didn't get more specific than that.
We don't know whether that's a phone call. We don't know whether it's an in-person meeting. He was saying within 24 hours. Now he's saying maybe within 6 months to bring the war in Ukraine, Russia's war in Ukraine, to a close.
Bloomberg's Roz Matheson. That's news when you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Not everybody likes talking about money.
Available. We should be able to make that facility available to a veteran to support that. And what we're learning is that it's there, it exists. They just have to be able to understand and utilize that as benefits.
Yeah, and I think
not even benefit. I'm sorry, the ability to care for them.
No doubt. Yeah, and I think that's what we'll see in the future, like these more public-private partnerships. And you know, when you have this face-to-face initiative, it's led by obviously Humana, USAA, Reach Resilience. I think it's giving people hope that over the 200 partners, they're saying, hey, we want to partner with the government when possible, but let's get after, as all Americans, let's not have a whole of government approach, but a whole of nation approach.
Yeah, I mean, and then so many of the things that we talk about, and all of our guests talk about, it's like, how do we know the government on its own can't solve the problem. We also have to get an engaged citizenry in the citizenship, and then we have to find our purpose as we're doing that. So we're learning all these things, but I think what it really comes down to is like, some of the benefits and some of the programs are working. We're starting to slow things down. And those areas that are working really well are ones that have like supportive citizens and support of the private sector that are helping solve these bigger problems, because it's the only way it scales.
Joining us today is an investment management executive whose journey has taken him from West Point to Cornell to his current role as an advisor at Secor Asset Management. Please welcome Andrew Bang. Andrew, welcome to Warrior Money.
Thank you, Patrick. Appreciate it. Lovely to be here today.
Yeah. Well, listen, we're here at our headquarters here in New York City, and we always lead off our show with the bottom line up front. So bottom line up front, what advice would you give the transitioning veterans who want to go into financial services here in New York City?
Yeah, Patrick, thanks for asking that question, because indeed that is a very important question to transitioning military veterans. You know, it is important, I think, during this transition to to find out about yourself and the opportunities that's ahead of you. In particular, in finance, I think there's an impression that, oh, hey, I want to be an investment banker so I can make some money, or I want to be a hedge fund manager. Well, absolutely, but there's quite a bit of opportunities ahead of you in finance, whether it's investment management, whether it's investment banking, whether it's in technology in the world of finance, whether it's investor relations. And so for those of you transitioning from the military, I would highly suggest that you talk to people, ask other veterans who are in that space, get advice, find out about investment management, finance, accounting, the various opportunities that's afforded to those transitioning veterans in finance. And so I certainly would encourage that, having that conversation, finding out what you would like to do. And it may not be a hedge fund manager or an investment banker. It may be on the technology side, making things happen, or perhaps even on the operations side. And there are lots of asset classes and lots of functions within the world of finance. And so I encourage you to educate yourself and find out what you have an interest in. And from an education standpoint, also higher education, whether it's an MBA, CFA certifications, and other credentials might be helpful.
Yeah, and Andrew, we're going to get there. I think, so Dan and I, when we advise, transitioning veterans, we say two things. First, plan your work and work your plan. And what you mentioned, like your network. Your network is your net worth, right? So utilizing force multipliers like LinkedIn and reaching out for informational interviews, for a 10-minute, 15-minute Zoom call to figure out before you land there. So how did you, go to Secor Asset Management? How was that process, and what do you do for them?
Sure. So, when I transitioned from the military, by luck, I ended up in investment banking, started out at a Swiss bank, UBS back then, and then transitioned to private equity with GE Capital's private equity group, and then into GE Asset Management Pension Group. And so from that journey, I was able to start my own investment management firm called Drexel Hamilton Investment Partners, and launched a hedge fund and 6 mutual funds. And upon transitioning from Drexel Hamilton Investment Partners, I ended up at Secor Asset Management. Secor Asset Management is a strategic investment advisor to large corporate pensions, foundation endowments, and insurance companies. And what we do is provide investment advisory, consultancy, as well as high level, as well as a specific manager selection, asset allocation, as well as certainly solutions for the institutional clients that we work with. And we oversee and advise over $30 billion of our institutional client assets. And that's, what I've, over the years, with my experience, have ended up at Secor.
It's interesting you say that. We had Admiral Craven in your chair, one of our first episodes, and he talked about transitioning purpose from the military life and into his business life, and how you have to shift your mindset on the mission. So I hear you say what you do at Secor, and I also hear that you're working with public pension institutions and other organizations that have a real mission-driven, purpose-driven purpose behind the work that they do. I'd love to hear a little bit more about how you think about transitioning purpose from the military side into the work that you're doing right now, and how you find that purpose there.
Yeah, absolutely. So Secor advises pension clients primarily, certainly other large institutional clients. But, to your point about having that purpose, right? What we do, we have a fiduciary responsibility to our clients and to the pensioners of these organizations. And so what we do, we look at from a long-term investing. We're not looking at taking the ups and in the stock market, a short-term investing and trading. We are looking at liabilities that's 10, 20, 30 years out. And so when folks work for a company, a large organization, and from a pension standpoint, we ensure, we certainly endeavor, perhaps is a better word, to make sure that their pension benefits are available when they do retire at whatever that point may be.
But how about you as a soldier? You know, you and I served in Germany in the 90s, but you know, you got out. Did you leverage a GI Bill to go to Cornell, or how did you use the benefits you earned?
Yeah, and so unfortunately, I didn't qualify for that GI Bill. Where this is something that certainly post 9/11 service members have been able to take the benefit from. I actually worked. And took out a loan.
The old-fashioned way.
So do we. Don't apply to us neither.
The old-fashioned way.
Right. And I applied to the various MBA programs, and fortunately, I was accepted into Cornell, and I attended Cornell University for the MBA program. And so, yeah, certainly, again, my other point earlier was like education. Learn and that was a great way for me to transition. Certainly having the fundamentals from West Point in terms of my Bachelor of Science was great. Having the foundations, but I also realized that there are gaps. Right. Unfortunately, at West Point, there's no classes on mutual funds or investment banking or accounting.
Yeah.
So I was able to, attend and get my MBA and fill in some of those holes. Serving our country. And it is always about learning, education, right? Whether it's book learning or actual on-the-job training, where those are the things that I've taken to myself and over my transition to the civilian career, where always learning about the markets, always learning about the geopolitics of what's going on in the world, learning about different products, right? As well as being able to teach that, right? As a senior, whether senior enlisted or as officers in the military, in the Army, you're also teaching your soldiers and training with all of them. So it is about education, training, and constantly being able to improve yourself and your team around you to be a more effective team in accomplishing your goal.
Bring others along with you.
Yeah, they say when you train, when you educate others, you learn twice.
Yeah.
So we're going to dive into that when we get back after the break. So we'll see you in just a second.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
President-elect Trump has been speaking during the course of our conversation. How imperative is it that you go to Mar-a-Lago and meet with him if NVIDIA is America's leading AI company? And will you?
I'd be delighted to go see him.
Have you been invited?
Not yet, but I would be delighted to go see him and congratulate him and do everything we can to help this administration succeed.
A lot of what you outlined on stage last night in the realm of physical AI, I saw Xpeng, for example, in the autonomous driving context. That's happening in China. Like, they are doing a lot on robotics. So I'm going to ask you about tariffs. It's likely this coming administration will be as restrictive on technology export, and tariffs will be a function. How have you prepared for that, Jensen?
Whatever the administration ultimately decides, we'll give them as much insight as we can from our perspective, and I'm sure that the administration will make the right moves. That's in the best interest of our country.
As observability
number. The survey's in the kind of 160, the whisper number's in the 180. Bloomberg Economics has got it way higher than that. If you get an upside surprise, how do markets react?
Yeah, good morning, Guy. I think if you get an upside surprise, markets would be pretty upset because, as we've already seen this year, the market is worried about the Fed keeping interest rates higher now for longer, ceasing those cuts, maybe even needing to raise interest rates again towards the second half of the year if inflation isn't brought under control and if the labour market continues to perform strongly along with the rest of the US economy. So the consensus number among analysts, 165, but with that whisper number 20K higher there or thereabouts, it sort of says to me, you know, if we get a number that's in line with consensus and the market will take that as a relative relief that it's not stronger, that it doesn't cause more volatility in the bond market, and therefore we may get a bond rally, a little bit of a weaker dollar, and that could take some of the recent pressure we've seen out of markets. If we get that 185 number or even higher, then potentially we see another sell-off, we see another lurch in yields towards that 5% number we've been getting closer to recently. It raises more concerns that the US economy, the super strength of the US economy just keeps on going. That lifts up the dollar and puts a lot of pressure again on global markets all around the rest of the world.
Paul, if we get to 5% on the U.S. 10-year, does that incentivize buying? Are there certain levels now on the way to 10% to 5% that, again, just basically bring in flows into the bond market?
I think that that's a really key thing. Some of the investors that we've been speaking to this week, Kriti, have been talking about 5% looking very attractive. And we've obviously seen a lot more demand in the corporate space for those higher yields that you can get on those bonds. I think part of that is the idea that actually corporates have such strong balance sheets at the moment. They're relatively attractive compared with governments because of the welter of supply that we're getting through on the government side and those inflation risks as well. You know, we've seen it particularly in the gilt market, but also we're seeing it even in something as safe as the US Treasury market.
And Paul, China seems to have all the opposite problems to everywhere else. The PBOC halting bond buying to defend the yuan as the gloom worsens. Does it matter?
Yeah, Lizzie, absolutely true. So China is in that kind of disinflationary spiral we've been talking about this week, a real funk, and bond yields just continue to press lower as a result. People cramping in there because they don't think that inflation is going to roar back in China anytime soon. They think that the PBOC is going to have to continue to cut interest rates, and they think that therefore bonds are a better store of value than trying to think about putting your money in equities, for example, or in property or something like that. Therefore, the PBOC didn't really need to be buying bonds in the first place. It hasn't been adding a significant amount in any case, and so their lack of buying now really isn't going to make a great difference.
Are the bond vigilantes back? And if so, what's changed? Why are they back?
They're back because of three issues, as you know, John. One is consistently stronger than expected U.S. economic data. Two is the understanding that inflation will be sticky. And three is there's renewed focus now on debt and deficits. Put these three things together, the U.S. leads a global bond sell-off, and then what that sell-off does, it picks vulnerabilities in the system and weaknesses. And it wouldn't have been good afternoon Britain, it would have just been afternoon Britain, because they are facing the emerging market combination of higher yields and lower currency, which is really bad news for them right now.
How much of that is in their own control?
Some of it is in their control, and it is a golden opportunity for this government to redouble or restart its economic approach, which has lost its way a little bit in the last few months. But they will be looking at the U.S. jobs report and critically the CPI coming up. You know, it's not so long ago, Lisa, that we used to say, okay, forget about CPI, inflation's under control, all that matters is the jobs report. Now suddenly we've realized that both are in play, inflation and the employment part.
When you talk about bond vigilantes and how they find the most vulnerable spots, how long is it before they find the United States particularly vulnerable? And this sort of goes to the heart of the question that Torsten Slok raised, which is it is highly unusual to see the long end yield rise by 100 basis points after a series of 100 basis points of rate cuts from the Federal Reserve. Do you have a sense that maybe the U.S. is one of those vulnerable spots at this point?
In relative terms, no. You know, you've heard me say over and over again, the good, the bad, and the ugly. The good is the US, the bad is China, and the UK is Europe, including the UK. The ugly is Europe, including the UK. So US, China, Europe, including the UK. They'll focus on the ugly first, and then they'll creep up. The US has a particularly good spot because higher yields here are associated with stronger growth. That is not the case in Europe.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks slide ahead of key US jobs data that could shape the outlook for interest rates. The yuan steadies after China's central bank makes a surprise move to stop buying government bonds. 180,000 people have now been forced from their homes in Los Angeles, with firefighters battling to control new blazes. President Biden promises the government will cover the state's costs. And Donald Trump says a meeting with Russian President Vladimir Putin is being set up as the president-elect restates his call to end the war in Ukraine. Happy Friday. So after the tumult that we've seen across the global bond markets, the focus will be, of course, on the jobs data out of the US later today, with an estimate of around 165,000 for the month of December, unemployment at 4.2%. We'll see what the numbers are, of course, later today, and how volatile the markets are and sensitive they are to that data point, whether it adjusts the views. Fed officials, again, reiterating yesterday that they want to see caution in terms of next steps for this Federal Reserve, given the inflation story unfolding stateside. European futures currently flat. The US reopens, of course, after a closed day yesterday. FTSE 100 futures also flat. The focus continues to be on the build-out, of course, of concerns in the UK with stagnant growth, that build-out and the debt load, of course, and what could happen in terms of Rachel Reeves and the Chancellor come next week. S&P futures then, with the US reopening, currently flat. NASDAQ 100 futures also flat. We're looking for that catalyst. There's a bit of a holding pattern, it seems, as we wait for the non-farm payrolls data later today. Let's flip the board and have a look cross-asset then. In terms of the Treasury market, you have seen a bit of calming since the beginning of the week, when you saw, of course, yields continue to edge high. Currently at 4.69 on the benchmark US 10-year. The pound remains under pressure, down 0.2%, falling yesterday to the lowest level in at least a year, 122 right now on sterling. Brent 77.32, currently up 0.5%, set for 3 straight weeks of gains for oil. We'll unpack that story for you in this hour. And gold at 2,675 per troy ounce. The yellow metal getting a lift, up 0.3%. The jobs data then, later today, expected to showcase a healthy labour market, with non-farm payrolls, as I mentioned, probably rising by 165,000 last month. The data likely to support the Fed's focus back to inflation, with economists seeing a pause for the Fed this month. Officials such as Michelle Bowman, Patrick Harker point to a slower approach to easing this year.
I still see us on a downward policy rate path. Looking at everything before me now, I'm not about to walk off this path or turn around. But the exact speed I continue to go along this path will be fully dependent upon the incoming data. We can stay where we are for a little bit, probably not long, but we'll see.
Okay, let's bring in our market watcher, Bloomberg's Valerie Teitel, of course, for an assessment of what we've been hearing from Fed officials and then a preview of non-farm payrolls. Val, let's start there then with Harker. To what extent is his view? He still expects to be cutting this year, maybe at a slower rate. Does that align what we've been hearing from other officials?
Frankly, no, Tom. We heard from one of the most hawkish at the FOMC, Michelle Bowman, yesterday. She called December's cut the final step in the recalibration phase, leading many of us to believe that she is perhaps that dot on the dot plot reflecting no more rate cuts this year. She also blamed inflation for the reason as why we're seeing this rise in Treasury market yields. And it was those concerns that backed up her argument why there should be no further cuts for the remainder of this year. And also, very importantly, she mentioned that she backed looser bank capital rules. This is important, Tom, because she is touted to replace Vice Chair Michael Barr as the vice chair of supervision. So she will be very much in charge of taking forward where those bank capital rules go. And speaking of the regulatory musical chairs that we have in Washington, we've heard confirmation that Scott Bessent's Treasury confirmation hearing for Treasury Secretary will take place next week on January 16th. Will be very interesting to see what he thinks is driving this move higher in yields. But before we get to that, Friday, it's non-farm payroll day. Watch out for a blowout number. A very interesting piece from Anna Wong at Bloomberg Economics, saying the high-frequency data, especially when it comes to the home base data, shows that there is a risk for a higher print. Bloomberg Economics is nearly 100K above the consensus, which is currently at 165.
What is more important for these markets today, Val? Is it non-farm payrolls or is it the gilt market?
There is a risk out there that the non-farm payroll print could be very much overshadowed if we see another chaotic day in the gilt market. Interesting to know, though, that yesterday was, frankly, a day of calm after opening up quite on a hairy basis. Gilt yields spiked 11 basis points at the open, but ended the session nearly unchanged. However, there is some very interesting stuff going on in the FX market, Tom. A lot of bank dealing desks out there reporting that there are hedge funds, there are leverage accounts really piling into bearish downside puts when it comes to the cable currency. If we look at risk reversals within the currency pair, they're the most bearish in over 2 years.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. With the setup ahead of non-farm payrolls later today, the gilt markets continue to be in focus. Reopening, of course, at 8 a.m. UK time. To China now, where the central bank is to suspend buying government bonds as yields fall to all-time lows and traders bet on weak economic growth. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, how are investors reacting to this news? Came as something of a surprise. They are going to be suspending the purchase of bonds.
Yeah, investors not too impressed. They've taken the bond market down a few pegs today in China. And it's dangerous territory. Central banks, as a matter of course, are heavily involved in their bond markets and their money markets on a daily basis. And traders expect that transparency to continue. They expect it to be part of the general performance of the market. So when the central bank suddenly says, oh, we're not going to be buying any more bonds for a while, that takes everyone by surprise. And it certainly isn't a good message to foreigners as well. China's been making a big deal about trying to get foreign investors back into their assets, especially the bond market and the equity market as well. This is not the kind of signal they want to see. They want to see a market that behaves according to the fundamentals. Fundamentals say yields should go lower. That's frustrating for the Chinese central bank because it's also pushing the yuan weaker as well. You can't have everything. And when you start meddling like this, it is dangerous territory, and the investors can see that. This is probably only going to be a temporary measure, but it is something that they will have to think about very carefully whether they repeat it or not, because it's not being taken very well in the short term. There is going to be a briefing next week. Central bank and the other regulatory bodies are going to be speaking on Tuesday. Hopefully they'll clear things up. But these kind of interference in the market, as we've seen with the equity market as well, they tend to put off foreign money, and that's not what China wants.
Okay, MLive strategist Mark Cranford, excellent in terms of the context around this risky move, as he characterises, around the meddling by the PBOC deciding to suspend the purchase of government bonds. Meanwhile, on the equity markets of China, by the way, the MSCI China index closing in to a bear market with a drop now of about 20% since October. To the US, President-elect Donald Trump says a meeting with Russian President Vladimir Putin is being set up. For more, let's bring in our East Asia government editor, John Herskowitz. John, significant if this is indeed happening. How do we characterise this?
Well, it's one of the initiatives that Trump has really wanted to do. We still don't really know a lot about what is going on, or if something has been set up at all. Trump said that if a meeting were to come, it would come after the inauguration. There's no set date, no set time, just this announcement that he's looking to have the meeting. And, you know, they met previously when Trump was previously president, and there's been a little bit of an opaque nature about some of these meetings. At their first meeting in Germany, the New York Times reported that Trump took the notes of the interpreter and didn't allow the interpreter to speak on anything that happened in the meeting. And there's been this closed nature of the meetings, and information has been really closely controlled.
What does it mean, and where does it leave Ukraine?
Yeah, Ukraine is definitely a key part of this. On the campaign trail, Trump pledged to end the war in Ukraine in 24 hours since becoming president. He's backed off a little bit in recent days, saying it could take several months. But there's a worry from President Zelensky that Trump will seek a deal that cedes a large part of his country to Russia. I think currently Russia holds about nearly 20% of Ukraine territory. And while this is going on as a concern for Ukraine, the Biden administration is sticking by Ukraine. It was part of a meeting in Germany of allied ministers to supply military aid to Ukraine. There was a mention of $500 million in aid going to Ukraine. So the Biden administration wants to keep the aid going. Zelensky is worried about what may come forward. And there's some indication that by Trump pushing back the date for some sort of agreement, this could give Zelensky some breathing room as well.
Okay, Bloomberg's East Asia government editor John Herskowitz on these comments from incoming President Trump that he is and the team there are underway in terms of working towards a meeting in some form with Russia's leading, what it could mean for Ukraine. Now to Los Angeles, where the deadly fire has forced now almost 180,000 people from their homes as firefighters struggle to bring the blazes under control. President Biden, meanwhile, saying the US government will cover 100% of the costs of the California wildfires for 180 days, calling the devastation catastrophic.
So today I'm announcing that the federal government will cover 100% of the cost for 180 days. This is going to pay for things like debris and hazard material removal, temporary shelters, first responders' salaries, and all necessary measures to protect life and property.
Okay, for more, let's bring in Bloomberg's Michelle Ma in Los Angeles, who's been living and breathing and reporting on this for us. Michelle, what is the latest on the ground?
I mean, like you mentioned, the latest is about 180,000 people have been evacuated from their homes, and thousands of structures have been destroyed. Unfortunately, today we also heard of 2 deaths from the Palisades fire. And so far, at least 5 people have died since the fires started Tuesday. Now, we also heard from the LA County Sheriff's Department that they've drafted up a 12-hour curfew from 6 p.m. to 6 a.m., which they plan on implementing as soon as possible. And this is going to be in the areas impacted by the 2 biggest fires, which are the Palisades fire and the Eaton fire. And we were told that this was just to keep residents in the area safe. There is some good news. I think, the Sunset Fire, which threatened Hollywood yesterday, has been fully contained at this point, and an evacuation order for the surrounding area has since been lifted.
Where are we in quantifying the damage then and the cost of rebuild?
It's still too early to say. The fire is nowhere close to over yet. The winds are supposed to pick up again tonight. But, what we do know so far is that this is likely going to be the most costly set of fires in California history. We've seen several different estimates. I think the latest one from JP Morgan put the potential cost for insurers at over $20 billion, and that is double their estimate from just a day prior. So, the analyst note also warned that if the losses continue to rise and if the fires aren't controlled, that these losses could continue to rise. So the Palisades fire is only 6% contained right now, and the Eaton fire is 0% contained. And like I mentioned, we expect heavy winds and extremely dry conditions to continue. And of course, all of this adds pressure to the California insurance market, which has already been battered. 7 out of the 12 biggest home insurers have already limited their coverage in the state over the last 2 years. And that's partly because of the increased fire risk driven by climate change.
OK, Bloomberg's Michelle Ma on the ground for us in Los Angeles on the continued risks, of course, around the fires that continue to rage and the cost that is being accounted for insurers and the state more broadly. Thank you, Michelle. Coming up, with the UK becoming the focus of a global bond sell-off, Chancellor Rachel Reeves is under pressure to deliver new spending cuts or tax rises. We discuss the latest next as she heads to Beijing. This is Bloomberg. Welcome back. BlackRock says it is leaving one of the world's biggest climate investor groups after being targeted by Republican politicians. The money manager, which oversees more than $11 trillion, says membership of the Net Zero Asset Managers Initiative caused confusion regarding its practices. BlackRock was among asset managers facing a Texas lawsuit alleging breaches of antitrust laws because of pro-climate strategies that suppress coal production. And this year marks the halfway point in a crucial decade for climate action as the window to limit global warming to 1.5 degrees Celsius closes. Is the world ready to say goodbye to coal, the dirtiest fossil fuel? The move by BlackRock suggests no, not yet. Joining me now is Yumi Kim, an associate in Bloomberg NEF's Asia Pacific Power Markets team. Thanks for joining us. Could 2025 then be the year the sun finally sets on coal? We had a reminder that BlackRock and many asset managers are now reluctant to walk away entirely from these fossil fuels.
Yes, we're expecting coal demand to have marginally increased in 2024. And we think that in 2025 and over the next few years, coal demand will largely stagnate. The peak demand for coal looks to be almost here, but a rapid decline from that point is unlikely. In advanced economies, coal demand has been shrinking from coal phase-out plans and cheaper gas in the US. But in emerging economies, mostly in Asia, coal demand is still very strong. China is dependent on coal power even with its growing renewables capacity. But to be on track for net zero emissions globally, coal consumption needs to fall immediately from today. But even then, we don't see coal disappearing completely as it will be paired with carbon capture for power generation and remains essential for industries like steel and cement.
Yeah, the front page of the Financial Times this morning, the world breaches 1.5 degrees global warming target for the first time in 2024. Talk to us about that China piece of the story then. It's clearly a leader, the nation, in renewables, and the globe is increasingly reliant on the renewable infrastructure of China. But why is that country still burning so much coal?
Yes, China is the biggest driver for coal demand globally. And while its renewable capacity is growing and taking up a bigger share of the power mix, it is still outpaced by the growth in the country's power demand. And such gap is met by coal in China from domestic mines and international trade partners. Coal is also needed to smooth out any volatility in renewable generation, such as hydro, wind, and solar. And these technologies are highly dependent on weather, which can bring volatility to China's power supply.
What does all of this mean then for prices? If we expect demand to remain strong for coal, what is the outlook for prices this year?
Yes, prices have been falling since the beginning of 2023, but it still remains elevated compared with the pre-energy crisis era due to sustained demand. Well, higher LNG prices have been keeping the utilities from switching to burning gas, and that's supporting the prices for thermal coal. But falling prices last year were enough for buyers in Asia to stockpile coal at record high levels. And we're expecting prices to remain stable in the short term as inventories in China and India are at healthy levels.
OK, Yumi Kim, associate at Bloomberg NEF, on the deep dive analysis around the outlook for coal at a time when we breach 1.5 degrees for the first time in 2024. That is the front page of the FT this morning. Yumi, thank you very much indeed for the analysis. If you'd like to hear more from BNEF's analysts, download the Switched On podcast on Apple, Spotify, or wherever you get your podcasts. And later this hour, we are going to be speaking with Francisco Blanche from Bank of America Global Research on the outlook for commodities. Stay with us for that conversation. The focus on gas, oil, and the outlook for gold. Coming up, with the UK becoming the focus of a global bond sell-off, Chancellor Rachel Reeves is, as we mentioned, under pressure, of course, to deliver new spending cuts or tax rises. What a debacle for the Chancellor. We discuss the latest next. This is Bloomberg.
It is normal for the price and yields of gilts to vary when there are wider movements in global financial markets, including in response to economic data. In recent months, moves in financial markets have been largely driven by data and global geopolitical events, which is to be expected as markets adjust to new information. UK gilt markets continue to function in an orderly way.
Chief Secretary to the Treasury, Darren Jones, speaking to the House of Commons about the wider market sell-off in UK assets. Of course, the argument he's making there was the same argument was being used by Liz Truss back after the mini-budget, and that wasn't given much credence by the Labour Party. UK Chancellor Rachel Reeves came into government, of course, promising higher growth, economic stability, security and stability in the public finances 6 months in, and her project is close to being in tatters as she struggles to maintain the confidence of financial markets. Let's bring in our UK correspondent Lizzie Burden, of course, for the latest. Lizzie, what a week it's been for UK assets, and a reminder, of course, of the pressure that is on Rachel Reeves. We've been hearing from Darren Jones there, responding in Parliament. Talk us through what has been happening and the Labour government's response. Is it going to be enough to assuage investors?
Well, of course, because Rachel Reeves flew to Beijing last night, it fell to Jones to defend what was going on. He described the moves as orderly. The pound's been at its lowest in over a year. That plus the rise in long-term bonds.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks slide ahead of key US jobs data. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks slide ahead of key US jobs data that could shape the outlook for interest rates. The yuan steadies after China's central bank makes a surprise move to stop buying government bonds. 180,000 people have now been forced from their homes in Los Angeles, with firefighters battling to control new blazes. President Biden promises the government will cover the state's costs. And Donald Trump says a meeting with Russian President Vladimir Putin is being set up as the president-elect restates his call to end the war in Ukraine. Happy Friday. So after the tumult that we've seen across the global bond markets, the focus will be, of course, on the jobs data out of the US later today, with an estimate of around 165,000 for the month of December, unemployment at 4.2%. We'll see what the numbers are, of course, later today, and how volatile the markets are and sensitive they are to that data point, whether it adjusts the views. Fed officials, again, reiterating yesterday that they want to see caution in terms of next steps for this Federal Reserve, given the inflation story unfolding stateside. European futures currently flat. The US reopens, of course, after a closed day yesterday. FTSE 100 futures also flat. The focus continues to be on the build-out, of course, of concerns in the UK with stagnant growth, that build-out and the debt load, of course, and what could happen in terms of Rachel Reeves and the Chancellor come next week. S&P futures then, with the US reopening, currently flat. NASDAQ 100 futures also flat. We're looking for that catalyst. There's a bit of a holding pattern, it seems, as we wait for the non-farm payrolls data later today. Let's flip the board and have a look cross-asset then. In terms of the Treasury market, you have seen a bit of calming since the beginning of the week, when you saw, of course, yields continue to edge high. Currently at 4.69 on the benchmark US 10-year. The pound remains under pressure, down 0.2%, falling yesterday to the lowest level in at least a year, 122 right now on sterling. Brent 77.32, currently up 0.5%, set for 3 straight weeks of gains for oil. We'll unpack that story for you in this hour. And gold at 2,675 per troy ounce. The yellow metal getting a lift, up 0.3%. The jobs data then, later today, expected to showcase a healthy labour market, with non-farm payrolls, as I mentioned, probably rising by 165,000 last month. The data likely to support the Fed's focus back to inflation, with economists seeing a pause for the Fed this month. Officials such as Michelle Bowman, Patrick Harker point to a slower approach to easing this year.
I still see us on a downward policy rate path. Looking at everything before me now, I'm not about to walk off this path or turn around. But the exact speed I continue to go along this path will be fully dependent upon the incoming data. We can stay where we are for a little bit, probably not long, but we'll see.
OK, let's bring in our market watcher, Bloomberg's Valerie Teitel, of course, for an assessment of what we've been hearing from Fed officials and then a preview of non-farm payrolls. Val, let's start there then with Harker. To what extent is his view? He still expects to be cutting this year, maybe at a slower rate. Does that align what we've been hearing from other officials?
Frankly, no, Tom. We heard from one of the most hawkish at the FOMC, Michelle Bowman, yesterday. She called December's cut the final step in the recalibration phase, leading many to believe that she is perhaps that dot on the dot plot reflecting no more rate cuts this year. She also blamed inflation for the reason as why we're seeing this rise in Treasury market yields. And it was those concerns that backed up her argument why there should be no further cuts for the remainder of this year. And also, very importantly, she mentioned that she backed looser bank capital rules. This is important, Tom, because she is touted to replace Vice Chair Michael Barr as the vice chair of supervision. So she will be very much in charge.